It's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
We are still seeing that investors are sitting on the sidelines of this market.
There has been a shift in sentiment, and you're starting to see some deterioration in some of the key themes.
The equity market has to climb, basically, the traditional wall of worry.
You have an equity market that broadens and rotates a little bit.
As we think about next year, we do like equities. We do like U.S. equities in particular.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks inching back to record highs with optimism fueled by ongoing resilience among U.S. consumers. All eyes turning to next week's Fed rate decision as potential Fed Chair Kevin Hassett supports that 25 basis point rate cut and some dated inflation as well as consumer sentiment data coming up. Right now, though, the focus is squarely on the M&A space, with Netflix agreeing to buy Warner Brothers for almost $83 billion.
So this is going to be historic. This is the dominant streaming service going up against, or with now, one of the revered studios out of Hollywood, which is why there's going to be a lot of concern about the regulatory steps forward and the scrutiny this is going to come under. But also, it is pretty incredible that Netflix was this dark horse candidate. No one was taking it seriously. And then in the end, they were the ones that were able to get the deal done. And how quickly. We know they were going into exclusive talks just last night, but how quickly they were able to get to the finish line.
Yeah, and the financing behind it. I think a lot of people are looking for some of the details there, given the fact that the $83 billion almost will be paid for in stock and cash read debt. And what we are getting is news this morning that Netflix has lined up a $59 billion bridge loan from banks across Wall Street, Wells Fargo, BNP, HSBC, et cetera, which would be one of the largest bridge loans in history at a time where there's huge regulatory risk for this deal.
Absolutely, which is probably why they had to put up that $5 billion that will be paid to Warner Brothers if this falls through. When you look at the bridge loan, Lisa, it is one of the biggest. Anheuser-Busch InBev obtained $75 billion of loans back in its acquisition of SAB Miller in 2015. So this is huge when you look at historical perspective.
Yeah, and going forward, this is really the backdrop for why it's such a complicated market heading into 2026. On one hand, you've got a Federal Reserve that is poised to cut rates. You have a consumer giving some mixed signals in terms of just how strong you are. And then you have capital markets that are revving up for another year of M&A, another year of relatively loose financing conditions. It is a difficult backdrop for the Fed when they meet next week, Wednesday.
Absolutely difficult backdrop. They're going to have a lot more data, but then the week after, they're going to get the most prime data they've been waiting for, which is the non-farm payrolls.
Yeah, what's up? It's Rock. Listen, I'm packing it up and bringing it out west, so get it together. Cowboy style? Yeah, cowboy style.
Cowboy.
Well, I'm packing up my game and I'ma head out west, where real women come equipped with scripts and fake breasts. Find a nest in the hills, chill like Flint. Buy an old drop top, find a spot to pimp. Then I'm a kid, rock it up and down your block, go with a bottle of scotch and watch lots of crotch. Buy a yacht with a flag saying chillin' the most, then rock that jumping down the coast. Give a toast to the sun, drink with the stars, get thrown in the mix and tossed out of bars. Sip the Tijuana, I wanna roam, find Motown, telling fools to come back home. Start an escort service for all the right reasons, and set up shop at the top of Four Seasons. Kid rockin', I'm the real McCoy, and I'm headed out west, sucker, because I wanna be a cowboy, baby, with a top left back and the sunshine shining. Cowboy, baby, West Coast chillin' with the boys. I wanna be a cowboy, baby, riding at night 'cause I sleep all day. Cowboy, baby, I can smell the beat from a mile away. I bet you'll hear my whistle blowing when my train rolls in. It goes like dust in the wind. I once was lost, but now I'm just blind. Palm trees and weeds, scab knees and rice. Get a map to the stars, find Heidi flights. And if the price is right, then I'm gonna make my bid, boy, and let California know why they call me a cowboy, baby, with a top left back and the sunshine shining. Cowboy, baby, West Coast chillin' with the boom. I wanna be a cowboy, baby, riding at night 'cause I sleep all day. Cowboy, baby, I can smell the beat from a mile away.
Sort of dovish commentary. Next year, we'll see. It all depends on who the chair is, but at the end of the day, the chair is one vote. You know, it is a committee. But
Good morning, forecasters. How you doing? Is everybody ready for Full Port Friday? All right. Let's get this trading day started.
Well, this is a reason why I think a lot of people are looking to possibly outside of the U.S. for an outperformance, right? And
Let's take a look at our news and see what we got on the docket for this morning, first of all.
In 2026, but on a risk-adjusted basis, currency-adjusted basis, maybe not the outperformer.
I'm so glad you asked that question, Lisa, given my global title.
You got Canadian unemployment and the unemployment change at 8:30. It's usually not much, but you know, it can start a trend. We don't really have any volume right now, so then we're gonna, after the Canadian unemployment, we're gonna be into the open for 9:30. Then we're gonna have a news drop at 10 o'clock. Michigan sentiment, PCE, core PCE, and consumer spending all at 10 o'clock. So 10 o'clock is going to be a busy time.
In 2026. And
then Trump is signing executive orders at 3 o'clock, so this can be something too. So we got 8:30, 9:30, 10 o'clock, and nothing that's listed until 3. So hopefully we can get our day kick-started here in a little bit. Get some volume going. We don't really have enough volume to do much of anything right now.
With some of the new AI startups that are gaining preeminence, how do you decide to play that? I mean, are you looking for who the national champs are going to be and getting behind them? Do you just try to steer clear of that kind of political
that's what we got.
interference?
No, we think that, look, this all goes back to the
So I'm going to uncenter the screens, get ready to mix it up here.
More important as we go forward, as all of these governments support their economies more. China, you know, I failed to mention, China is actually, and China Tech is one of our highest conviction ideas for next year because the government is leading more and supporting its tech industry, and that localization of chip is happening. And we think that monetization potentially around AI.
I didn't really see a lot of volume last night. I don't know anyone out there get anything going during Asia or Europe.
And applying a more lower cost model. And so I think that you have to sort of, you know, have a diversified portfolio across all of these markets, because it's not no longer that U.S. just lead and everyone else gets left behind. We think that the more boats are going to be rising.
Well, Nadia Lovell of UBS, thank you so much for being with us this morning. Nadia Lovell of UBS Global Wealth Management. And this is the reason why people were so interested in Marin and more Threads technology. The IPO over in China that surged 425% in its debut. It was chosen as a national champion. China is looking to support some of its AI incubators, and this is a prime target.
Well, remember a few months ago, the administration said, fine, NVIDIA, you can sell your H20s to China, and China said no. Sent out letters to a bunch of companies and firms, said, shrug these chips. We are going all in on our own, which is why there's been this huge debate within the administration. Do we have higher export controls, or do we get China and others addicted to our tech? That is a massive conversation and a massive debate, and they haven't truly decided just yet.
Yeah, we'll continue that conversation right now. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. National Economic Council Director Kevin Hassett said the Federal Reserve should cut interest rate at a meeting next week. Hassett expects the central bank to cut by 25 basis points and says he wants to, quote, get to a much lower rate over the long run. His comments coming as speculation grows that President Donald Trump is preparing to nominate him to lead the central bank. The European Commission fining Elon Musk's ex nearly $140 million for violating the EU's content moderation law. It claims the social network misled users with its paid-for blue-tick symbol and stonewalled researchers' access to data.
Make sure Rhythmic's open.
First fine under the EU's Digital Services Act.
Reset that.
X has 90 days to implement the changes, or it could face additional penalties. And it's official. Netflix is acquiring Warner Brothers Discovery in a deal valued at $82.7 billion. Netflix now becomes the owner of the HBO network, Warner Brothers.
If you guys are running 24 hours a day, it's a good idea to reset your Rhythmic before you start the trading day.
And that is your Bloomberg Brief. Lisa.
Thank you so much.
Just go through, close everything down, reopen it, and reconnect it.
At that tie-up between Netflix and Warner Brothers and some of the debt financing behind it, a $59 billion bridge loan from Wall Street banks as Netflix tries to get through a lot of regulatory hurdles. That's next. This is Bloomberg Surveillance.
Okay, I disconnected the prop firm, restarted Rhythmic, and I'm going to reconnect everything so I got a fresh connection for the morning in case we get an opportunity here.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
Sandwich.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
There's a lot of almost reflationary pro-cyclical tones starting to weave their way through the market's message here. And you look out to 2026, and I think it tells us that really the tone is changing from after years of all the excess liquidity being soaked up by the speculative economy. I think the excess liquidity is now being soaked up by the real economy moving forward. Very important theme for us into 26.
And into 26, that was Chris Verone of Strategas, a Baird company, talking as an increasing number of strategists get bullish on the prospect for U.S. equities right now, feeling that bullishness with futures up about 0.2%. You can see yields continuing to climb up about 2 basis points to 4.11%, and Brent is basically flat. When you take a look at natural gas prices, they have surged to the highest going back to 2022. They are higher by almost 4% this morning, with a real focus on just how much further they could go. It is snowing in Washington, D.C., so people are using their heat. Time now for the morning calls. First up, Truist raising its price target on Alphabet to $350, highlighting AI-driven efficiency gains and e-commerce momentum. Next up, Morgan Stanley upgrading MP Materials to overweight, believing it is positioned to benefit from U.S. rare earth policies. And finally, Needham initiating coverage of Oklo with a buy rating, citing its, quote, advantaged regulatory position in nuclear energy. Those shares lower by almost 4%. We do want to stick with energy. 28 Democratic California lawmakers writing a letter to the Trump administration condemning plans to boost oil drilling along the state's coastline. U.S. Interior Secretary Doug Burgum joins us now. Secretary Burgum, thank you so much for being with us. I want to start with just how important it is right now for the United States to increase energy supplies across the board, not just with drilling, but across the board in the face of the demand coming from AI.
Well, good morning, Lisa. Yes, it's absolutely essential, and this is part of the just announced national security plan that the White House has released. That security plan mentions energy 23 times. There's an entire section about energy dominance, and folks should think about energy dominance as the ability for the U.S. to sell energy to our friends and allies so they don't have
Oh, no, I never got in.
particularly those
Hey,
adversaries
Spiznik, how you doing?
funding terrorism or are funding
No, I have
actively funding war machines.
Oh, you never got out? Yeah. Well, I mean, ALPS ran all the way to $1.75, and I never got out, and it's back to $1.12. So I should. Next time it gets that high, I'll sell it. But no, I still have a sell. I have a buy-in for 3.3 cents. So it almost hit that yesterday. Yeah, so I didn't get in, but I got a buy-in. If it hits 3.3 cents, then I'll get in. And then, if it runs into the high fours, I'll get out somewhere around there. So I'll probably play that one. Now that I've been watching it a couple days,
Secretary, I'm sure you're aware WTI is under $60
I'm good with that.
a barrel. What's the impetus for
But ALPS, I got in at like 83 cents. It ran to $1.70, $1.75, and I never sold it. So next time it gets over $1.50, I'll probably sell it and wait for it to pull back. Because I'm trying to figure out the range, you know what I mean? They're not really technical stocks. You just got to kind of figure out what they range in a little bit. and just not, not fall in love with them unless they got a real plan that develops.
Was a year ago because of the
Yeah, I know. The thing is I've been getting runners lately. Now yeah, I've been getting some runners lately, so I'm willing to let things go longer than I've ever used to let them.
in terms of gaining, productivity. The shale producers now are drilling 3-mile laterals instead of 2-mile laterals, up to 4-mile laterals.
We got a little bit of a sell-off here. We do got news at 8:30. It's just Canadian, though.
Building 10-mile laterals when they're getting after the shale rock, all with the same small well pad on the surface. So, great for land management and great for energy production. And kudos to this industry. The entire shale revolution has occurred through innovation, and that innovation is going to continue. And with AI applied to that, it's going to get even better. So I see the leading companies are getting their costs down, even as demand is going up.
But Baker Hughes is talking about drilling rig activity has fallen 16% since Trump took office this year. The president loves to talk about drill, baby, drill. Do you expect that to change, those numbers to change next year?
Well, I think, again, I'd have to take a look at the numbers. When we talk about drilling activity in my home state of North Dakota, we had number of the well count was going down, but the miles of lateral productive rock could be going up.
Yeah, stonk game.
Analysts have got to make sure that they're actually keeping up with how fast this industry is.
Well, I'm resetting my rhythmic here.
We've got, again, record production occurring right now, and we expect to see records through 2026.
One area where you have seen price increases has been natural gas. Natural gas prices rising to the highest levels in the U.S. going back to 2020.
LIDR starting to look strong, isn't it?
Continue to export to places like Europe in the face of significantly higher prices here in the United States. How do you
I just wish they would drop some real good news.
Be a big exporter to places like Europe while not allowing prices
That thing will
to
run
go up so significantly in the future.
Well, again, the key is it's supply and it's infrastructure.
Yeah, I know.
We have places in the U.S. right now where
it's sitting at 273. I mean, it's just kind of coiling up,
But we've got
it's getting. I feel like it's getting bought up. You know what I'm saying? Like people are getting their
because the lack of natural gas
their base
that have been blocked into places like
position.
And when
Oh,
we think about
got a little
markets,
flutter
we're talking
there.
about AI and the capital spend going against AI, where we're an AI factory where we're actually creating and manufacturing intelligence. Those plants are going to go to the places where states have low electricity prices, and policies are setting price, not just markets. And we've got policies in blue states around our country. California, you mentioned California. 63% of California's oil is being imported from foreign countries because of blocking of pipelines coming into that state. They have a record number of internal combustion cars in California. They have more internal combustion cars than any other state has cars. And yet 2 refineries have announced that they're shutting down in California because of policies, not because of lack of demand, not because of lack of consumers. And so what's going to happen? You're going to have oil tankers and refined products coming into San Francisco Bay and coming into Long Beach in record numbers in California because of policies. They will have higher gas prices than virtually any other state. So again, we have a strategy in America to help every state. The Trump administration wants to have low, affordable energy prices for everybody.
All right, everything seems to be working. 1 minute, I'm going to grab my food.
Producing electricity for AI, but we're going to need the collaboration from states to make sure. And if states don't want to collaborate on that, then you're going to see this $1 trillion of AI, a historic amount of spend, all going towards states that have pro-energy policies that drive down prices.
Secretary, we've seen a significant increase in energy costs, especially for individuals who live near data centers. How is the U.S. going to do both at once, both support these AI initiatives, but also make sure consumers' energy prices remain affordable?
Well, if you said on the show, I mean, the prices are in electricity are local, not national. And so there are the examples that you think we're driving that analysis right now, and we're going to be publishing that from the White House to the National Energy Dominance Council, the Department of Energy doing great work on that. But a lot of the higher prices that you're seeing are not related to the AI data centers. A lot of the AI data centers are going to be off the grid, behind the meter, and then adding more energy, and then putting some of that energy onto the grid. So we could be actually increasing the supply in some of those areas where we've got increased pricing. It's because of the policies they pursued the last 5 years of having unreliable, intermittent, and highly subsidized projects, including things like offshore wind, where people were spending $11 billion to create 1 gigawatt of intermittent, versus spending $1 or $2 billion to create 1 gigawatt of assured 7 by 24-hour power. So the policy choices of the last 5 years, driven by sometimes climate extremists, were the ones that are driving up the prices that you're seeing. I mean, electricity costs 3 times as much in New England as it does in North Dakota. That is not because of data centers. That's because of policies.
U.S. Interior Secretary Doug Burgum, thank you so much. And definitely something that we would love to keep talking about, given the fact that a lot of people have talked about how certain places, I'm thinking of Arlington in particular, in Virginia, right near Washington, D.C., have seen higher prices for electricity bills due to artificial intelligence. Commentary somewhat different there.
Bloomberg ran an analysis that found that electricity now costs as much as, get this number, 267% more for a single month than it did 5 years ago in areas located near significant data center activity. I hear him. A lot of this is local, but also there's a tremendous amount of competition right now between the everyday user and the massive tech companies looking to build data centers.
We're going to continue this conversation. Coming up, Constance Hunter of Economist Intelligence on what a Kevin Hassett-led Fed could mean for markets. Plus, you hire on end with your morning movers. Another check on Netflix and Warner Brothers. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Versace in Vienna, and this is Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Seeing a lift to end the week after a really interesting week, given the fact that we started on a pretty soggy note, and then it's been about 4 consecutive days of gains. Up now, fading a little bit from earlier, to up just about 0.1% on S&P futures. Seeing a little bit of euro strength, a little bit of dollar weakness, 116.49. Really, the question heading into next year is how much does this dollar weakness continue to mount that we have seen over the past week or two? And watching yields, they've come off some of the earlier highs. 4.11% rounded up. Take a look at these commodities. This, to me, is where the action is this morning. On one hand, you've got natural gas futures up 3.7% as people take a look at A, how cold it is, and B, how much that you need to use energy in the face of all sorts of technological gains in copper. Those prices up 1.6% in pre-market trading. 1 hour away from the cash open, here is your morning movers with Yahira Anand.
All right, guys, I just wolfed down my morning sandwich. I appreciate you giving me a minute before we crank this mother up. Drinking some coffee. Netflix is down. Fuck, I don't like Netflix. I bet everyone out there has a Netflix subscription, don't they? Does anyone ever want to go back in time and like appear in the boardroom of Blockbuster and say, you need to buy Netflix now? Anyone want to do that? Because I think having Blockbuster around now would be better than Netflix.
Its full-year outlook in a sign that the turnaround strategy is working at the company. But now that we've nearly wrapped up all the retail earnings, it's important to note the strength we've seen with Ulta.
I miss Blockbuster.
Walmart, the list goes on.
Everybody goes to Blockbuster. Everybody gets their own movie.
And we end on HP not seeing the same luck, down nearly 10%.
Bring a pizza home.
After it delivered a softer than expected sales outlook.
Those were good nights, man.
A blow to hopes that AI server demand would drive.
When the local Blockbuster closed in my area, we actually had a bunch of videos. My daughter had Barbie videos. She watched. There were Barbie cartoons. I guess she'd always get those. And we had them. So when they closed, if you had them out, they sent a letter out saying you could keep them. And I think I still have them in storage.
Coming out of Southwest, let's be honest.
And it's not Southwest's fault. What are some of these airlines?
Yeah. Yeah, and the high dude behind the counter always had weed. Yep, and the kids running the place, so we're always high.
Of Southwest, and we also heard a similar note from Delta. Let's turn to how the Fed's going to respond. NEC Director Kevin Hassett, seen as president.
I think I still have those videos. I hope we didn't get. We've moved a few times, and I tried to keep as much stuff as I could, but sometimes you just can't. But I think I have them.
Hassett, who wrote about the deleterious effects of inflation,
If not,
the Fed. The markets should
I think you can probably find that stuff on eBay somewhere.
It shows up. Markets may show concerns. Constance joins us now. Constance, great to see you. Thank you so much for being here. I want to start with why we haven't seen more concern in markets yet. Because ultimately, if you're looking to the market as a barometer of fear, you're not seeing any huge red flags.
No, you're seeing zero fear. And part of that could be that markets are looking sort of short term, right? They know that there's going to be
yeah.
Or think that there's going to be a Fed rate.
Just some things can't be replaced, man. You don't know how precious they are till they're gone, and it's kind of one of those things.
To be immune from
It's just too easy to just go on and get anything you want on TV now, I think.
Governors, whether you're talking about the way the regional presidents are set up. So all of this is a very intricate timing.
It used to be fun, waiting for that big blockbuster that you just couldn't make time to go see in the movie theater, waiting for it to hit so you could go rent it and then make a big deal of it at home.
Right, that's really critical because if you have a threshold of 5 or 4 governors. They can overrule.
All right, why are we selling off here? Anyone have any logic here? Oh, was this the Canadian numbers that caused that? No, that it already started. Let's go look at the news here.
From before he joined the first Trump administration, it really centers on the importance of keeping inflation low because the tax code is geared towards benefiting low-end firms during periods.
6.5. Oh, that's actually good news.
Kevin Hassett shows up. Yeah, it depends.
Well, they're saying, that's what they say. You know how that goes. They're saying unemployment is down in Canada.
A lot of real-time data. We should have just gotten the non-farm payrolls report.
Interesting.
Newsflash, we're not getting it until
I wonder what. Do we have anything else that's causing the sell-off today?
Coming up in about 90 minutes time. I mean, what do they do with this? How do we understand whether inflation is the bigger problem or whether it's the labor market?
Well, we pretty much know what the PCE report is going to say with regard to inflation because a lot of that is derived from the CPI and the PPI. So we think it's about 2.9% for headline, 0.22% for core. Those are both month-over-month numbers, right? The more interesting thing is going to be looking for any signals in the wage and income data. And so we are looking for a little bit of softness in the wage data, but that's going to give an indication of the strength of the labor market.
When you say which Kevin Hassett shows up, isn't he being chosen?
I got nothing. So we're waiting for the open. I got nothing till the open now.
Economy, isn't it going to be him that is going to listen to him when it comes to lower rates because it's the only reason why he's being chosen?
I don't think it's the only reason why.
We got a sell-off going.
He is an economist who has a long track record of being in D.C., being a policymaker. He basically crafted.
It's always nice to get in front of these sell-offs, but there was no volume.
He was very influential in the CARES Act.
All last night, no volume.
I think he's being chosen for those reasons. But remember, he's going to have to convince his fellow board members and the presidents who are going to be voting next year that that his policy.
All right, guys, I'll be back in just a few minutes.
The Fed needs to go in, and that is a big question mark. I mean, he's going to have to use a framework, and he's going to have to think about policy within that framework. And keep in mind, we have the benefits of the One Big Beautiful Bill Act coming, the delayed tax refunds. We're looking for over 3% GDP growth in the first quarter, about 3% in the second, and about 3% in the third. How do you cut rates into that environment?
Do you think that potentially the rebates we're going to get, the One Big Beautiful Bill, and the fact that this administration is talking about $2,000 checks is going to make the inflation picture that much harder for the Fed next year?
Well, the $2,000 checks I think we need to put aside because who knows if they're going.
But they keep talking about it.
They do keep talking about it.
And it's a midterm election year.
Yes, fair enough. Yes, that would put more money in people's pockets, and it would be make them able to withstand price increases. Because I think what you've seen with the tariffs is a lot of concern about people's ability to handle price increases. Firms have absorbed some of that tariff increase. They've reduced hiring in order to sort of compensate for that. And so the question is, how much are they going to be able to pass on? It would stand to reason if people have more money in their pockets, companies are going to be able to pass on bigger price increases.
We're talking about a Federal Reserve that's set to ease policy, and we're talking about pain among the consumer base at the same time that Wall Street is talking about enthusiasm for mergers and acquisitions. We've been talking all morning about this deal of Netflix agreeing to buy Warner Brothers. We're talking about returns that are likely to be above 10% on the S&P next year. Is this a potential headwind or a tailwind for central bankers that are both looking for some sort of boost from consumption that will come with more of the wealth effect, but also could potentially be fueling froth in markets that seem pretty accommodative?
So it all comes down to productivity, right? If we really are getting the productivity gains, and not just from, when we say AI, right, it's not just generative AI and ChatGPT, but the productivity gains from just regular AI, right, are still being diffused throughout the economy. And that is an important driver of productivity growth. So it really comes down to, are we in a period of enhanced productivity growth? In which case the markets are not excessively frothy, in which case the Fed has a lot more room to maneuver because ultimately that will help inflation. But there's going to be a lot of noise in the first and second quarter in the data, and it's going to be very difficult to interpret the underlying factors that are happening in the economy.
As opposed to the easy market that it's been to really decipher. Constance Hunter, thank you so much for being with us today. Constance Hunter of Economist Intelligence here in studio. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. The U.S. urging several countries in the European Union to block the EU's plan to use frozen Russian central bank assets to back a massive loan to Ukraine. According to European diplomats familiar with the matter, officials are arguing to member states that the assets are needed to help secure a peace deal between Kyiv and Moscow and should not be used to prolong the war. The U.S. Senate is seeking to ban NVIDIA from shipping advanced AI chips to China. They've introduced bipartisan legislation now to prevent the Trump administration from easing export controls. This all comes amid reports that the Trump administration had been considering relaxing restrictions on exports to China. The bill urges maintaining rather than loosening those export controls. FIFA conducting the Men's World Cup draw at the Kentucky Center in Washington today. The draw determines which opponents all 48 teams will eventually face in the initial group stage. The ceremonies kick off at noon. President Trump is hosting the festivities with performances from Andrea Bocelli and the Village People. The World Cup starts next June with matches in Canada, Mexico, and the United States. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. I would like to see Andrea Bocelli sing YMCA. I think that they should sort of bring it.
That is definitely not going to happen, but that would be funny. I have to say, though, I love Andrea Bocelli. I saw him recently at the Met. Did some amazing Italian opera. He's performing also next week in New York.
The Village People should perform Italian opera, and I think that Andrea Bocelli should do YMCA.
Maybe we'll do the dance.
It would be a viral moment. Up next, setting you up for the day ahead. Plus, Michael Collins of PGIM Fixed Income looking ahead to next week's Fed decision and the glut of corporate debt issuance on the heels of all of the M&A activity. From New York, this is Bloomberg Surveillance.
I'm back. Yesterday, Christmas pump starting, small profit, pre-market. Oh, okay. So you think this is a quick liquidation before we head back up? Because I'm starting to wonder if I'm going to get a place to get in now. I got to come up with a strategy to try and make sure I'm in at the beginning of these moves. But when I had my signal, there was no volume. And it was just floating around. Oh, you're manifesting it. Well, I'll manifest it for you because I would like a signal to go long in the next 20 minutes that I can hold all day. All right.
We have two.
What are we doing here? Pretty much set up, I think.
Two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
All right.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
Hey, hi.
Magazine that helps global leaders
Yeah,
stay
we're
ahead.
moving down. I
Bringing you insight
don't know what's up with the move down. I don't have any news or anything.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
trillion industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Right.
The Fed is likely to deliver not just the December rate cut, but also one in January. But more importantly, just from a market probability perspective, I think that ahead of the jobs report on December 16th, which coincidentally comes after the Fed's decision, that you should be pricing in a probability for January that's really closer to 50-50.
That was Kelsey Barrow of JP Morgan Asset Management as people game out not just the Fed rate decision next week.
Oh,
but
DLP just dropped news.
Potentially with new leadership. Right now, you do have new leadership in the market. You have the NASDAQ outperforming once again. S&P futures are lower on the heels of some deals news, which we'll get into in just 1 second. Yields higher, almost to 412 on the 10-year yield, rounded up. Otherwise, fluctuating around, trying to find some ground. Definitely some interesting action in the commodity space. The real move and the focus this morning has been on this Netflix deal, this agreement to buy Warner Brothers Discovery. Right now, you're seeing Netflix shares futures falling 4.2%. Warner Brothers Discovery shares surging almost 4%. A real question here about the valuation. It would be a $72 billion equity value deal. It would be an $83 billion enterprise value of this deal, but also the financing of it. We will get into that in a second. Counting down to the opening.
AC12, there really wasn't any news, man. It was just Canadian unemployment, but that wasn't the catalyst for this.
As well as University of Michigan.
I don't know what's going on. And Canadian unemployment actually went down. I'm not sure what's fueling this. I've been trying to figure it out.
Tuesday we get that JOLTS job openings data on Wednesday.
Are you going to try and catch the, you trying to catch the knife? Don't try and catch the knife, man. Don't do it. Don't do it, Craven. Don't try and catch the knife. They're trying to, they're liquidating people trying to catch the knife. That's what they're going to do until until the clear reversal. 10 o'clock.
The market's reaction function to any of the data.
We don't, so we've got the open, then PCE is at 10 o'clock. We got a huge news drop at 10 o'clock.
After next week's Fed meeting. How do you sort of get a
then Trump has signed executive orders at 3.
Mechanism is to a very uncertain backdrop.
Yeah, the good news is
where was that?
We get a lot of data, right? I'm just looking at today.
What was yesterday's low?
With a couple dozen data points, and we'll have a lot of that coming
well,
through.
25, 5.
It will be a lot for the market to digest.
24,
I really do believe
88.
The action we've seen so far in the Treasury
95. 95 to 88 was the low yesterday.
By the data, right? I mean, all this talk about the politicization of the Fed and what that means for the shape of the curve.
You think we drop another 100 points
notable market
before
reaction to that at all? Yeah, it's all driven by the data, and of course.
Hey, Uranium, how you doing, man?
Like Williams came out in the last few weeks. Really.
Yeah, we're trying to figure out what's causing this sell-off. I mean, Canadian unemployment was good. It went down. It went down from 7 to 6.5.
The path of the economy, the path of inflation, the path of growth.
I've got no news in the docket here that moves anything.
Right? They're going to be seeing all this stale-ish data for the
That's
first
actually
time,
good news.
And I think that there's a big question about what they're going to do next year. I mean, I think there's almost as good of a chance that they don't hike.
Where's Hogwarts? You missed a short again in the morning.
50, which is priced in.
Mike, this is exactly the point that a lot of people keep coming back to. Are we talking about a bond market that is embracing weakness?
Netflix is down, but I don't think Netflix is going to move everything like this.
The bond market isn't recognizing. How much are you looking to financial conditions? And I'm talking about some
like
of the
24.95, 4.95.
related corporate debt issuance, and sort of give that as a read on just how accommodative or restrictive monetary policy actually is.
I mean, if you just think about it, Lisa, right? And if you're the Fed and you're looking at the inflation data, which arguably has been a little more benign, so maybe it's going to go from 3 to 2.5 over the next year. The growth data, the real data in the economy, seems to be really solid. And as you've heard, more people are kind of increasing their GDP forecast for next year, kind of from the 1s to the 2s, and even you hear some 3 handles. The labor market, is weakening, but it's resilient. Financial conditions are easy. I mean, the stock market is hitting new highs almost every day. And if you look at those projections you showed earlier in your show, the street is calling for somewhere between an 11 and 17% increase in the S&P 500 next year, right? It's like, wow, if you're the Fed, would you ever even think about cutting in that world, right? So you're really basing your assumption.
Shrek, yeah. Yeah, but you can't guess where it's coming. You got, you know what I mean? Unless you're on the text list, you don't know when it's coming.
Lisa, right? You have this wealth effect, which is so powerful.
So for me, I've blown so many accounts in mornings like this
and then you have the AI
that where you keep guessing.
Investment, whether it's through borrowing or
you got hit. You got to be careful on Asia. Big hero is Kid Z. You got to be careful because that low volume will chop you up, man. The whales can smack you around in low volume.
So there is, the U.S. economy is on some,
So just be careful and don't try and catch this knife this morning. Just don't do it, please.
In the next 6 to 12 months, where you do get a leg lower in the job market and in the economy, and in that case, the Fed's not going to cut twice.
You'll be all right, man, but you just got to be careful. Yeah, you'll look like your setup is happening, and then all of a sudden you'll get movement. You get erratic movement that doesn't make sense, and that's them playing with it.
Right, where maybe the Fed
and you can't really trade it. The only way to trade it is if you're holding it on very long time frames and you got a really big account, in my opinion. Yeah, I know, man.
And that doesn't end well either, right? So these two tail risks are generally bad.
I know it's tough, man.
For risk assets, including our favorite, credit products.
At night, you gotta have a minimum volume you trade. Like I have my volume bar. Like at night on the NQ, I gotta have at least 500 per bar average for 3 bars in order for me to take an entry.
$59 billion bridge loan being offered up by a number of banks. Does this concern you? Does this feel a bit like the 2006, 2007 LBO booms that were really taking hold then, or is this actually something that the credit markets can absorb?
M&A.
Yeah, it's not even worth trading. I've nuked so many accounts, dude, that I'm embarrassed to tell you how many. I'm embarrassed to tell you how many accounts I've blown during Asia and Europe. I really am, and how many accounts I've blown in this situation right here, where you're trying to guess the knife. You're trying to catch the knife without a proper.
We're kind of, in the middle innings of that part of the cycle. So yeah, it does worry. If you look at credit.
Well, then what I would probably do, big hero, is just really kind of study it and use like 1 or 2 micros. Now that you have the PA, time doesn't matter. You can take. You don't have to pay anything. The whole object is to keep it as long as possible. So just use 1 or 2 micros, and maybe expand out and plan on holding over the session, and find a bigger time frame to trade on. I'm just giving you some ideas, because you can't trade it on a shorter time frame, in my opinion, the way you can New York. Yeah, if you're only in for 1 or 2 micros, you can absorb a lot of the nonsense.
What we're seeing right now is Netflix shares lower
and hold the trade longer.
Geeta Ranganathan of Bloomberg Intelligence joins us now. Geeta, you've had some time to look over.
I just questioned. Yep. It didn't allow me to trade past the amount losses.
Of whether this has been something long-standing, whether this came together in a rush for Netflix to get this over the finish line.
I'm not sure what that means.
Yeah, this is definitely a huge surprise, Lisa. We did not.
There is no daily drawdown.
To make this big bold move, they've always historically stayed away from acquisitions.
Are you only down 800 overall?
They themselves have said many times that
you still have that trailing draw too. So were you up and then went down?
So definitely something that we think they saw as a once in a generation.
You didn't get administratively closed, did you?
With very, very beloved franchises. And it's of course, it's a very expensive transaction, as you pointed out, $83 billion enterprise value. But again, it's for them, I think it's not just the cost of the deal, it's the cost of not doing the deal. And they're playing the long game.
Will it let you trade now?
Defensive strategy for Netflix.
How difficult is the deal?
Yeah, I don't know, man.
Going to be, and the antitrust concerns in Washington when it comes to this deal?
Yeah, it's definitely going to raise a lot of red flags. There's
Maybe you
already
lost your
been a lot of
connection
chatter
to
about
Rhythmic or
how this
something.
basically combines the #1 streaming service in the world with over, 320 million
Okay,
subscribers,
well then don't go
along
screwing
with
around,
HBO
because
Max,
I've
which has
done that too in
130
blown
million, which is
accounts
the
where I was
#2
just
service. So
testing
obviously,
something to see if it
there
worked,
are going to be
and then it
some
went
concerns.
against me.
Netflix is, however, kind of, I would say, flipping the script a little bit, saying that this is actually good for
Okay,
consumers.
maybe that was a
They're going to
switch
be
over to
able to
Europe.
offer
I don't know,
more
man. The
services
server
at
could have
such a
been down.
discount.
It could have
So
been
overall, it's
anything.
actually going
But
to be
just
a
make
good
sure
thing.
everything
But
is
of course,
clean.
we have to wait and watch, see how that plays out.
Geetha, just about a minute left.
Reconnect it and then try when your setup comes.
Say, look, you're getting a discount from buying both subscription services.
All right, looks like we got a little bit of a recovery here. Yeah. But just take your time with it,
Actually work really well, and
because there's little tricks in everything.
It does provide good value to consumers. I mean, we've seen bundles
25621. Oh, so you caught the knife?
from Disney, from other companies.
Oh, Craven caught the knife.
40 to 45% cheaper than if you were to buy the standalone products. So they do have, it does have some merit, but then again, we do see the costs of all of these services kind of constantly rising, and there is going to be a breaking point.
Geetha Ranganathan, thank you so much. I'm sure we'll be catching up with you as we get more details. A really interesting deal.
Just don't rush it, Big Hero. Don't be in a rush, because if you start putting yourself in a time box where you're in a rush to do things, you'll end up blowing it and have to start over. So, don't get impatient with it. Just take the time you need to learn. You know what I'm saying? And just take the opportunities that you can get, based off, your regular work, your plan A work.
There's going to be a lot more, but it is not a done deal yet.
That's all I can say is just don't get impatient, because when you get impatient, you start doing things. You bought the knife. You bought it 25,596. Yeah, that's what I'm saying. You caught the knife. Oh no, you didn't take it on the red candle. You got it on the way up. Yeah, you bought the knife. Well, catching the knife is trying to guess where it's going to bounce. How do they factor in the red days? Oh, it doesn't matter. So, a day traded is a day traded, whether you're a winner or a loser. It's a day traded. So the 30% consistency rules, once you get profit, 30% of your profit can't be had in one trading day. So let's say you had $10,000 in profit. Once they average all those days, one day winnings can't be more than 3,000. You know what I mean? So 30% of whatever your winning total is, one trading day can't be more than 30%.
Structurally speaking, we do still have a very positive view in Mexico.
So in the beginning, don't worry about it. Just when your trades come, take your trades. Yeah, don't even worry about it. Just when your trades come, take your trades. When the profit's there, take your profit. And then once you got 15, 20 trading days in, then we can kind of go back and evaluate where you are. You know what I'm saying? It's more important now to make sure you hold on to the account and that you don't blow it, and you learn as much as you can while you have it.
Growing very healthily, very nicely.
How do you set up your trading plan? Do you have an idea in mind?
Mexico for VVA.
Yeah, that's really the trading plan. Is you got to make it around your life.
And it
because you gotta have plan A, regular work. So you gotta try and find a way to get to be able to watch the market and learn in the times that you have available. And you gotta make sure that you get your setups, and that when you have profit, you take your profit down. But you gotta, if you can't trade in New York a lot, then you got to try and figure out what's going to work for you in your situation right now, and and I can kind of give you some ideas. Once you got the frame of what your plan is, I can help you kind of refine it a little maybe. But you got to decide, if I get off work at 6 o'clock every night, am I going to try and watch the markets between 9 and 12? Or am I going to get up and watch them from 2 to 5? Or, you got to kind of figure out what's going to work for you. when I first started, I was watching things 24 hours a day because I took some time off work. And I realized that I was never going to be able to do this. So I decided that I was only going to trade during New York session. I was going to go I was going to start watching it around 8. And then I was going to be done by 3:30. And then whatever setups I got within those time frames is my opportunity to make money. So that's kind of how I set myself up. Because I work from home, it gives me the availability to do that, but not everybody can.
Until the start of trading here in New York City, I'm Matt Miller. Danny Berger is on assignment. Bloomberg open interest starts.
Soils? What's that mean? Solid. Oh, solid. Okay, brother. Cool. Yeah, just don't lose. Just make sure the account is good and that you didn't really blow it without realizing it. And just make a plan with you want to keep your risk as low as humanly possible while you're learning. Even if you're averaging $25, $50 wins or whatever, don't risk more than 50 or 100 on a trade. Yeah, well, you can then that's part of your trading plan. If you can work third shift, and trade New York, then go to work, then that would be good. Whatever can work for you. But it's a journey, man. It's some work. It takes some time and patience. Don't get impatient. You got to hold on to that PA for as long as you can. Because you don't have to, as long as you got the PA, you don't have to spend any more money on evals. Yeah, there is, but you shouldn't be anywhere near it. You shouldn't be anywhere near it. Are you on a 50K? Are you doing the 50K?
But it will get that beautiful studio in Hollywood, California. For more on the deal, we're joined by Bloomberg Intelligence media analyst Geetha Ranganathan. And Geetha, is that really what this big, multi-billion?
Okay, so what is the limit on the 50K? Like,
oh, absolutely. It is. It's a huge
10
lot,
or something. I'm looking.
Lot. And really, this is about owning one of the best and biggest studios in Hollywood. And Netflix really
so you can do up to 80 micros, but you should only be trading a couple, 3 micros at a time at the most while you're learning. So for what you're doing in the size of that account, you have all the power you need. If you're maxing out your contracts, you're wrong. Do not do that. You know what I'm saying, dude? Now that you got the PA, you have to protect it.
Considering the fact that we've already heard concerns out of Washington about these two.
You should be on micros and just doing a few micros at a time, like entering with a couple, maybe adding and taking off. But you shouldn't, you shouldn't be anywhere near the max. And if you've already been doing it, it's okay, but you should stop. Yeah, well, Full Port Fridays is for a fresh eval with all the contracts that you have. But that doesn't, no PAs for Full Port Fridays.
Releasing movies first to streaming, but now they're saying they're
I almost kind of wish we didn't come up with that.
And then also saying that as far as the studio is concerned, majority of Warner's
don't do it. So when you enter
to other platforms,
don't do that, man. Don't do it.
So far they're saying
if you've been doing it and getting away with it, Full Port, right? Yeah. If you've been doing it and getting away with it, that's fine, but you need to stop. You need to go in with just like 2. Do 2, and if the trade's going your way, you can add to it, and then when you got profit, pull off the extra and keep 1 as a runner. But you don't.
For the entire asset, right?
Okay.
In this case, in the Netflix case, Warner Brothers is first going to spin off its cable assets. That's valuable to shareholders before it sells the streaming assets and the studio to.
Okay, yeah. That's sustainable. That's right.
So the $30
you shouldn't,
company, this
sarcasm,
$28 is just for the studio and streaming business. So obviously
No, I totally get it. I know you're joking. But
the global.
Yeah, no, I
business, so
totally
the
get it.
TV networks business is worth more than
That's
$2
cool.
or
But yeah, I just
$2.25 a
just
share.
just stay
And
focused on
obviously
keeping
in
it
the
because
best
you don't want to
interest
have
of
to start over and pass another
shareholders that,
eval. Then you
the
got to
studio
spend more
and the
money.
streaming business goes to Netflix.
By the way,
And if you do blow it, at least learn as much
closeness
as you
of the Ellison
can and
family
change how
to,
you do things
Donald Trump
to
and
get
this
better on the next
administration.
one.
That was thought to
You know
be
what I'm
an
saying? That
advantage.
should be your goal.
Is anyone in Hollywood, is anyone in Washington saying it still could prove out that somehow this administration sees to it that antitrust concerns scutter the Netflix deal? They get Warner Brothers gets the $5 billion breakup fee, and then Paramount
it's just that's it.
Assets.
Oh, anything is possible, and this hasn't
Very
been
true,
anything short of
Bashfield.
a
How you doing,
soap
Bashfield?
opera here, so I wouldn't rule that out.
Oh shit, I gotta turn on my leads.
We'll
I'll be
continue
right
talking
back.
to you about this deal throughout the day. It is
It's already 9 o'clock.
Absolute monster. Geetha Ranganathan there of Bloomberg Intelligence. I have to say it probably touches everyone too. Everyone who consumes entertainment, which is most people, watches either Netflix or HBO or both, and soon they could become one. Let's turn to tech. Now away from media, Hewlett-Packard shares dropping pre-market after sales of its AI server business fell short of high expectations. The company did say, however, it continues to see, quote, substantial interest in the business. Joining us now is Bloomberg Tech co-host Caroline Hyde. Caroline, what does that mean, substantial interest in the business?
It means they actually had to push back some revenue into the next fiscal quarter because the government...
All right, guys. Hey, I got to do a few things for real work. I'll be right back.
But it did protect the margin a little bit. Remember, AI servers, they're not the most lucrative, profitable business because memory chips are getting so expensive. The things you put in servers are getting so expensive. We've seen that with Dell, now HPE, reiterating that. That's why they bought Juniper. That's why they're looking at the networking side of the equation, and why actually BI has been liking the fact that they're getting a more diversified model, more diversified business, and they're looking to grow there more broadly. But yeah, look, we had very high expectations for HPE. It's been caught up in the whole AI frenzy and optimism that many more companies can benefit from the AI infrastructure build-out. But we just have to wait for a little bit for the next quarter, it feels like. For here and now, though, we did see some support more broadly for its margin, and we are seeing that actually 40% growth in revenue ain't too bad.
All right, so that's the Hewlett-Packard story. There's a lot.
Not Hewlett-Packard. HPE.
Sorry, HPE story.
Rebrand.
I got it. No, and I get stuck in my ways as an older man. But you're right. HPE. That's the HPE story. We're going to continue to stay on top of that. You'll be covering that with Ed Ludlow in your program, Bloomberg Tech at 11. But there's a lot going on in tech this morning. I woke up to a Chinese IPO, which normally I don't pay much attention to, and I hadn't really heard, I will say, of more Threads. But this is apparently a challenger to to NVIDIA that the market is taking seriously.
Was it the 450% pop on the IPO that caught your attention?
Yes.
I mean, it's a record. We've never seen an IPO enter that market with such a fanfare. It only raised $1 billion, but the fact that it crescendoed ever higher and it's now worth about $39 billion, I mean, nothing in comparison to NVIDIA's overall market cap, but still, this focus that China doesn't want NVIDIA chips, wants to grow domestically, so the government wants at least. So you've got Camericon that's been doing incredibly well in the public markets. We've seen, of course, now Huawei do well. We know that other Baidu, for example, is thinking of spinning off its chip-making part of the business and indeed listing it. Others are waiting in the wings. Meta X Integrated Circuits, other companies over there thinking, this Star 50 index has got a lot more lucrative for non-profitable companies that are looking to innovate where the government wants to innovate. So if you're thinking about quantum, if you're thinking about AI infrastructure, you're going to be able to potentially raise some funds. So absolutely stellar performance, and we'll just have to see how that benefits, because I think it was 2,000 times oversubscribed for the retail part of the overall offering.
All right, so one of the other big stories, now there's a lot that you guys are trying to squeeze into your hour today, but obviously media and tech go hand in hand. You guys had such incredible coverage of the Screen Time event with Lucas Shaw. We're hearing today that Meta is going to be expanding Meta AI with real-time news sources. They've made partnerships with CNN, Fox, Le Mans, People, The Daily Caller, The Washington Examiner, USA Today, and others. So this is your worlds coming together. This is tech and media really colliding, isn't it?
And again, because remember, we used to have pretty lucrative deals for publishing industry with Meta, but they folded that and the news tabs back in 2022 or so about, well, at least the payments folded in 2022 and they shut down the news tabs a couple of years ago. But now we're seeing them having to pay out and make these commercial relationships once more. They actually did one with Reuters back in 2024 Because you and I need real-time answers to our chatbots. It's no good having something that was trained on the internet a year ago. They need live and contemporary, I'm not even going to say that word at this time in the morning, but real-time answers to not just your business news, but your fashion, your entertainment more broadly. You want international news, why they go with Le Monde. And it's interesting that they're going across the gamut in terms of political perspective here, right? Because they were criticized back in 2016 of not having enough conservative voices. They did have Breitbart and others linked into their news offering previously, but the fact that they've gone with Fox, the fact that we've gone across the gamut, these are going to be costly for Meta in the same way that Perplexity is having to pay off and some of the others are, but I think it's going to be much more beneficial for you and I, the consumer.
All right, I just want to finally talk about the New York Times suing Perplexity over use of its copyrighted work, because this is the same story essentially, except for they didn't make a deal, right?
And New York Times has been relatively litigious against large language models. Equally, Perplexity has come in the line of fire with cease and desists from across the board. Poor Perplexity is getting being targeted by Amazon as well, because it's been trying to allow its chatbot to be able to make purchases on other particular websites. So this is the beginning of companies trying to work out who's got whose real estate, who's ensuring that they're training and giving fair royalties back when necessary. And once again, Perplexity has been trying to make these commercial deals itself, but clearly not quite quickly enough.
It's so funny, I was talking to Matthias Dupfner about this like 10 years ago, and I figured it would be resolved by now, but this is an issue.
It's not evolution, Matt. It's an evolution.
All right, looking forward to your program. Caroline Hyde hosts Bloomberg Tech. That kicks off at 11. They've got a lot to squeeze in on that show today, so definitely tune in. I want to check in right now on futures. We are about 20 minutes away from the market open right now. Not seeing decent gains right now, little change on the S&P 500, but we're so close to a record. If we do manage to rally into the close, which has been known to happen on a number of occasions, although it is a Friday, we could get a 0.5% gain, and that would push us to another new record for stocks. I'm not saying it's going to happen. I'm just saying we're close. Let's get a check at some of the other movers on our radar. Ulta issued a beat and raise as demand remains robust, but the cosmetics company's CEO cautioned that consumers are getting choosy. So Ulta Beauty this morning up 7.3%. Speaking of beauty, Victoria's Secret also beat earnings and raised its outlook as its turnaround strategy seems to be luring more shoppers across all income levels. This is a huge story of a once giant in the lingerie world that has come crashing down with competition from startups like Skims. Today up almost 16%. And cybersecurity firm Rubrik is jumping after posting a surprise profit in the third quarter. Rubrik up right now more than 20%, increasing its market cap by a fifth. Coming up, a Bloomberg exclusive, House Democratic leader Hakeem Jeffries joins us right here on Bloomberg Television to discuss the battle over health care subsidies and whether New Yorkers could see higher taxes again next year. This is Bloomberg.
Coming to you live from Kuala Lumpur, the whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you're good at your job, bro. Like, this is actually the first time anybody's ever asked me that. you know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
All right, let's head now over to Capitol Hill in Washington, D.C., where Bloomberg's Balance of Power co-host Joe Matthew has an exclusive interview with the House Minority Leader Hakeem Jeffries, and they'll be talking about health care.
Indeed, thanks for joining us live from Capitol Hill on Bloomberg TV and radio. I'm Joe Matthew with an exclusive conversation with the Democratic.
All right, guys, I'm back. How we looking here?
Hakeem Jeffries of New York.
Craven, doing good. Caught a little bounce after the dip.
So, pretty important ruling in the
Lurker
comes to redistricting
in the
Czech
Republic.
With here, it's open season, apparently, on redistricting. Does that mean every Democratic-led state in the country needs to redraw their maps?
Well, first of all, it's unfortunate that...
Hey, Lurker, how you doing, man?
A racially gerrymandered extreme map that Donald Trump ordered Texas Republicans to engineer as part of his effort to try to...
All right, we're got about 14 minutes till the open.
But notwithstanding this adverse ruling, we're going to continue to move forward and ensure that there is a fair map across the country. California voters enacted Prop 50, and as a result, we'll have a fair map in California with some additional opportunities to be competitive, and I expect that you'll see other states across the country continue to respond.
Sombrero.
Be one of them. Are you on the phone with Governor Hochul today, saying it's time to redraw the New York map?
Well, the New York map has
Sombrero on vacation.
Particularities relative to the Constitution that won't necessarily allow it to be revisited in this particular cycle. But some voters have filed a lawsuit in New York, and we're monitoring that litigation closely to see what the...
All right, guys. Once again, we're closing in on the VWAP for the Open, which I do not like. I do not like VWAP action at the Open.
We saw a plus 22.
I'm good, man.
Go down to a plus
I'm good. I'm just trying to keep my work stuff caught up here. Real work.
Mathematicians out there suggesting that could mean as many as 30 or 35 seats for Democrats in the midterms. How do you see it?
Well,
see if I can't get into something today.
They would lose.
Make a little bit of money.
Donald Trump has decided to engage in this extreme effort to gerrymander congressional maps all across the country, and it's very unfortunate. Our view is that we're not going to unilaterally disarm, and we have to ensure that there's a fair map nationally across the board so that it's the voters who get to decide who is in the majority after the November 2026 election. Part of the challenge with Republicans is that
I'll come and check on you.
They indicated that they were going to lower costs.
Okay, dude.
On day one.
Enjoy your time, man. Enjoy your time. Have fun, dude.
Grocery prices through the roof. Electricity bills through the roof.
Hell yeah.
Now, because my Republican colleagues refuse to extend the Affordable Care Act tax credits, we know tens of millions of people are about to experience dramatically increased health care costs. Democrats are actually the party focused on driving down the high cost of living.
So let's talk about a couple of those points of leverage that you just pointed out. Affordability and health care. Many would argue that it's kind of the same story here. President Trump has been saying that affordability is a Democrat hoax.
I have a feeling we're going to play in the chop again. I know. That's kind of what, when we drift up into the VWAP right before the Open like this, that's kind of like...
It appears that way. It's unfortunate that the president's...
It's just getting sucked right into it. So to make it short, Lord Titty and TTF convinced me to believe in myself, and I got a loan approved. Approval to stabilize my life and invest in my VIA trading account. By next week, you'll be padded. All right, brother. We believe in you, man.
The high cost of living in the United States of America, that they were a party
Having that pad in there gives you peace of mind, you know, and it's easier to take the profits down. All right.
But they lied to the voters.
Yeah, only good stuff, man.
They absolutely lied to the voters because there's no evidence throughout this year that they've had any intention to actually address the affordability crisis.
Good stuff. No stress. Yeah, that's what I'm saying, you know.
Everyday Americans, when they go to the grocery store,
You can scale into stuff and you
see
can,
their
you know.
healthcare premiums dramatically increasing, when they see the electricity bills that they have, which are through the roof in part because Republicans in their one big ugly bill attacked the clean energy economy.
Yeah, that's what I'm saying. Yeah. Yeah, you just start out easy, and if the trade starts developing, you can scale in. You know, you get 100 points and you can scale back out. You know, you can go in and out, in and out. Yeah, I know. What's up, Elgo? How you doing, man? We're just waiting to see what kind of chop we get when the market opens here.
Of prescription drugs. Does he deserve credit for that effort?
We haven't seen any evidence that prescription drug prices have gone down in any meaningful way. What we have seen are that the Trump tariffs are out of control. They've increased costs by thousands of dollars per year on everyday Americans.
All right, dude. We'll see you. We'll see you when you can stop back, man.
For businesses and corporations throughout the country, and we know that uncertainty is one of the biggest problems that American corporations.
Got about 10 minutes, guys. 10 minutes till the open. Let me go check the news again.
Chaotic environment that has been visited.
We got news at 10 o'clock too. So once the open starts, we got University of Michigan sentiment. This always is a mover. PCE. We got all the PCE drops at 10. So we got a catalyst at 10 o'clock. So this should be enough. Maybe we can start pushing. You know, maybe we can start breaking out of the range we've been in. You know, maybe we can start breaking out of the range we've been in. Then Trump signs executive orders at 3. That can and can't, you know.
The American people the certainty that they need in order to move forward during these.
I guess it depends what they are.
All we need are 4 Republicans. There are 219 of them. All we need are 4 House Republicans.
Yeah, I'm just getting going too, man. You know what? I'm going to give up on TikTok. TikTok doesn't like traders on there. They muted one of my shorts. I've been trying to clip shorts and trying to build something up over there. And they muted it, and it was like it was just a normal conversation that we always have. They won't promote any of my videos over there. I'm trying to, you know, pay to promote to get more viewers or followers. They won't let me promote any of it because it's trading charts. So I'm going to abandon Twitch, or I'm sorry, TikTok. I'm going to abandon trying to do anything on TikTok.
Has been that they've adopted a
I'm going to try X.
approach. They have zero interest in actually sitting
Yeah.
and finding a bipartisan.
Oh, fuck them anyway.
We've said from the
Just a
very
bunch of
beginning
weirdos over there anyway.
this year and throughout the Trump Republican shutdown. That
But I
we've
mean,
said
I'll
that
have
anyone,
X,
anytime,
Rumble,
anyplace,
YouTube, and True Social. I mean, that's enough. I can find a few hundred people.
to try to figure
We can
out
build the
how to
community to a few hundred
fix
people, then I
broken
can do
healthcare
this full
system
time.
and address the Republican-created healthcare crisis that's devastating people all across America. They've refused repeatedly to sit down.
I'm gonna work. I'm gonna really work on it this weekend.
Apparently, because they really are
You can get rid of
uninterested
TikTok and
in
try and get
dealing with
X
an
going.
extension in the Affordable Care Act tax credits. Joe, as you know, this is the same group of
I
people.
don't, yeah, guys,
that
I don't.
actually tried
We're on
to
the
repeal
ES right
Affordable
now.
Care Act more than 70 times over the last 15 years.
So could we be in a world in which there's a health care bill that passes the Senate and dies in the House?
Well, if there's a bill that passes the Senate, there will be tremendous pressure on Mike Johnson, Steve.
I don't see any news, any unexpected news.
And the votes will exist.
We just got our 10 o'clock.
I call upon some of my Republican colleagues, more traditional
Right
conservative
here.
colleagues.
We just got this
or the
mass
so-called
dump
swing
at
seat
10.
Republicans
So
to actually press their leadership to give the people of this country.
So you want to be careful. We're 7 minutes to the open. If you're not already in a trade, you want to, in my opinion, you want to hold off. You don't want to go now because we could blow through the VWAP once the open hits, or we could revisit we could retap the lows, and it all could be on one candle. So if you're not already in a position with a break even and a take profit, then then I would say, you know, we probably got to hold on.
Making life better for everyday
But I say that
Americans.
every day.
That's the Democratic commitment that we actually should deliver on the promises that Republicans made to lower the high cost of living, but refused to address. In a country that's the wealthiest in the history of the world, but there are far too many people who are struggling to live paycheck to paycheck, can't thrive, can barely survive. And that should not be the case in this great country. We should allow for a situation where every single person who works hard and plays by the rules can afford to live a comfortable life, live the good life, good paying job, good housing, good health care, good education for your children, and ultimately, at the end of the day, a good retirement. That's the American dream. We need to bring it to life for every single American.
Democratic leader in the House, Hakeem Jeffries. Leader, thank you for being with us today.
Bloomberg could be talking about what caused the drop this morning instead of wasting a time slot with someone from Congress.
Joe,
Yeah,
I
I
just
know.
wonder, while you were talking to Hakeem Jeffries on Fox Business, House Speaker Mike Johnson was saying that the Republicans will
I know.
roll out a health care.
I know that might help us a little, huh?
Next week, I know because I listen to your program every day that we don't have that many legislative days left.
That's correct.
On the calendar, what is it, like 10 days left, and the Republicans are going to come out with a plan mid next
Johnson
week? Is there
roll
enough
out
time to get
health care
anything done?
plan.
That's a great question, and we could be in a situation, and we'll talk.
Don't
to
really need a
about this,
healthcare
where
plan.
There is a short-term fix because, Matt, as you point out, time is tight, and these Obamacare subsidies will expire at the end of the month. If there is in fact a Republican
Yeah,
plan,
that's all that
we'd
this
love to know
is.
what the
It's
details
just
are. There was a
they're playing their
bipartisan bill,
game
as
and
we
they're
just
not
discussed,
helping
dropped
anyone.
yesterday, but there's
They're not
no
doing
path to
anything
freedom at
for
the
real
moment
people.
on this, Matt. And if it waits until next week, we're going to have single digits in terms of legislative days left to make this work.
All right, Joe, thanks very much for that. Joe Matthew there, anchor of Balance of Power. His show kicks off on Bloomberg Radio at noon, then again on Bloomberg.
I mean, we don't really need a
Television
healthcare plan. We
at
just
1
need
p.m.
less
Let's take a
regulation
look at what's
on
going
insurance
in these
products.
markets. Just about 4 minutes left until the opening bell.
For people.
And there's a very special guest ringing the bell down at the New York Stock Exchange, so stay tuned for that. We're looking at S&P futures right now that are a little changed. but the
Obamacare
arrow is
really
green
messed
here.
everything up.
Of 1%, the gain we need to see.
I was in the health
that move
insurance
up to
industry
about
for
0.5% before we
a
hit
few
new
years.
record on stocks. NASDAQ up a little bit more, about 1/2 of 1%.
Made a lot of money
You can see the
selling
small
health
caps
insurance,
this
and I
morning down
figured out
0.2.
how the system
Even
really
though it
worked,
looks
and
even more
kind of disgusted
like,
me.
We're a lock for a cut from the Fed next week. We get a ton of data coming out at the top of the hour. And when we come back, we're going to talk to BlackRock's Rick Reeder as well. This is Bloomberg Open
BlackRock.
Interest.
BlackRock's another company that needs to be completely chopped up and sold off. Never happened though. All right, so I got a long signal here on the forecast. If we weren't 3 minutes from the open, I'd be looking at possibly getting long. But remember yesterday, every time the long went into the VWAP, it got smacked down. Yeah, it's design. It's just horrible, man. It's just horrible. It could be so cheap. Like healthcare could be so cheap. It's the bureaucracy in the system and the monetization of everything. You know, it's a game. It's a coding game in order to get paid from the insurance companies. Oh, here we go. Yeah, Americans pay for everything worldwide in the healthcare industry. And plus they just, you know, with all the extra, you know, Obamacare really screwed the old system up. The old system was fine.
It took him 4 years to convince you
in order
to
to
open a restaurant near him. You eventually did, and that started
put these fake plans
lasted
together
through the decade.
for people.
You know, I met him 1988
I don't want to get it.
after my past vessels opened.
All right, we got 2 minutes to the open. We're pushing the VWAP right now, guys. We're pushing the VWAP. It's going to be interesting.
No, I don't know. What is he doing? Because I never watched the movies. You know, I was traveling the busies. But of course, after, you know, people, hey, no, so you must know him. And then I understand.
How is he as a partner?
He's a...
You know, they make it impossible for just, you know, somebody to want to start a clinic to help people on a cash basis. It's like impossible to do that. You have to go through the insurance industry, you know.
But it's good idea.
So everything's kind of monopolized. And
Nobu Hotels idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel.
you're not allowed to provide any care. 30 seconds, unless you're part of the system. All right, 30 seconds, guys. 30 seconds to the, let's see if we boom or if we go straight down. But guys, don't go screwing around at the open. We just joke around about Full Port Friday. It's just it's fun to talk about. It gets expensive to participate in.
Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever
Here we
and
go.
wherever it happens. I'm
Ding,
Stephen
ding,
Engel in
ding.
Japan's
We're off, guys.
Akasaka
We're off. We're
Palace
off.
in Tokyo, and this is Bloomberg.
What are we going to do?
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at markets that
All
are
right,
hovering
pushing up.
between gains and losses. Right now, green arrows on futures, 0.1% on the S&P, 0.2 on the NASDAQ. If we do get up by 0.5%, by the time we close, we'll have hit another all-time record
Here we go.
high on the S&P 500. So stocks, although November was a tough month,
Oh, we got a proud Shrek going on here.
new records.
All right, so if you guessed long at the open, you would have been correct. So the long signal was right here. So if you took that long signal, you'd be looking really good right now for the moment. But you know how the reversal can happen, so let's just see where we go here.
I looked ahead on the NYSE website, and I thought that Hank Azaria was going to be ringing from, Mo Sizlak of The Simpsons. But that's actually tonight. So he's ringing the closing bell. Stick around for the close with Romaine and Katie, and you'll see the voice of Apu ringing the opening bell. It's a SPAC at the NASDAQ market site, so that's pretty much all you need to know. In terms of the big news today, we had what could prove to be an historic deal. Netflix is buying Warner Brothers in a $72 billion deal that combines the world's dominant paid streaming service, that is Netflix.
All right, we're blowing it. We're blowing it out. Holy cow, guys. Who saw this coming?
Warner Brothers. It is a
You can go ahead and chime in if you called this.
Right now, you've got
I didn't.
Netflix down about 4%. Warner Brothers Discovery up 324 to 25.34. So the price actually is 20.
All right, so we do have news at 10 o'clock, guys. Let's just keep that in mind. We got news at 10 o'clock.
But we're getting ever closer on WBD, and apparently Paramount had made a $30 bid. But
All right, I got to make a phone call real quick. I'll be back in a few minutes. Let's just see how this shapes up before, see if we get the reversal today or
I
not.
want to get to the broader markets, and we have a Fed meeting next week, and there's a lot going on in rates as well. So let's bring in Rick Reeder. We have a ton of economic data coming out at the top of the hour, Rick, and normally we would have also jobs day today. That's going to be pushed forward a couple of weeks, or back a couple of weeks, I should say. And this leads me to my main question. Why would the Fed meet next week if they're not going to get the big jobs number out until after their meeting? Why not delay your Fed meeting, break up your precious schedule, get a little closer to Christmas? I get it. Everyone wants to be home for the holidays, but isn't the U.S. economy important enough for them to do that?
It's a great question, Matt. I mean, listen, I would say one thing. I think there's not a lot of ambiguity about the velocity of hiring in the United States today. I mean, you see, obviously, we got the ADP data, the claims data we got yesterday, but that's pretty ambiguous because of the timing around the holiday. But boy, you see it in terms of where companies are going. I mean, literally every day. And you see it, by the way, on the backside of M&A. To me, it's pretty clear that we don't have any hiring velocity today, and that the Fed, I think it's a pretty clear, you got to get that funds rate closer to 3%, if not at 3%. And so I think you've got enough data to do that, and you don't have enough data that suggests that inflation, certainly over the intermediate term, is accelerating. So I don't have any issue with the meeting. I mean, I think they can move closer to 3% sooner. So, and I think you got enough data to allow you to do that.
All right, so you think it's a lock, and it doesn't really matter. They might as well cut now if they're going to cut.
By the way,
yeah.
By the way, I don't think it's a lock. I actually think, when you look at, we're going to probably have some dissents. You probably have a disagreement. I think it should be a lock. Listen, I think the fact that we haven't heard anything otherwise, that they're probably going to go. But I definitely don't think it's 100% that they're going to go.
All right, that's interesting. So you think we're going to see more dissents? Does that continue, Rick, or do you think, once Jay Powell is done and the president puts in whomever his pick is for Fed next year, that we're going to see less dissent, or is this a new feature of the Federal Reserve?
So I don't, personally, I don't think it's a crisis that you have some disagreement. You have some independent voters, you have some independent people on that Fed that are interpreting the data differently than others. So I'm not sure that it's a structural problem. Listen, I think that, to me, the data is very clear that inflation is a bit elevated today, but productivity and innovation will deal with that. And that is so clear to me. And then the flip side of that, productivity and innovation, are creating an incredible lack of hiring for ordinary jobs, lower skilled jobs, et cetera. And so, how people interpret the data in the near term, I don't think it's a structural issue that you have those dissents. I just think going forward that, we're going through what I think is the most extraordinary industrial revolution we've seen maybe in a generation. And I think the offtake of that is pretty clear in terms of what it means for jobs and inflation.
Let's talk about the next Fed chair. I mean, reports suggest that Kevin Hassett has won this contest, and I wonder, as someone who runs one of the most important rates businesses in the world, what do you think about Kevin Hassett as a pair of hands to run this Federal Reserve?
I will say that I'm not going to comment on any individual. The thing I will say is I think this Fed will, continues to be one that will analyze the data. I think the data is clear today in terms of where it's going. I think the thing that we've got to do as market participants is think about not just what are they going to do with the front end of the yield curve, but what do you do out further on the yield curve? There's a bunch, including with the name you mentioned, how people think about how does the 10-year react, how does the back end react to that. I think one of the great expressions of the market today is I actually don't think that rates are going to be that volatile out the curve going forward. And so, one of the great expressions of the market today is selling volatility in the rates market, which has been pretty good trade. And I think will continue to be. Mortgages, agency mortgages also being an evolution of that.
Mortgage rates and consumer borrowing costs, they're still high by recent standards. It's part of the reason, I guess, you want to get the terminal rate at 3%. But companies are telling us every day that tariffs and policy uncertainty are more important than the Fed funds rate to their business. And we talk to economists like Diane Swank who say that especially consumers at the lower end are not going to be helped by a rate cut. Anybody in the subprime borrowing area, which is massive, by the way, is like the bottom 2 quintiles of the country. Are we in a world where rate cuts just don't pack the same punch as they once did?
That is a long and complex question. So I will say the answer is yes. The short term, the overnight funding rate is not nearly as effective a tool at moving monetary price, at moving the economy as it used to be for so many reasons we've chronicled before. Service-oriented economy, people borrow out the yield curve. CapEx is not driven by the interest rate today. It's driven by hyperscaler spend or by CapEx spend on AI, et cetera. However, long-end interest rates do matter. And how you fund out in the 5 to 10-year part of the curve particularly do matter quite a bit. It's part of why I believe that stability out the curve is so profoundly important. To say, though, the comment about getting the rate down doesn't help low-income people is not true. The truth is there is a transmission mechanism that even if you move the front end of the curve down, as long as the curve doesn't steepen that much, and there are ways to manage that, what you do is you create velocity of mortgages. You get the mortgage rate down, you create velocity of housing. It allows people to unlock value of their house. It allows labor mobility because people can move. There's so many, and by the way, whether it's credit card financing, whether it's auto loan financing, to say that it doesn't.
All right, I'm back, guys. What are we doing now?
For particularly the place that it does help, housing, low income, small business, and that's what needs the help today.
Mortgage rates have come down. I mean, the 10-year is at 4.1%. This administration has been steadily moving it lower. Where do you think we see the 10-year, say, at the end of 2026, since the market believes that the Fed will cut rates to 3% or even a little bit more?
So, man, I think the key is, so the answer is I think it's going 3.5 to 4. And I think the key will be maintaining stability in and around 3.5 to 4, because if you get to 3.5 to 4, you get the mortgage rate into the mid to high 5s. If you get the mortgage rate down to the mid to high 5s, you see it today. Why is existing home sales picking up? Why are you seeing, we see it in prepayment speeds in the mortgage market. You see high coupon mortgages that are widening relative to low coupon as a result of the fact you are starting to see some velocity around housing, existing home sales particularly. So if you get the 10-year, which I think can happen in 3.5 to 4, you get the mortgage rate in the mid to high 5s. And by the way, I don't think it has to go much lower than that. That's where you get, what I think is a much more effective operating ecosystem in the economy.
How do you control, or how does the Fed, as you said, focus on rates out the curve? We have a viewer writing in who wants to know, what's the mechanism to do that?
Many. So, if you are the Federal Reserve today, you have, when people say they have one tool, the Fed funds rate, I find that incredibly superficial. The handbook at the Fed has much more complexity to it. You can use the balance sheet, you can use their parts, if you use your voice, a lot what Mario Draghi has done in the past, where you think about things like, gosh, if the amplitude of the curve is at a certain level, if the yield is at a certain level, you think about the size of the balance sheet relative to the duration, and you think about how you can be effective about using the long end of the curve. There's actually not that much, to get too technical, duration DV01 out the yield curve that you can be pretty effective at managing that relative to the front end. To your question, your point earlier, front end, the overnight funds rate is interesting, but it doesn't, moving at 25 basis points every 6 weeks, doesn't do a hill of beans for really, until you move it to where it needs to get to. Unless you're moving it quickly, it doesn't really do that much. But managing further out the curve where corporate finance takes place, mortgage finance takes place, structured finance takes place, that has real efficacy to it.
I got to ask about Bink. You've outperformed the market universally, 1.6%. 1.6 times the return, 1.8 times the return of the ag. So I'm just looking at the ETF that you run here. How have you got Bink set up for the Fed cuts, the path that you expect, and I wonder how the massive investment in AI, the huge borrowing that these hyperscalers are doing to build out this global network, how does that touch Bink?
So yeah, it's a great question. Thanks for asking. So I'd say a couple of things. My job literally is, I'll say there's something I was looking at it the other day. Do you know in fixed income there's 1.4 million unique securities? So you think about all the tranching of the debt, publics, privates, et cetera.
All right, had some work stuff. Hey, we're getting a pullback, so let's watch the pullback, guys, see if we get any opportunities here. Volume is starting to be high.
Yield risk, we take convexity risk. So all we're doing and trying to do for people, because fixed income is pretty complex, is use our teams around the world. So today, do you reduce a little bit of your investment grade credit? Because to your point, there's going to be a lot of AI financing that will come. We've seen it in the last few weeks. Do we need to own as much investment grade credit at tight spreads? Not really. It's not that exciting. Agency mortgages are more interesting. European high yield, European investment grade, we're not seeing as much of that AI, and the growth is moderate, and you get a cross-currency benefit. That's exciting. Having some interest rate exposure in places like Asia or in parts of the emerging markets. So I don't know, the idea being just try and move around dynamically to where the best relative value is around the world. Today, credit is okay. We still own, we still like high yield. We've reduced some U.S. Just because it spreads have come in a bunch. But we're just trying to create, if we can create 6.25 yield for people, stability. The thing I'm most proud about is we keep our volatility down. Like that's in fixed income. If you can get 6.25, and then take the risk in equities, to your point about AI and spend, pretty spectacular returns if you get it right around where the equity opportunities are.
Well, it has been. I'll tell you what, Rick. I put the Bloomberg data on your ETF on Bink into ChatGPT, and it came back with this. It says Bink has outperformed broad benchmarks by a wide margin while taking notably less risk. It's delivered equity-like returns versus the ag with roughly half the volatility, and it's captured most of high yield's upside with much smaller drawdowns. So high praise.
Thanks for saying that.
High praise from ChatGPT 5.1. BlackRock's Rick Reeder, that's just one of the many
All
reasons we
right,
had
so
him on
we're
this
playing
program.
around the
Really
VWAP
appreciate
again.
your time
Let's
this
see
morning.
here.
Let's get a check on what's going on in the stock market right now. You've got some gains here. We're up about 0.25% right now, and I'm just watching for the records. I like the superlatives. Right now, we're trading at 68.71, and we have to go another 0.25% in gains until we get an all-new record. But it just, to me, is amazing that we're looking now at two weekly gains in a row after such a tough November, so much volatility that we're back at an all-time high. Broadcom putting up a 1.5% gain, that adds 3 points. Google putting up a 1% gain, that adds 4 points. Amazon putting up a 0.5% gain, that adds 1.5 points to the S&P 500. NVIDIA on the downside is not enough to drag us down, so it's off 1.2, 1.3%, and that does take 6.5 points off the S&P, but because we see 277 gainers and only 224 losers, it's not enough to drag us off. Apple, Netflix, and Microsoft also a drag on.
You tried to get that short at the top?
Later on in the program, University of Michigan's Director of Consumer Surveys, Joanne Shu, joins us because, as I said, we have
over now.
the release of a ton of data, including the latest
Yeah, it
consumer
is.
sentiment
I know what you
reading.
mean.
We'll get it all to you.
Just don't get FOMO, man. No FOMO, no revenge trading today.
This is Bloomberg Open Interest.
There is no FOMO, Bashfield. Don't start over trading. Take a break, wait for the next setup, man. Yeah, stop over trading. There you go. You got it, man. Yeah. I know what you're doing. I get it. I know what you're thinking. We got news in 14 minutes. All right. We'll take a break. That's a good win, man. Let's wait till after the 10 o'clock. There's a lot of news at 10 o'clock, and I think, it should have an impact. So what looks good now, it may not be that way in another 14 minutes. So we've got all this news dropping right here. All the 10 o'clocks are dropping.
Jerry Jones.
1-1 is 3 in sports, not 2.
So we got to let this hit, and then we'll see where we go. It's PCE, University of Michigan Sentiment, PCE, consumer spending month over month, and then the University of Michigan inflation numbers, personal income, real personal income, expectations. We got tons, core durable goods. Some of it doesn't usually have an impact, but when it all hits together, we may have something going here. It could start a trend,
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
All right.
Middle East and Africa, vibrant resources and high
Just trugging along here.
Opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart
12
your
minutes till
trading
news.
day.
So
Live
it's
from
a little
our
boring. I'll
European
try and keep you
headquarters,
entertained,
we
but
bring you
don't
the
try
day's
and
top
guess,
market-moving
are we going to go
stories,
long
unmatched
or are we going to go
expert
short?
analysis,
We're
and
probably
on-the-ground reporting
in
from
no
across
man's
the
land
continent.
right now.
Tune in to Daybreak Europe, only
And
on
the whales
Bloomberg
could run us in
Television.
one
Context
direction or the
changes
other
everything.
right out of the box on the news drop. So if you're on the wrong side and you get your stop blown out, that's a bad deal. You know what I'm saying?
Time now for our top call. Some of the analyst action in focus this morning. First up, CFRA
Just be careful.
is raising its recommendation on Five Below to a buy after the discount retailer reported blowout third quarter numbers. Blowout is their term, not mine. A number of Wall Street firms are also raising their price targets on the company. So you can see Five Below up 2.5% in today's trade. Next up, Jefferies is upgrading Humana to a buy, saying the insurer's risk reward.
All the whales are fake and gay for not giving me solid moves. That's right.
20% next year. You can see Humana in a decent
Yeah,
market.
all the whales are gay occultists,
Target 313, so we're still a ways
just
away from
doing
that.
evil
Finally,
things in the market.
Synchrony is getting cut at Baird. The firm says the bank's solid fundamentals are now overshadowed.
They're spiritually weak
to lower income consumers, which makes the stock
and not
harder
giving.
to pursue after its recent run. You can see that they have a hold. The stock's down 1%. The target's at $82.
Fucking
So still a
whales,
little
man.
bit, away from here, but not the kind of thing
I want to
that
be a whale one
owners
day.
like to slap a buy on. Coming up, BlackRock's
Maybe we get enough people here to be whale. You know, we can be one whale. We can be all of us together can be a whale.
More on the crypto route's impact on the ETF space next. This
And we can send our own fucking text, damn it. I'm just joking. That's conspiracy. That's conspiracy. Yeah, then we'd be investigated. We'd be the ones that were investigated. That's right. It wouldn't be the old money whales. It'd be us trying to get in on their
Regulators.
game.
We regulate any stealing of his property. We're damn good too.
Up 1,500? Damn, dude. That's a good day, man.
Gotta be handy with the
You
stealing.
can feel
know
good
what I
shutting
mean?
down for the day off that, dude. Hey, Henry. Official Henry. Thanks for the follow, man. I got a couple of minutes. Yeah, lock yourself out. Good job, Hyde. Way to go into the weekend, man. That's a good feeling going into the weekend like that. Good job, dude. Hey, Official Henry. Are you out there? I'll introduce you to the channel. Are you a futures trader, man? Are you learning how to trade? Are you trying to figure out what's going on with it? Let me know. Hey, what's up, man?
What you need to know, it's what you need to think about.
I got, like, if you're trying to get into it, I got a beginner's guide so you can figure out what we're doing here and follow along and see if it's for you.
Ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Contact
Just kind of let me know, or unless you've been trading a while. We got guys here that have been trading. Okay, well, if you want to check out what we're doing and kind of get an idea, I've got a beginner's guide on the about page in a Twitch panel. You follow that, and I also have a Discord for everyone. Well, it's everyone's Discord. All the people that hang out post in there every once in a while. It's starting to build. But if you go through and you got to understand futures, you got to understand margin, you got to understand prop firms, and then there's a series of videos on how to read the chart and understand the chart. So maybe you can set up a basic chart of your own and follow along until you kind of figure out how you want to trade. That's kind of what we're doing. So the channel overall is we're just a bunch of dudes that work full time, trying to have a plan B to make extra money. So we don't risk our own capital in any way. We use prop firm funding, and if you're working full time, you usually you got some play money. And you can pay for evals through the prop firm and earn payouts. And then you take, the idea is either to get funded by the prop firm with real cash or to take the payouts you earn and fund your own margin account for cash. Then that way you're not risking any of your plan A money, which is your real job. You're doing this fully on the side and trying to make it fund itself with money that you would, your entertainment money. And that's the idea. It's kind of a, place for guys to hang out. You get to say whatever you want. We follow the charts all day. I run the stream 24 hours a day during the trade week.
It's interesting.
I'm on the mic from 8 to 4, 4:30 every day, and I do work full time. I got a corporate sales job.
Down 2.4%.
Yeah, cool, man. Yeah, I got a corporate sales job, so I'm on and off the mic as it gets busy, or I gotta take leads. So if I don't answer right away, if you watch all those videos and you got questions, just hop on in here or hop in the Discord, and I'll try and get you up to speed as quick as possible. You know, if you want to download NinjaTrader, I've got a link for that, so you can build your own chart and follow. And that's it, man. That's what we're doing here. We talk about the markets, trading psychology, risk management is huge, and I try and, you know, we just try and talk about reasonable things that you can do to try and get an edge.
Some of it could be sentiment driven, just obviously based.
Okay, yeah, cool,
Bitcoin
man.
is off of its
Yeah,
all-time
we got some guys here from
This
Australia,
ETF was
Europe,
adopted really, really quickly. It's one of the most heavily traded ETFs. period, not just within
South America.
crypto.
There's people
So
from
we
all over.
have
Yeah, that's what I'm trying to
a lot
do,
of
man.
different investor type
You know, low
checks
risk.
we
You're
look
not
at
really
with
risking any money. Easy to hang out, trying to learn, no pressure.
So that tends
You know,
to
type
make
of
the
stuff.
flows much more volatile.
You know,
so you
trying to
much
make
more
yourself
live,
better. You know what I'm saying?
investor base.
Trying to
So,
do
I
something
think
for
some of it,
yourself.
to your point, is sentiment driven. The
You
other
know,
part
and
of
if
it is
plan A
just
doesn't
be
work
somebody
out, if you get,
making
you know, something gets
year-end
funny with
tactical
regular
changes,
work,
maybe
maybe you got
some
something you can
backstops
fall
numbers and
back on and
notice
try
that
for a
people
little
some
while.
from its drop from
You
the
know,
top. So
by no means do you
yeah,
quit your
this is, you know,
regular job to do
there's
this.
obviously a lot going through that ETF.
You know,
What is the competition
but
like
if
for
you can learn
IBIT?
it,
I
it
mean,
can be there to
there
help
are
your life.
clearly other
You know, for
ETFs.
sure.
What are the cost bases like?
Strategy.
Why is this the
Oh,
number
hide
one
strategy on
choice?
gold. I don't know.
Yeah, it's
All right, so we're working this
if
fair
you're
value gap.
gonna
Good to
watch a
have
lot
you,
of them,
official
on
Henry.
the same exact day. I think one, you can't ignore just.
So
the
we got
dynamic
news in
of
5 minutes, guys.
You know, I think a lot of
So
people
I'm
trust
sitting
that
tight.
name.
I'm gonna
That
go grab
said,
some. I'm gonna go
several
grab.
ETFs did take in quite a bit of money
I'm gonna go refill the old
alongside
coffee
what
here while we're
one of the
waiting for
main
the news to
advantages
drop.
they
I'll be
really
back in a
is
few.
just that tradability and that liquidity, and that tends to attract the much bigger fish, which is why most people just tend to now default to IBIT. But that said, Fidelity's got some decent assets in their product Bitwise, so there's been some pretty decent adoption. But it's almost like comparing SPY to some of the other ETFs. There's one that just tends to be bigger and more liquid, and that's just what's happening with IBIT as well.
All right. Thanks so much. We have a break coming. I'm running up against a break. Otherwise, I'd have a million other questions for you about ETFs and the SEC that have come up this week, but we'll talk about those throughout the day and next week. Athanasios Sarafagis of Bloomberg Intelligence, one of the triumvirate of our ETF specialists, together with James and Eric. Tune in to ETF IQ on Mondays. You'll see that whole crew usually. It's at 12 p.m. Mondays, New York time. Let's take a look at what's going on in markets right now. We're up on the S&P 500 by 1/3%. The NASDAQ gaining by 2/3 of 1%. Small caps still down a little bit, but we're going to get a ton of economic data in about 4 minutes' time that could well move the market, including consumer confidence. And for that reason, we're going to talk to the University of Michigan's Joanne Shu. I'm sorry about last week, but Ohio State really deserved the W. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools.
All right, I'm back, guys. We got 1 minute till the news. 1 minute till the news. So it's counting down if we look here. Here, let me get this out of the way.
Around 7%. And I think what's important is that we have programs that help those 7%.
Here we go, 44 seconds. I like this little countdown we got.
I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you
Official and you're going to be chilling. All right, brother.
tasks happening everywhere, and that's what AI is most helpful in improving.
I saw that it was an uptrend at around 637 and went long. Okay, Hyde's talking about his gold play.
Understanding what's actually happening.
All right, guys, 14 seconds to the news drop. Let's see what we get. Let's see what we get. Do we get a Shrek? Do we get a Shrek right up the you know what, or do we get dumped on? Here we go. All right.
This is Bloomberg.
Here we go. Oh. All right, we got a lot of volatility here. Volume coming in. Michigan's 5-year inflation's 3.2%. I think that's a good number when it goes down. University expectations. All right, here we go. CPI. I'm sorry, PCE. 0.3, neutral. This is all neutral to good news, it looks like.
Marriage made in Hollywood heaven.
You're a wizard, Harry.
Neutral to good news.
The world's largest streaming network, Netflix.
All right, let's see what kind of logic plays out after this drop.
For almost $83 billion in
So far this morning, neutral to good news on everything is how I would see it. Is how I would see it.
It's going to help us achieve our mission.
Let's see how, you know,
and to bring people together through
I'm not an economist or
The deal
anything.
still needs approval from shareholders
I'm not
and
a
federal
economist.
regulators. Syracuse University pop culture expert Robert Thompson.
Forecast, met forecast. Everything met forecast.
The shape of this ever more consolidated world
Interesting,
of
huh?
content and entertainment and all the rest.
CBS News parent company Paramount, Skydance, and Comcast were also
Yeah,
vying
kind of
for
feels that way,
Warner
don't
Brothers.
it?
The Pentagon's
Feels like
reported a new
the
strike
information
on
was
alleged
flat
drug
and it was
vote
already
out
baked
South
in, huh?
America, as lawmakers in Washington
So I guess is the bigger trend, if you zoom out, is the bigger trend, are we trending down or are we trending up is the bigger trend? Because it sounds like that's probably what we're going to follow. If I was trying to think through it like a logical person that looks at things for face value on whether it makes sense or not, but you know that that's not how the real market works. The person that thinks like that, it'll turn into a full-on retard. Because it won't make sense. All right, so we're pushing higher on the ES. ES is much more aggressive than the NQ right now. NQ is not moving up. So if you look at the NQ, NQ is running flat, ES is running up. That's interesting. So is the NQ going to follow the ES? It may normally will.
Michael Wallace, CBS News.
Find the nutrition labels difficult to find on food packages? The American College of Cardiology is calling for changes.
Right.
Dr. Kim Williams.
We would want it to be on the front where people can see it.
Right.
And
that's a corporate thing.
To know what the big four are: saturated fat, cholesterol.
After every paragraph, you got to say right. While you're trying to make a point.
President Trump, Canadian
that's not your own
Mark
thought.
Carney, and Mexico's Claudia
That you basically plugged into AI.
In Washington for the big draw. CBS News LA's Elizabeth Campbell.
And you're trying to just get through another day with your overbloated salary and justifying your existence. So when you hear somebody say right, that's what they're doing, just so you know.
And more anticipation for the World Cup next year.
This is CBS News.
You'll hear it a lot in Bloomberg. If anyone wants to watch on YouTube, that'd be cool. I gotta figure out how to get into the algorithm over there. All right, so ES is taking off, guys. NQ, did anyone play into that news? NQ is not looking as strong. It really isn't. It looks like, let's see if they get organized.
A retired basketball star has a court appearance scheduled in the South today.
Basketball legend Michael Jordan is to testify today in federal court in Charlotte, North Carolina, in an antitrust case against NASCAR. The NBA Hall of Famer co-owns one of two racing teams suing NASCAR, claiming it operates as a monopoly. The two teams have refused to sign agreements that guarantee a spot in races and a payout from NASCAR. Jim Crisula, CBS News.
Taylor Swift might just understand. A former Brazilian ballerina has just unseated the pop star and AI entrepreneur Lucy Guo to become the world's youngest self-made female billionaire. 29-year-old Luana Lopez Lara co-founded the prediction market firm Kalshi 8 years ago. Forbes says the platform hit an $11 billion evaluation.
Oh, this is looking strong, guys. ES is blowing it out the roof here.
Deborah Rodriguez,
ES is like
CBS News.
kicking the bears in the teeth.
Bloomberg Intelligence.
You know what? Is Hogwarts here? Hogwarts likes that bear video.
The uncertainty of tariffs.
Let's take a look at the sectors and how they perform.
It's like that woman took that bear that attacked her and just put him in a headlock and just like giving it right to him now. Bears are getting ripped apart right now. We're into a fair value gap up here. Maybe we'll respect this. Oh, sorry, I blew the strategy out. Give me a second.
On Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you can find us. Norma Linder, she's sitting in for Scarlett Fu. Scarlett is still on assignment today. People are telling me that she'll be back in on Monday. So Scarlett, Norma Lind and Paul Sweeney are live here, bringing the Bloomberg Intelligence program to you. It is a big media merger day. Netflix buying Warner Brothers Discovery. So we'll have some more on that. Joanne Shu is going to join us coming up. University of Michigan, the UMich data came out today. A little bit better than expected. We'll break it down. Bryant Van Cronkite, Senior Portfolio Manager at Allspring Global Investments, give us his thoughts on the market. Then we're going to go to Geetha Ranganathan. She is the media analyst for Bloomberg Intelligence. Get her thoughts on this huge deal. Again, Netflix buying Warner Brothers Discovery. Monster transaction there. Woo Jin Ho, Bloomberg Intelligence Senior Technology Analyst. He's going to recap some of the tech names. HPE, Hewlett-Packard Enterprises reporting some earnings as well. Then we're going to play back a chunk of an interview from earlier today. Brian Moynihan, Bank of America CEO, spoke with or is speaking with Bloomberg Television's anchor Francine Locke. So we'll break that down for you and bring that for you right now. Let's kick off the Bloomberg Intelligence.
All right, so I'm watching the ES right now because we do have a fair value gap that we're working. So that's a sign of resistance. So out of the ES and NQ, damn it, sorry guys. The only sign of resistance I have right now is this fair value gap.
All right, we've got a lot of eco data to get to. A little bit dated, but it's here nonetheless. Let's get right to it. So we have the core PCE price.
Did anyone sit through the news and come out okay on that? Or how many people tried to play that game and got chopped up? Who's funding the prop firms today and who's waiting for their setup in normal volatility?
Personal income, personal spending for September. The expectation was for 0.3%. Came in a tick higher, 0.4%. Personal spending. The expectation was for 0.3%. 0.2%, came in right on target with 0.3%. Now we go to UMich sentiment. That's out too, and like you said, it's a tick higher. The expectation was for 52, came in at 53, so things are pretty steady. We have Michigan sentiment a little bit higher. All that said, we go to the markets. So we have stocks higher, yields advancing. We have the Nasdaq up about 0.5%, 128 points. We have the S&P 500 up 0.4%, 32 points, and the Dow rising 0.4%, 228 points. The 2-year yield 3.54%. That's up 1 basis point. The yield on the 10-year 4.11%, and that's up about 1 basis point. The Bloomberg Dollar Spot Index weakening by about 0.1%. Over to company news, and yes, Paul talked about it. Netflix agreeing to buy Warner Brothers Discovery, that $72 billion cash and stock deal. Netflix becoming the owner of HBO Network, Warner Brothers assets, including studios, film, and TV archive. So let's look at the shares right now. Netflix shares down about 0.1%. We have Warner Brothers Discovery up 3%. And in other news, Elon Musk's X hit with a lower than expected $140 million fine for violating the EU's content moderation law. The European Commission claims that X has paid for a blue tick symbol while it misled users. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Norm Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Norma Linda sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by Commonwealth, joining over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow in your own terms with a partner dedicated to your success. Go to commonwealth.com to learn more. Let's get a sense of what's moving in the stock market today. We can do that with Bloomberg's Christina Kino. She joins us here in studio. Christine, what are you looking at?
We got to talk about Netflix, Paul. Biggest deal of the day, certainly, possibly of the week, right? So Netflix shares, though, not taking it very well. So ticker NFLX. Those shares are down about 0.3% at the moment, but earlier they were down more than 5%. So investors initially taking this deal as a negative. And again, let's recap, right? So Netflix agreeing to buy Warner Brothers Discovery in a deal worth $72 billion in equity value. Enterprise value is $82.7 billion. Warner Brothers shareholders receiving $27.75 a share, both in cash and Netflix stock. And before this deal gets done, which is expected to be done in the third quarter of 2026, Warner Brothers will complete the plans.
If it breaks 6,900, might fly. Yeah, I'm trying to figure out what we're doing. You know what I'm saying?
TBS and TNT. And then on Netflix side, apparently
That's what I'm trying to figure out what we're doing.
$59 billion, or up to $59 billion in bridge loans from banks including Wells Fargo, BNP, and HSBC. So perhaps investors may be just pausing a little bit, given that they're going to be taking a little bit of debt and then maybe parsing through the deal. That's why we're seeing a little bit of caution today.
Yeah, really big deal. We're continuing.
Looks really strong, though. It looks like we might actually, you know, find a trend today that we can get in on at some point. I would like a pullback, though, so I could get a firm signal. I'd like it to respect this and pull back to the 20 EMA. I'm sorry, guys.
So the company is now
ES is
comparable sales to be up
being a little bitch today on the strategy.
Current fiscal year. And, you know, Ulta really kind of capitalizing on the trend among shoppers. Yes, they are pulling back on some purchases, but not on their beauty products, not on their skincare. So that's still something that they're spending money on, and Ulta's capitalizing in that by building out their loyalty program. And as we know, you know, the strategy has really differed greatly from Sephora, for instance, which is their main competitor. Like Sephora's focusing on urban centers, Ulta very much focusing on the suburbs, and that's winning big for them.
Hewlett-Packard Enterprises.
Hewlett-Packard Enterprise, yeah. So that stock also not doing well this morning. So ticker HPE down just about 1.6%. And, you know, we heard from the company, they're saying that their current quarter sales falling short of estimates. Revenue now at, or estimated to be at $9 billion to $9.4 billion. Previously, or rather the estimates among analysts was for $9.88 billion. We also have the CEO, Antonio Neri, saying that their sales in the fiscal fourth quarter missing estimates, and they're pointing to basically delays in their AI workload deals. You know, some of those were pushed in 2026. Yep. One of them is because of a delay in a Europe data center that's not built yet, which is, you know, part of the issue of banking on data centers. The build out takes time. And then there was another issue with the U.S. government. Essentially, their agreements with the U.S. government just have been delayed by the shutdown. So sounds like a bit of a bureaucratic delay there.
All right, very good. We're going to talk to Bloomberg Intelligence analyst Woo Jin Ho later this hour on. We'll follow up on HPE. Christina Aquino. Thank you so much for joining us, Christina Aquino. She covers all of the stocks for Bloomberg. For more conversations like
All right,
this,
guys.
subscribe to our stock
I'm trying to get
reports.
the
Listen
ES
for
back up
5-minute
here. It looks
audio
like it broke
reports
that
on the
curve.
biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcast, Spotify, or anywhere you listen. As Christine was mentioning, UMISH data coming out, 53.3, and the consensus was 52, so a little bit better there. The last period was 51, so some improvement there. Let's break it down with Joanne Shu, Surveys of Consumers Director for the University of Michigan. Joanne, what do the numbers tell you today?
Okay, so we
from
broke that
consumer?
fair value gap at
Consumers
6,900
feel a
on
little
the
worse
ES.
than about the economy that they did last month, and that's certainly good news. Probably the strongest part of today's release was inflation expectations. Those ticked down both in the short run and the long run, and we're at the lowest levels that we've seen since February of this year. So it is definitely welcome news to see that consumers believe that inflation is not going to be as bad as they were fearing back in April and May, but at the same time, they're still expecting inflation to remain high for the foreseeable future.
How are you factoring this into what we've been seeing? We're just coming off of Black Friday. We've been seeing a bit of resilience for the consumer here, but then you are still seeing people trading down. How are you taking all this into account?
What we're seeing out there is very much consistent with what people are telling us on our surveys. Consumers are not feeling strong about the economy. They are quite worried about labor markets. That is pretty much the one major development this year that's very different than what we were seeing
so
in 2022 at the height of the post-pandemic.
Let's see if the 6,900 level is going to be
So,
psychological or not. Where right now we're working through it, like we're chipping away at it. So
consumers are not feeling confident about their incomes going forward.
it looks like the long at the open was the real move.
We have
right before the open.
Consumers expecting unemployment to go up. So overall, they're not feeling very confident, and I think that's one of the major reasons we're seeing consumers being
This was
choosy
the
with their
long.
dollars and looking for value. At this time, again, labor markets.
All right, so I need some
people
movement here. I
more or
need
less
I
have
need a
been
good
able to keep their
pullback. I need the
jobs, but if
EMAs
that
to get
starts
closed
change,
together
I would expect
and
a
figure out
pretty
which
rapid,
direction we're going to
pullback
go
from
here.
I know you guys.
Hey Roomba, how you
in terms
doing?
of sentiment,
Yeah,
you
volume's
down
starting to pick
current
up.
Conditions, which came in at 50.7, which was weaker than consensus. But the expectations going forward came in at 55, and higher than consensus and higher than last period. Is that a typical type of trend there?
We're going to need to see if that sticks at the end of the month because this is based on the preliminary data for December. But by and large, what we're seeing on the expectations index is consistent with the softening of people's outlook for inflation. And we know that high prices as well as incomes.
I'm good. Only up 187 today, but it's better than being down. Yeah, man. I mean, honestly, it's a psychological win to go into the weekend in the green. You know what I'm saying? So there's no reason to force anything from here. I don't think.
Welcome news, both for consumers themselves as well as policymakers.
All right, Joanne, thank you so much. We appreciate it. As always, Joanne Shu, Surveys of Consumers Director at the University of Michigan in beautiful Ann Arbor, Michigan. We got some green on the screen here today, Nora, with the S&P up about 0.5%. The NASDAQ up about 0.6%.
Yeah, I mean, we're seeing communication services and information technology really buoying the S&P 500 higher. I'm taking a look at the VIX as well. It's around the 16 handle, we'll call it.
Yeah, just below 16. I mean, to me, that's kind of a more normalized kind of level for this marketplace. He gets down to like 12 or 13, and that's quite low. Anything above 20 kind of suggests a little bit of angst in the market.
All right, guys.
15, 16 seems pretty reasonable here. So, again, stocks higher here. Yields pretty steady here. The 10-year Treasury, 4.11%. And it's been a big deal day, certainly in the world of media. This is the first time Netflix has ever made an acquisition.
When we're stair-stepping like this, that means
$75 billion deal is extraordinary.
It's a little more controlled.
For everybody else, all the competitors?
I don't know. It's we were talking to Jason Fasten.
I like the way the ES looks right now. ES looks a little cleaner to me for some reason.
Paramount Skydance, in particular, what do you do? Because you are, to be polite, subscale, and even more so today. What do you do there? Comcast less so, but still their streaming business is subscale according to Jason Bazinet. And those were the most likely ones to make this acquisition, but they didn't get it. So what did they do? I don't know. It suggests maybe even more consolidation going forward. So I'll have to see how that plays out here. But so this is a huge deal in terms of dollars. it's transformative for the industry. You put together the biggest streamer with one of the big 3 studios out there, and there you go, boy.
From there,
I don't know. Integration risk, I guess. Regulatory risk, I guess. Pretty solid there, but we'll see how that plays out. But they had their call this morning, and we'll see how it plays out. S&P up 38 points, 0.5%. We'll have more coming up. This is Bloomberg.
All right, so this is the boring trade. You got to kind of sit on your hands until you get your signal, you know, guys? I know these are things we talk about every day, but when the chat's, you know, when people are just kind of sitting there, they haven't made their money today and chat's not banging, sometimes you can talk yourself into things. You can talk yourself into things, and that's when you get yourself in trouble. You get yourself into a position where you should cut it as a loser, and you won't. You're like, well, I'll just get out of it and wait for my real setup. And sometimes it never comes, and that's the beginning to getting chopped up over trading, revenge trading, and then blowing an account just by not being patient.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, Netflix shares starting to see a turn right now, up about 0.2%. We have Warner Brothers Discovery, their shares up about 0.3%. That's after announcing an agreement to buy Warner Brothers Discovery. Netflix agreeing to buy Warner Brothers Discovery. A few other
all right, guys.
We'll start with shares of Hewlett Packard Enterprise, HPE. Their shares down about 0.5%. The company gave an outlook.
Not sure where we're at right now. Our news is in for the day, that's for sure. So our news is in. Trump does sign some executive orders at 3 o'clock.
Better than expected results results in the third quarter. Ulta shares up about 13%. Victoria's Secret shares up 18% after reporting better than expected sales. Also lifted its outlook for the year. Stocks extending their gains as after a reading of the Federal Reserve's preferred inflation gauge, we had core PCE. It rose 0.2% in September. That was in line with expectations. We go to the yield space. The 2-year, 3.54%. That's up 1 basis point. The yield on the 10-year, 4.11%, and that is little change. The Bloomberg Dollar Spot Index weakening by about 0.2%. Now, for on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Nora and Paul.
All right, thank you, Lisa, for this breakdown here. Let's take a check at the markets. I'm looking at the S&P 500 up about 0.5%. Dow Jones Industrial Average just about the same, but the NASDAQ up about 0.7% as we speak. We're really seeing stocks continuing to gain here as we're really seeing green all across the screen. I'm Norma Linda here for Scarlett Fu, who's on assignment. I'm here with Paul Sweeney today, and we're really just digging into what's happening here with the market and how we're still continuing to see this green across the screen. We're joined by Bryant Van Conkrite. He is a senior portfolio manager at Allspring Global Investments, and hopefully he can give us a bit more understanding about what's going on right now. Of course, we've seen some really strong returns this year, double-digit gains, Bryant. People are really nervous coming into this year, though, but we are seeing some resilience here in the market. What's your view for 2026?
All right.
Yeah,
All right, so it seems like we found a level here.
Well, look, inflation's coming down to a level that's now reasonable. It gives the Fed the chance to cut rates, and that's why I think we're seeing optimism in the markets right now. There's a lot of built-up energy going into 2026, whether it's from Fed cuts that have already happened, that are going to continue to happen, whether it's the tax benefits, both corporate and consumer, that's coming from the one big beautiful bill, whether it's the AI CapEx spend. There's a lot of energy that's coming into 2026, which makes me think that it could be a really good year for the U.S. economy and for markets, at least in the first half. But that doesn't mean we can be complacent. I think we need to start thinking about how to rotate into what is next when it comes to the AI theme. What's next for markets in terms of what sectors are attractive? So opportunities are out there right now, and consumers, I think, are feeling the pinch of old inflation. But I think the market's got a lot of opportunity for investors to be pretty offensive here.
Offensive, I guess in 2025 really meant kind of being long that AI trade and big tech in general here. What's offensive mean in 2026, do you think, Brian?
Well, staying in tech, I think it means rotating a bit. I think that we're going to see the next 3 phases of AI begin to play out. So phase number 1 from here is the expansion phase. The first phase is all about just a couple companies, right? But we're going to see that expand now to companies like Teradyne, for example, who are going to help test and package more broader semiconductor chips that are going to be beyond just the NVIDIA GPUs. Then we're going to see the next phase, which is implementation. How do we take this build out and start to implement it within the broader landscape? We'll need names like Keysight, who are doing R&D and simulations on edge devices that will help bring this to companies. And then finally, how do we realize the value from this? How do companies and consumers actually take what we've now built in society and make it into real savings? And that's going to be a company like CDW, who's going to help implement it across small and mid-sized businesses. So there's more phases that we need to start thinking about with AI, but that's the offensive mindset I think people could have going into 2026.
What sectors are you a bit more apprehensive about as we're heading into next year?
Well, I think the consumer is giving people a lot of angst, but I'm actually pretty positive on discretionary and a little bit more negative on staples. The consumer angst is so great right now around affordability, but it has the attention of the Fed. It has the attention of the administration. And as a result, I think the consumer discretionary stocks, especially around housing and durable spending, could actually be quite attractive in 2026. So I like names like a D.R. Horton or a Somni Group, which is the old Tempur-Pedic mattress company, where I think turnover and housing-related spending can pick up. But on the staple side, I'm more worried. I don't see a lot of room for those companies in the food category, for example, to drive their own destiny. There's not a lot of upside leverage to volume. The pricing power is probably coming down. And so I'm favoring discretionary over staples coming into 2026.
Brian, we've had really good earnings over the last several quarters here. Is the earnings environment strong enough to support this market broadly defined?
I think it is, actually. So the earnings expectations for the large cap universe continue to do pretty well, and they're going to broaden out. The Mag 7 in this year had a really strong earnings growth rate. The other 493 did okay, but I think we're going to see the 493 inflect as the AI theme, the economic theme begins to expand.
Here, I got to make a call here in just a minute. All right, so it looks like, yeah, it does kind of look like we're going to start rolling over here. Maybe retest some zones. ES doing the same thing. ES seems to be leading the NQ today for sure. So maybe we'll take our cues off the ES.
higher quality small caps could be a big miss.
And probably get a better entry on the NQ, maybe.
The lower quality trade in small cap has done really, really well in 2025 and begin to shift more towards the quality small cap.
Maybe.
Growth and real earnings growth inflection in the first half of next year.
All right, Brian, thanks so much. Appreciate it. As always, Brian Van Cronkite, he is Senior Portfolio Manager at Allspring Global Investments from...
All right, I got to make a call. I'll be right back.
Merger Friday here. Netflix agrees to buy Warner Brothers Discovery in a historic combination, joining the world's dominant paid streaming service with one of Hollywood's oldest and most revered studios. To get the bottom of this, get some real analysis with this, we turn to Geetha Ranganathan. She covers all the media companies for Bloomberg Intelligence here. It's interesting, Geetha, you could argue that Paramount, Skydance, and Comcast arguably needed this Warner Brothers Discovery company more than Netflix, yet Netflix comes out on top here. What do you think the strategy for Netflix is?
Yeah, thank you so much, Paul. So definitely Netflix here kind of really looking at the future. I mean, we are, I think, at, this cusp of the media landscape kind of completely changing with the advent of Gen AI. And I think the barriers to entry for anybody is going to come down substantially because the costs to produce content are going to come down substantially. And I think Netflix kind of sees the writing on the wall and says that they really need to play the long game here and deepen their library with a lot of the beloved and global franchises that Warner Brothers Discovery has to offer. So absolutely not seen as existential for Netflix at all, but I think they see it as existential from a long-range perspective. But of course, the big losers here definitely Paramount and Comcast, at least in the short run.
And talking about Paramount and Comcast here, how are we thinking about the added pressures that they may be potentially facing if we think about the fact that they are lower or subscale, I should say, in terms of their streaming in comparison to Netflix?
Yeah, this is pretty much game over. We already knew that Netflix had won the streaming wars. Now, without a shred of doubt, they are going to cement their dominance. I mean, you just look at the numbers, 450 million global streamers. Yes, Paramount Plus was already a subscale streamer with only about 70 million subscribers. Peacock is even in worse shape with, only close to about 40 to 45 million. So this really kind of puts, tremendous pressure on them, and they really have to come up with some kind of strategy to fortify their businesses. Maybe they have to look at a potential combination. I don't know what it's going to look like.
Geetha, we spoke earlier this morning to Jen Rhee. She covers all the antitrust stuff for Bloomberg Intelligence, and she suggested that this will face a very difficult regulatory review. What if that is in fact the case? What do you think Netflix would be willing to do to maybe get this deal done? Would they think about selling some assets here?
They definitely could. So far, Paul, they're saying all the right things. They're saying everything that should assuage any regulatory fears. That said, I mean, you are combining the #1 streaming service in the world with the #3 streaming service. So obviously, a lot of red flags there potentially. They are, however, saying that this is going to be good for consumers. This, is going to provide more consumer choice. It's actually going to lower costs for consumers because, they're going to be able to sell a bundle of HBO Max with Netflix, potentially lowering costs by, 30, 40%. So that's one thing they're saying. The second thing where there was obviously a lot of concern, and not just from regulators, but also from Hollywood content and Hollywood moguls, would be that, Netflix has typically been very anti-theatrical. So they talk always about day and date releases, how movies should be released directly to streaming. And so obviously there's been a lot of backlash from the exhibitors, from the theater, from the creative community. But Netflix again kind of placating everybody, saying that they are going to continue the Warner theatrical strategy by continuing to release those 15, 20 movies year after year in the theaters. And the last thing that everybody has been worried about is we have to remember that Warner is actually a huge content supplier. So they supply all of these big shows. When you think of Ted Lasso on Apple TV, that's a Warner show.
Yeah.
So again, are they going to pull? The big question is Netflix going to pull back on all that content? And just this morning, Ted Sarandos said on the call that no, we're not. Warner Studio is going to continue to do whatever it has been doing. But again, not really sure how that's going to work for Netflix if they, just continue to do that. But so far, they're saying all the right things from, a regulatory standpoint.
So, from a consumer experience standpoint here, if it's Netflix and they've got Warner Brothers Discovery here, we're thinking about HBO Max and things of that sort. Essentially, are you going to maybe see some sort of merger of experience when you go onto Netflix? You're also accessing HBO, or will it be more of a bundle mindset here?
Yeah, so that is what has been really difficult to parse out, Nora. So they were asked this question again repeatedly in this morning's call. Is HBO Max kind of going to be like one of the tiles that you would see on a Disney Plus, right? You go and you see Pixar and Marvel, and is HBO going to be something similar to that? Or are they just going to continue to run the two services completely independently? If you kind of run the math, it just doesn't make sense for them to have two separate streaming platforms, because you have all of the overhead expenses and the corporates and all of that to accompany that. So that doesn't really make sense. So I think at some point they basically fold in HBO Max, all of that content onto Netflix, although they haven't necessarily clarified that. But I think that basically helps them from a cost perspective, helps them from a content perspective, and then really helps them with engagement, which is really what they're looking for. Deepen engagement on the Netflix platform. How do you do that? By increasing the amount of content. So I think eventually that is the game plan. But again, no specifics from the Netflix management team just yet.
All right, Geetha, thank you so much. We know you're busy today, but thanks for a couple minutes of your time. Geetha Ranganathan, she covers all the media companies for Bloomberg Intelligence. Has been doing that for like 15, 16 years. She knows what she's talking about. She knows all the parties involved. So good to get some breakdown there. If you want to read her research, you can go to BI Go and read her research. She's been covering this a deal for a long time here. Looking at the MA Go function on the Bloomberg terminal and seeing which advisors are getting paid on this deal. For the acquirer for Netflix, Moelis & Company, Kenny Moelis, the great investment bank, standalone investment banks, a lot of media chops in that place. And then Wells Fargo, which is really interesting to me. Wells Fargo, representing the buyer here in a monster deal. Skadden is the legal counsel there. For the seller, for Warner Brothers Discovery, it's Allen & Company. Again, another deal, I think, coming out of the Allen & Company conference in the summer. They meet in the summer, they talk deals. Seems like 6-9 months later, you see something crossing the tape. Maybe that happened here. I don't know. So Allen & Company, Evercore, another good boutique investment bank that's really focused on the media space. And then, of course, JP Morgan and Wachtell on the legal side. So a lot of fees there for the investment banks, a lot of fees for the bankers for a deal here that's got an $82 billion enterprise value. There's going to be $59 billion of bridge loans. So again, Wachovia is going to be leading that with HSBC and BNP Paribas. So again, some big fees coming Wall Street's way from this mega merger in the media space. This is Bloomberg. Good morning.
Oh, Hogwarts. Hogwarts is a perma bear. He's short. He's always looking for the short. And he knows it. That's why he's asking if anybody else wants in. Yeah, that's funny. Yeah, that's right. Hogwarts is actually the bear in that video we play when the bears are taking over. All right. With options, it's a bit easier. I don't know why the I don't know. It's kind of feeling heavy, isn't it? It's you know, I just don't have a signal, but it looks like we're getting ready to roll over, but we got to break through the 20 EMA to get some, you know, to kind of get some steam. Same on the NQ. I would like to see it roll over really hard and then have the EMAs get together so I can get a good signal and figure out where we go next. That's kind of where my move is going to be. Okay. All right, guys. I got to make another call. I'll be right back.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we have stocks advancing on this big day of big news in the world of Hollywood. Netflix agreeing to tie up with Warner Brothers Discovery. Well, look at their shares now. Warner Brothers Discovery up about 3%. We have Netflix up about 0.5%. Sentiment toward technology stocks getting a little bit of a boost after NVIDIA partner Hanhai Precision, also known as Foxconn, reported strong sales. And More Threads Technology, it's a leading Chinese AI chip maker. It jumped 425% in its Shanghai trading debut. That said, let's go to the NASDAQ, up 0.6%, 149 points. The S&P 500 up 0.4%.
All right, Official Henry. We'll see you Monday, man. I start the stream up 6 o'clock Eastern New York time Sunday night.
Over to the yield space, the 2-year, 3.54%. That's up 2 basis points. The yield on the 10-year, 4.12%. And that's up about 1 basis point. The Bloomberg Dollar Spot Index weakening by about 0.2%. And Bitcoin down more than 1% at just above 91,000. In company news, we have Southwest Airlines. They lowered their operating profit target for the year. That was due to a fallout from the government shutdown, also higher fuel prices. And Cloudflare said it has fixed that issue that led to the websites for several banks, Shopify, Zoom, LinkedIn, to all go down earlier today. Its shares are recovering this morning. They were recovering. Now they're down about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Nora and Paul.
All right, Lisa, thank you so much for that. I've got my eyes on this market, and we're seeing a lot of green on the screen. And of course, this is being led by communication services and energy if we're looking at the S&P 500 sector. What we've really had our eye on so much of this year has been the tech space. And of course, we did get some earnings out of Hewlett Packard Enterprise, that's ticker HPE. We did see that this essentially disappointed what investors were looking for here. We did see the company gave an outlook for sales in the current quarter that fell short of the high expectations, particularly for its AI server business. And we've got the best person to help us break this down. We're looking at, we're going to be chatting with Bloomberg Intelligence Senior Tech Analyst Woo Jin Ho. He's coming to us out of Princeton, New Jersey. Tell us a little bit about what you took away from this earnings report.
Yeah, thanks for having me. So I actually liked it. I know there was a high focus on the revenue numbers for the upcoming quarter, but EPS, they actually raised the EPS guidance from 220 on the low end to 225 and 240 on the high end to 245. So essentially the strategy that Antonio laid out with the Juniper acquisition is working out as planned. It is cushioning some of these higher commodity costs and the higher AI mix. So, despite the disappointing 1Q sales outlook, the overall year should be fine.
So the company's talking about, substantial interest in its AI servers, and they call out governments, and that's kind of new for me at least. I guess I'm kind of used to talking about the hyperscalers, whether it's Microsoft or Amazon. Talk just about maybe other categories of people that may be making some AI investments in servers.
Yeah, hey Paul. So let's think about the sovereigns. Let's think about the Saudis, the U.S. Federal government. They are going to start ramping up their own AI initiatives as well, right? The Department of Energy, Department of Defense, they're customers of HPE's supercompute, and they're going to convert from supercomputing to AI servers as some of these configurations start rolling out. They already, HPE already has some agreements with the Saudis, but and that's one of the issues with HPE's outlook. It's more on the timing of when these deals start flowing through. It's being pushed out more towards the second half of the year versus the first half. But they are going to play a much more meaningful role in the future, not only for HPE, for Dell and Supermicro as well.
So how are they doing in terms of comparison to competitors in this market?
Well, I mean, HPE has made the strategic intent on not going after these lower margin AI server deals. If we look at some of the competitors, the way I have Dell modeled out, they're going to do roughly about $40 billion in AI server revenue, Supermicro around the similar level. HPE for next year is probably going to do roughly about $5 billion in AI server revenues in fiscal 26. Now, look, that $5 billion is nothing to sneeze at, but relatively speaking, it's going to be much smaller in scope and scale.
Why are they smaller? Why are they lagging? And is there a plan for them to kind of narrow that gap?
Yeah, I found that to be disappointing in terms of lagging. I do think they had the assets to do so. But at the end of the day, the management team at HPE is very focused on shareholder and shareholder value. These AI server deals are very low in margin and highly competitive. So they're not chasing after these lower margin deals. And one of the strategic reasons on why they're going after, HPE is going after these sovereign deals is because they think it's going to be higher in margin. And hopefully that does pan out for them, which is one of the reasons why that, we're talking about 1/5 the size of the deal flow for them.
So outside of HPE, what else are you really keeping an eye on right now in this tech space?
Well, the AI play is going to be pretty important. But I will tell you, the DRAM story is actually going to start materializing as a potential headwind for all of the hardware space. One thing that we didn't discuss on HPE is the 300% rise in DRAM prices is going to affect their server sales. They think they're going to pass that through to customers. I'm a little bit skeptical, but I think the rise in commodity costs and DRAM is going to be the new tariff.
All right, guys, I'm caught up. It's been a little busy this morning, real work. All right, so we got a red forecast cloud working here. ES is not as ambitious. ES is still holding on.
The hyperscale cloud guys are sucking up so much of this memory.
So it looks like first stop 80, 68, 91, made 20%. Hey, good. Hey, good. Good short,
and,
Hogwarts.
some of the
That's a
standard
good short.
DRAMs, they're not producing as many DRAMs, and
Nice
the price
short.
is not growing. There's no.
So 68.91's first target. Okay, right at the bottom.
AI, and we're talking about HPE
right
right now in
here.
particular. Are expectations
Okay.
just too high? Are people putting so much pressure on these
This
companies?
is a pretty
and we're
strong
seeing these,
candle
you know,
here.
these estimates,
Let's
and
see
we're
how
not
the
really
NQ
seeing them
looks.
delivering, or what's your read on that?
Well, so let's talk about HPE in particular, right? The way I wrote my.
All right, so I'm just hoping to get one good setup today, and I can make the most of it, really.
Depends on the lens that you look at, right?
One good setup.
From a sales lens, the AI sales did disappoint, right? But if we think about it from an earnings and a cash flow lens, the networking business actually did as well as it should have. And it's doing the work that it's supposed to be doing in terms of cushioning some of the lower margin business. And quite frankly, I still think that there's potential for earnings upside if networking execution strengthens going into the rest of the year.
All right, here's my dumb. I just want to ask my dumb tech question today before we let you go here. If DRAM prices are up 300%.
All right, so now we're looking at, it's at the 200 EMA. Are we going to support that and go higher and change back to a green? Green forecast cloud, which means the buying is going to come back.
Should have had me on 2 years ago.
So we got it. Let's see what happens with this candle. Stochastics look like it's going to push it back up again. So I need the EMAs to get closer so that we can get some kind of cross so that I can get the clear signal. But the ES looks really strong right now in this candle.
So we'll take a look at that again. HPE reporting some.
ES looks really strong.
It is a big story. They tell us it's going to get even bigger.
Absolutely.
The dollar amounts are staggering. The amount of capex that's being spent, and now the question I think is being asked more and more and more is, okay, let me see some return on all of this investment, either in productivity or in revenue or other parts of the income statement. All right, earlier, Bank of America CEO Brian Moynihan, he spoke with Bloomberg's Francine Lacroix after the first bank's investor day in almost 15 years. He was first asked about the U.S. consumer and said he is confident in the U.S. economy being driven by the U.S. consumer, but is worried about non-tariff barriers in certain regions, such as the EU. Let's take a listen.
The U.S. consumer is doing fine. And so for the month of November 25 versus November 24, the amount of money are 70 million consumers who's pushed about $4.5 trillion.
Well, it ain't over yet.
In the economy every year. They pushed in about, for that month, about 4.2, 4.5%. And so it was.
Well, anytime you can get out with your profit, man, you can get set back up to go back in. It's fine.
Spending was solid and good, and it's consistent with a growing economy. Our team has.
Anytime you take profit off and you can sit back and look for another entry, I think that's the best strategy. Than saying I think it'll go lower and holding on to it than get your face ripped off by a Shrek candle. You know what I'm saying?
Yeah, there is, and so this is why
there's too many Shrek candles going on around here lately.
Our 70 million consumer spending versus the different deciles of income and things like that. But if you sort it into thirds, and our institute that writes on this, the bottom third is growing. It's just growing at a slower rate than the middle third or the top third, and so that's what you hear about the K economy and things like that. The good news is with the unemployment rate at 4.4% or so. New claims for unemployment still at a very low rate nominally compared to where they compared to.
All right, so this is looking weak on the NQ. I got to be honest. It's the NQ and ES are not completely organized right now. NQ is looking a lot weaker. I'll be back in 2 seconds, guys.
Will dominate the conversation until it settles in.
You know Kevin Hassett, and you've known him for quite some time.
Yeah.
What kind of chair do you think he'll be? Will he bow to the president's will?
Well, he's got to be nominated first, so let's let the president do his work and make his decision. But look, I think all the candidates are highly qualified. Our job is to work with them. I think the Fed, as an institution, has to be independent. There's no question that. I think the U.S. Fed is the example for the world of how to run a centralized Federal Reserve with independence. There are parts of it that there's about the supervisory side and the reach and the activities. That's a separate question. But the Fed independence on monetary policy is key. Kevin and all his colleagues that are talked about would all believe that and understand that and drive that.
Brian, there's a lot of geopolitics today. Macron's in China. We have Vladimir Putin over with, Prime Minister Modi in India. There's a lot going on with Ukraine. How do your clients work around this internationally? So you say, some of the tariffs have settled. Yeah. Do they worry about anything more for 2026, or do you think, again, they're ready to do deals?
Well, generally there's things that you look at, you say, I can have an impact on this or control it, or I can make a decision on it, and other ones you can't. And kinetic wars, war in Ukraine, getting the Middle East settled, Israel and the Gaza Strip settled down.
All right, here we go. Here's the real pullback.
On people's minds all the time.
We got EMA. We got a red forecast cloud. EMAs are about to cross.
Different because that comes down to where
if they cross and go back green, then that'll give us the okay to go long if we're not going to bust through the VWAP.
That they're sort of
here we are playing games with the VWAP again, guys.
15% increase is generally across the board result. That's helped businesses understand it better, and so I think that's been worked into their plans, and that's why you're seeing the relief come off from Liberation Day, where people were very confused, to now people have generally said the issues of China national security and stuff are unique. The issues of solving the Russia-Ukraine war are unique, but I don't think businesses sit there and say if that doesn't solve or does solve, if they're in very specific businesses, yes, but generally they're more worried about the ability to address markets and drive. And I think one of the things administration's worked on that gets lost in the percentages and count is the non-tariff barriers, and those are real barriers, both in the EU, frankly, through regulation and stuff, and in China and other places. And working on that is important for multinational companies, not only in the United States but around the world, because to get access to markets without having to change product is a big deal.
All right, that was Bank of America CEO Brian Moynihan speaking with Bloomberg's Francine Lacroix after the Bank of America's first investor day in almost 15 years. That seems crazy. Most companies do it every couple of years, and particularly if you're like a monster institution like the Bank of America. But there you go. Pretty confident on the U.S. consumer here. All right, I'll be honest with you. The World Cup's coming to the United States. It is not yet on my radar screen. I will be. I will get fired up for it, but it's just not.
What's the low target? Hey, Surf.
Monster.
I don't really have a target right now.
Focus in on it and get in on it.
I'm just looking for an entry to go short.
Randall Williams, U.S. sports business reporter for.
I'm waiting to see. I'm in a confirmation candle right now. 61.
All right.
That's pretty low.
I think it could be the biggest event of all time.
Uranium like 61 on the ES.
Because every single one of these
I'm right now. I don't have a call on the ES. Damn it.
Outside of the group stage, you lose, you go home, and I think ultimately that's just going to build.
Right now, I don't have a call on the ES.
Jersey. Well, I'm not here in Jersey, but across the water.
Right across the way.
Across the river to New Jersey.
Always doubling there and back here. But so Fanatics, they won a deal to sell merchandise at the 2026.
Has anyone ever tried to order a truck from
You're
Ford?
saying this is about to be the biggest sports event of all time.
I think it's their biggest deal to date. And the reason I say that is because they've done numerous Super Bowls, they've done World Series, they've done all sorts of different events. But when you think about all of the things that they just won, which is the online stuff, with the in-person things as well, and all of the setup that's going to be there, there's going to be these in-person.
I don't want the driver assist package.
And Fanatics is going to be controlling all the operations.
It's time for new vehicle. I don't want the driver assist package.
Everywhere you go, you're going to be buying something.
So I got to order it. Plus, they let you order it your way, and you can get it about a month later.
I believe it starts.
But they don't negotiate the price. I'm trying to negotiate the price before it shows up.
Give a bit of time.
I don't know if that's a real thing or not.
You can't.
All right, so.
Giving these things away, are they?
All right, the NQ. I hate taking the trade straight into the VWAP. This is just the worst. I could be in this trade right now on the short. The cross candle was here. This is the confirmation candle, but how do you go short right here? In the gray area. This is like the worst place to take an entry.
Oh, this is happening in Washington, D.C. today, right?
Yes.
Hey, what's up, Matthew? How you doing, my friend?
Several draw parties. I was invited.
How'd you do this week, man?
Wow, look at them.
We feel very appreciated.
And this is expanded. Aren't there more teams this year?
Biggest World Cup ever.
Wow.
More teams, more players.
It's all like Haiti's got a team in there,
Yeah, potentially.
Everybody. So, how big of a deal is this for Jersey? Right across the water here.
It was a tremendous upset when New York and New Jersey beat out Dallas to get this World Cup final. And granted, there's a lot of different, they're all going to have matches, of course. But when you think about how grand this event is going to be, in all likelihood, the three finalists were SoFi Stadium, which is gorgeous. It's a $5 billion facility. You have Jerry World down in Texas. Then you have MetLife. And MetLife is sort of a classic stadium, but it doesn't necessarily pop with the eyes. Like if you walk into MetLife, it just feels like a regular stadium.
You're there.
But with all the transportation, all of the accessibility that New York and New Jersey have, I think that's what likely put them over the edge.
Yeah, they showed they could do a Super Bowl. So this is it.
I haven't been back since, though.
No, exactly. And New Jersey Transit. That's how I do it. I do it with New Jersey Transit. All right, F1. Tom Keen's all into F1. John Farrell's educated Tom Keen on F1. He's all in now. Cadillac. Is Cadillac getting into F1? Are they in F1?
They are in F1. Their inaugural season or their rookie season will start in March, but before then, they'll have a commercial in the Super Bowl that I think will get a lot of fans excited.
Wow. Cadillac in F1. Yeah. I mean, that's got to be a huge investment for them.
It was a $450 million fee, which, if you think about it from team transactions.
All right, these are hard decisions.
This is Mark Walters' team.
But the end, I'm in. You're green for the month.
He has spared no expense to get the Dodgers across the finish
Okay.
line. The Dodgers had
Well, as long as you learned, look, if you learned from your bad decisions and you made adjustments to how you do things on a day-to-day basis, and you ended up coming out green, that's probably a bigger win than anything else, Mefio. You know what I'm saying?
drivers and the rest of your team, but
You know, if you turned some mistakes into opportunities to figure out how to get better at this, implemented them, and then came out green on the month, I mean, I think that's probably the biggest win you could put in the bank.
$8 million last year, $7 million, but with the game and growing and driving more viewers, then
You know, you got a little bit of wisdom and a little bit of
when CBS had it, when I was covering CBS stock, and they got $1 million with that. Oh my God, that's just crazy. But it just
experience.
goes up every single year.
30 seconds for
Experience to sit on, you know.
At halftime.
Okay.
Halftime.
2 weeks.
Because I know
the NFL,
back and forth.
The NFL was
Yeah.
never going to remove.
Very hard. Yeah, it's been really choppy. Like yesterday was a weird day. Yesterday, the prop firms made some money yesterday. I know they did.
There's a different community that's upset.
I didn't donate. I didn't donate to the prop firms. I took a red day. I took a red day, but it could have been a lot worse if I let myself get carried away.
Better way to do that than have an international music star perform at their biggest game.
Absolutely.
I'm in a GC short.
Randall Williams, U.S. sports business reporter, Bloomberg News. Our household, when my kids were young, probably the only household in North
From
America that
4290, I think I'm switching to GC.
but
Gold.
I would watch it for the commercials. So there you go. Randall Williams, thanks so much for joining us there.
Appreciate you for having me.
For our listeners in the U.S., a reminder.
GCSIL.
Satellite radio on Sirius XM channel 121. Access the world's only global audio business.
What are you saying?
24 hours a day. Bloomberg Radio on Sirius.
Hey, Hyde.
Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market
4290.
research. The next hour of Bloomberg Intelligence.
Oh, you're gonna switch your trading to gold? Yeah. What's gold at right now? No, hey Callista. No, man, no trades yet today. I'm waiting for my first setup. I might, if this bounces hard, I might be able to get into a long here soon. Kind of looking for the long. I didn't like that short. The short came on this candle, but I don't like trading straight into the VWAP. 4270. Shit, dude, that's a good trade. Holy fuck.
Could we see a market disruption, a market event?
Because it's a penny a tick there, right, on gold? It's a penny a tick.
So-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, we got Norma Linda sitting in for Scarlett Fu today. Scarlett will be back on Monday is what her people are telling me. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Coming up in this hour, we're going to check in with Tamlin Basson, Bloomberg Intelligence Tech Policy Analyst. Apparently, Elon Musk X has been fined 120 euros by the EU in a first content law penalty. What's going on there? We'll get the latest there. We're going to check in with Jennifer Rhee. She is the Bloomberg Intelligence Senior Litigation Analyst. We want to talk to her about this Netflix Warner Brothers Discovery deal. Will the regulators approve this deal? That could be a little dicey. It's Friday, so that means we talk municipal bonds. Nora is fired up for this. It is Nisha Patel, SMA Fixed Income Portfolio Manager. Get her thoughts on these markets. And Max Chapkin's going to show us self in the studio here as a Bloomberg Business Week senior reporter. He's got the big take story. Microsoft Excel powers AI restraint and multi-trillion-dollar empires. We got a lot coming up there. in the tech space. But right now, let's go to Charlie Pellet for a Bloomberg Business Flash.
I thank you very much indeed. Lots going on, lots of movement.
Yeah, it took on a combine account. Though I'm locked on my funds. Good. Good.
Joining the world's dominant paid
Yeah.
streaming service with one of Hollywood's
Yeah, keep the. You got to protect those funded accounts, guys. Like if you get a funded account, you gotta really be. You got to be wise with it. You got to protect it, because if you keep that funded account, you don't have to pay into the system anymore. You're good. You just keep that for, you don't have, it's yours. You just have to make sure you trade it once a week. They don't like them sitting still, for months. So just try and, your best setup, use your best setup on the funded accounts. Big Hero's working his first one for the first time now. I'm trying to make sure he focuses on that, because early on I do some crazy shit and be like, fuck it, I'll just start over. I did some shit that made no sense early on. But I was also developing my strategy, and I'm kind of taking a different route about it, because I didn't really have anyone helping me. I'm building, my goal really was to create the strategy with all the guardrails someone needs out of the box. So you don't make the, I got to lead. This real work stuff's getting in the way of our streaming and trading, man. Trying to rhyme some philosophy here, and I got real leads I got to work. What the hell?
Among the economic data points, consumer sentiment, as measured by the University of Michigan, rose for the first time in 5 months. Joanne Shu is Director of Surveys of Consumers, and she was a guest right here on Bloomberg Intelligence.
Consumers feel no worse than about the economy that they did last month, and that's certainly good news. Probably the strongest part of today's release was inflation expectations. Those ticked down both in the short run and the long run, and we're at the lowest levels that we've seen since February of this year.
Joanne Shu of the University of Michigan, interviewed right here on Bloomberg Intelligence. Again, recapping here, stocks higher, but the big deal of the day, Netflix buying Warner Brothers Discovery in a historic combination. Netflix down 0.6%, WBD Warner Brothers Discovery up 3.8%. Our coverage will continue. I'm Charlie Pellet. That is the Bloomberg Business Flash.
Alrighty, thanks, Charlie. Happy Friday. Lots of green on the screen today. I'm looking.
All right, so guys, we're chopping around the VWAP. You guys know, if you've been around here for any time at all, you know how I feel about the VWAP. VWAP is garbage. It's the most volatile area anywhere on the chart.
Take a look at what's going on.
People have VWAP strategies. Whales sit on the VWAP. It's a volatile. It's almost like trying to trade news. That's why I don't like taking a trade straight into it.
Let's talk about Warner Brothers Discovery, which is on the other side.
And I take risk off before I get there, so I have minimal risk if I'm in a trade heading into the VWAP. But if you're right on top of it, yeah, you got to get under it to get into this. You know what I'm saying? Or if we reject it, then that'll be your long setup. So, hey, Surf.
When it comes to this deal, $72 billion worth of equity with Netflix. And so Bloomberg Intelligence analysts weighing in, right? So when they're looking at it from the EBITDA multiple, 25.2x, that is at the higher range of the recent.
How you doing, Surf?
This space. And so they're seeing that as a positive.
Are you in a short, man? You in the short, Surf?
To spin off its TV network businesses
Smurf,
by the
the
third quarter of
Surf and
next
Smurf.
year, and that could potentially bring
Surfux.
forward more industry consolidation. But as we know,
All right, Surf's in the short. Be careful, man. Like the 50 EMA, I don't know where you got in at, but your stop loss might be somewhere between the 50 EMA and the 20, because this could reject hard, and we could go right back into the long and start moving up.
Let's take a look at
So just be
today.
careful.
So that's another stock that is up.
on?
Exactly. ORCL shares up 1.7% at the moment. We will get the earnings on the 10th of December. So a lot to look forward to in that. And, we have Bloomberg Intelligence weighing in, saying that they are confident that Oracle will be able to top their $65 billion of total sales in fiscal 2026, because the constraints on their AI infrastructure remains tight. That means that business is booming and they're all engaged. Cloud databases, another area that they're looking for some gains there. That That expanded 32% in the first quarter. So a lot of promise there. The focus, though, and the question really is all about debt, right? Because Oracle, in some ways, has been sort of the flagship of questions around how much these companies are borrowing to finance their AI deals. Oracle does not have as good of a credit rating as some of the cloud computing giants. And as a matter of fact, a measure of its credit risk actually closed at the highest level since the financial crisis this week because it has effectively sold tens of billions of dollars of bonds in recent months to finance some of their AI deals. So big questions around their debt for sure.
Yeah, shares of Oracle, ticker ORCL, up about 31% so far this year. I want to talk about the airline space. We did hear from Delta more recently, and they were talking about the drags that happened because of the government shutdown. But you're looking at Southwest, and they're kind of saying something similar.
Yeah, exactly, Nora. So Southwest, ticker LUV, those shares are not doing too badly. Actually, they're very much in the green, up 5.8%. But we did hear from Southwest saying that they are lowering their operating profit target for the full year, again, because of fallout from both the government shutdown, but also
All right.
Higher fuel
Uranium
prices,
needs us to blast through 83. So we're over here on the ES now. Let's see if we can't zoom out a little bit on this form.
The prior expectation of 600 million to 800 million. So quite the cut there. But the silver lining, and
VWAP makes me nervous, man. Be careful. Make sure you know where your stops are and you're okay with your risk, because we could get Shrek'd out here. It's just, and plus you got the 200 EMA, and you've seen how powerful the 200 EMA can be.
I think that's what investors are seizing on. Big travel season also, so I'm sure there's a lot of demand for Southwest tickets.
All right, so Southwest Airlines, the ticker is LUV. Love.
LUV,
Do you know
yes.
why?
Why?
Don't know why?
Tell us.
Okay, Southwest Airlines is based at Love Field.
Oh, you're
in
right.
Dallas-Fort Worth area, so.
So they just really leaned into that.
Absolutely,
Right?
they leaned into that heritage Fort Worth area, so it's good stuff. All right, Christine, thank you so much. Appreciate that. Christine Aquino giving us some of the stock movers here. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Looks like Elon Musk, his social network X, is being
Yeah, I know.
fined.
I know, like on the NQ right now, yeah, there's the ES is looking like we can challenge the 200 any minute for sure. And the NQ is kind of at support. If the NQ breaks this support, then I think we're in the short for real. You know what I'm saying? You know what I'm saying?
So this is
I could have got in up here probably, but
Service Act, and this is one of these sort of regulatory packages that European put in place to regulate.
you know what I'm saying? G money.
2023, and this probe was launched close to 2 years ago in December 2023, and really what the European Commission was looking at was sort of in the build-up to some European parliamentary elections, whether there was disinformation that was being spread across Twitter, now X. What this fine actually assessed, 120 million euros, the penalty actually relates to not necessarily the disinformation. That part of the probe is still pending, but the regulators made 3 findings. One was sort of the design of that. Basically, that any user can
just go down.
And calling that verified.
Just fucking, let's stop with the nonsense. Let's stop with the foreplay and just go down.
The other 2 findings related to, one, there was no ads repository on X. That's mandatory to allow researchers to really see what kind of ads are going across the network. And the third finding related to just not giving adequate access to third-party researchers on X. So this is a fairly significant penalty against X based on sort of the revenue that the platform makes. But the findings really didn't quite go to the heart of that sort of potential disinformation campaign.
Oh, here we go. We're flirting with it now.
Yeah, I mean, we know the European Union, when you think about European regulators, they're widely perceived as really stringent.
All right, so we just touched, you see, we just touched the 200 EMA. We just touched the 200 EMA on the ES. Now we're rejecting that. So we're going to challenge the VWAP again. This is going to be interesting here. Are we putting in our foundation to start the long, or are we going to wear down the 200 EMA zone and attempt it again? That's what we're figuring out now. Yeah, Friday.
Again,
It's
this is a
Friday,
probe
it's
that was launched
Friday,
before
full
he
port
was elected
Friday.
president. So I think what we can look at is this was a high fine, but there was rumors that they may actually try to assess a penalty based on the holdings Elon Musk had elsewhere. So his Tesla holdings, his SpaceX holdings. Ultimately,
No,
they
you did not hear
agree,
full port.
sort of counting themselves to looking at excess revenue. So I think in
It's
that way, we can see that
it's
maybe,
satirical
they
lyrics.
were looking to
It does
sort of
not
flex
mean
the
go
laws
full
to
port.
show
There are
that
no full ports
they
here.
have the capability to prosecute where
No
they
full
think there are
ports, damn it.
breaches. But I do think we have seen a sort of dampening, at least in terms of the rhetoric.
But if you're going to full port and eval and want to tell us about it, I'll root for you after I tell you it's not a good idea.
Tamlin, thanks so much for joining us. Appreciate it. As always, Tamlin Basin, he's a technology analyst for Bloomberg Intelligence. Technology investor since the mid-'80s have figured out.
All right,
the
be back
playbook,
2 seconds,
which is,
guys.
and this was starting with Microsoft and Windows way back in the day. Write a check to the Europeans and move on. And that's kind of how you go. That's been the playbook for 50 years, quite frankly. And then you think about why there's only really 2 big technology companies in Europe, SAP and ASML. Now you kind of know that's one of the reasons. That's my opinion, folks. Just putting it out there. Big deal of the day, Netflix acquiring Warner Brothers Discovery. What's the regulatory framework? Are the regulators going to take a look at this deal? This is a monster deal in terms of dollars, $80 billion of enterprise value. Let's check in with Jennifer Reed, Bloomberg Intelligence, senior litigation analyst. So, Jen, this is a big deal. How are the regulators going to view this?
Yeah, it really is, Paul. And I think, and we've seen a lot of opposition to it coming out already, I think it's going to get really significant scrutiny, not just in the United States by the Department of Justice, but likely also in Europe and by the UK and possibly some other jurisdictions as well. But, they're going to look at these overlaps, which in this case are both horizontal, that's in streaming. They both both companies provide streaming services, but they're also vertical. You have a big streaming service buying a big movie and TV producer and a big content, a library of content. And that creates vertical issues. And when a company is really strong in both levels of a supply chain, when they vertically integrate this way, that can raise concerns too. So the Department of Justice is going to have to dig into both of those issues. And last, Paul, I'll say this because we haven't seen very much about it, but there's also what we call a monopsony concern here. Monopsony is when a merger results in too few buyers of a service or product. So in this case, you've got 2 huge creators of scripted content that are coming together, and that could have a negative impact on the artists, the production people, the writers that go into making all the TV and movie content that the companies make.
Jennifer, walk us through what exactly happens to the deal if the DOJ or regulators more broadly decide to push back on this.
Sure. So
Okay, are you out of your short?
I'll start by saying this in-depth investigation usually
Full port.
issuing what are called second requests for information. Those are like really big subpoenas where they're going to get a lot of business documents, a lot of data and information from the companies. Now, once the DOJ has looked at all that material,
Oh man, here we
they
go.
have to decide either they clear it outright, they clear it
Here
with
we
a
go.
negotiated settlement with the companies, or they sue to try to block it in trial.
NQ's looking like it wants to drop.
Agreeing to divest a product, such
I guess I should have taken the short. I'd be looking really good right now.
Such as making promises about the way the post-merger firm will behave in the marketplace. But if something like that can't be agreed upon, then the only thing the DOJ has left to do is go to trial and seek a permanent injunction from a judge that blocks the companies from closing the deal. They did that when AT&T tried to buy Time Warner many years ago. But I'll contrast that to when Comcast bought NBCU. They also had some concerns there, but they entered a settlement agreement with respect to that deal.
Jen, politics. I think politics is going to come into this deal, maybe more so than some others here. Generally, I guess on the one hand, we have an administration that presumably is more open to consolidation across industries, taking a lighter touch. But then there's also a president who makes it personal oftentimes. Do we have any idea how that might shake out?
Paul, you're exactly right. And it makes it so hard nowadays to actually really do a true antitrust analysis of a deal, because we have seen the Department of Justice and the Federal Trade Commission, I could say, aligning with the Trump administration in antitrust outcomes for deals and pushing the policy priorities of the administration and listening to what the president has to say. So where the president and the administration is against a deal, there's a higher risk, I would say, of that deal having to defend itself in court and the Department of Justice seeking a block. But on the other hand, Paul, we don't really know what's going on behind the scenes. You know, we've seen some of these companies to mergers hire some Trump-aligned lobbyists, powerful people in Washington that have helped them to. All
right, hey, Fish Frying, how you doing, man?
With respect to the settlement the DOJ entered when Hewlett.
Kind of looks like Bitcoin Dump started this. Where's Bitcoin at right now? I don't have my Bitcoin chart up.
This is all sort of the backroom channel.
I gotta get back into the Bitcoin. I gotta get back into watching the crypto world a little closer. I got away from it. 88. What was the bottom this cycle? 86 something? 85? Did it hit the 84s? What was the bottom?
So much. Appreciate that. This one
so far.
We're going to be talking to Jen. I got to say, Nora, we're going to be talking to Jen at least 12 months for this.
I believe
deal. At least 12 months for this deal. Jen Rhee, she covers all the antitrust stuff for Bloomberg Intelligence. Worth.
How hard is he?
When you get big deals,
into funding?
Comes the biggest risk. And when you talk to the arbitrators,
well,
they don't want to talk to me, who covers the media.
Yeah. So,
they want to talk to Jen.
Did you watch the video? Did you watch the video about prop firms? Can you do that for me and then come back and ask?
And under what time?
And I'll explain it beyond that, you know, based on your questions.
Deal terms have been announced, and it's experts like.
If you go to the About page on Twitch, I think it's the third or fourth video down. It says prop firms.
Green on the screen here today. The S&P up 16 points, the Dow up 130 points, and the Nasdaq up
1, 2, 3, 4. It's the fifth one down.
We're drifting higher here.
It says, "What is a prop firm?" Yeah, can you just watch that real quick, then come back and ask? Then you should understand pretty good after you ask a couple questions. And I'll give you the real. I'll give you like the real, but you got to kind of watch that first. Okay, cool. All right, brother. All right, guys. Anyone still in the short, or are you guys closing out the shorts? All right, yeah, I'm here, man. I'll be here. If I don't answer right away because I got into some phone calls for work, but I'll be here all day. I'm here. Should we? FBO, I don't know, man. I don't know, man. I'm worried if we break this level right here, we're going to go free falling. Like, there's not, like, I'm worried if we break the level we're in right now, we're going to double bottom. I'd be careful. Or am I just asking? Yeah. I'd be careful on the calls. All right. All right. I want to appreciate everybody hanging out. Gold ain't taking a shit. I'm still in it. I'm still in this short. Gold taking a shit. Gold is still going down. You know what? I got to rebuild. I used to watch gold for a while, but then I kind of got overwhelmed with too many things, and I just had to pick two to focus on all day. But I think having gold, more and more people are watching gold. I think having a gold chart up just to keep an eye on it's not a bad idea. The gold setup was similar to the ES setup I use. I'd still in the short. Yeah, it does. It moves very similar to the ES. Like my ES setup for the forecast is very similar, was very similar for gold. It was very similar. So it translated really well. I can't, I'm maxed out on what I can do until I upgrade my equipment and I get the beta version of the forecast rewritten. Short from 42.90, might ride it through lunch, gonna treat myself. Yeah, I wonder why gold is running down right now. The dollar must be getting stronger in some way. Sold 3, keeping 2 trailers. Okay, cool. Got a good break-even set or a good stop loss in profit. You got a good stop loss and profit, and you've already taken profit on 3. Then fuck it, let it run, man. See what you can get.
Tariffs and volatility have some investors turning to gold for stability. To get a free gold and silver info guide,
Craven's asking if you caught the very, very exact high.
401k tax and penalty free. Go to Golden Crest.
All right, ES is working back into the VWAP again, guys. ES is working back into the VWAP again.
Gains, market extending its bull run. The equity market higher now with the S&P up 18 at 68.75. Gain there of 0.3%. We've got the Dow up 141, now up 0.3. NASDAQ higher by 0.2%. The NASDAQ 100 index up 0.4, but a retreat for the Russell.
I knew it was going to no break the high. It was the second time testing it with buyers losing steam.
42.09, little change there. West Texas Intermediate crude up 0.6%.
Interesting.
6 a barrel, and a retreat for Bitcoin now.
You're talking about gold?
1% back below 90,000, 89,335 on Bitcoin. It is the day's major deal. Netflix buying Warner Brothers Discovery in a historic combination. But what about the?
Hey, we got 32 people out there watching. I want to thank you guys for hanging out with me. If you got any questions on what we're doing here, I can do an introduction to the channel. If you got any ideas on what's going on with the ES or NQ, or we've been talking about gold a lot lately, you're more than welcome to participate in the chat. I read through the chat. We kind of get the conversation going through chat.
1.7%. Warner Brothers Discovery up 3.8%. Paramount Skydance down 6.3%.
Right now we're waiting to see if this is Right now we're waiting to see if we break down further, or if we challenge the VWAP and go back to the long.
Now on Bloomberg
I would be looking at a position if we could if we challenge the VWAP and we closed above it, looking at a long if we switch over. Fish frying. Hey, let's get weird. Seriously, what are we doing here? Not a stock question, though. Enjoy your content, sir. What are we doing? Oh, this is futures. Do you know what futures are? So this is the NASDAQ futures you're looking at right now. The NASDAQ, their future contract on the mini, and this is the ES or MES, either one. They're basically the same chart. And this is the S&P 500 futures. Do you know what futures are? Let's get weird.
For municipal bond investors heading into Q4.
Oh, you're being a dork. Oh, okay, you're coming up. Sorry. I was like, I know he's a trader.
The market has seen significant
I'm a very literal person. I can be I'm a dork. I'm a very literal person. So you can, sometimes you guys can have fun with me because I'm pretty literal. Can you follow copper instead of gold? Are you in copper? I've never followed copper. Hey, LTD, how you doing, man? Hey, I like the post you made on Discord.
Take, for example, Treasuries, IG Corporates.
I like the post you made. What's his name? I listen to his stuff all the time.
The silver lining there is that you're looking at very attractive yields,
What
especially
the hell is his
on the
name?
longer
He's
the
like,
curve, to where for
he's
high
like,
contract individuals, there's a really
he's
good
like Jordan
opportunity to lock
Belfort
in
before
yields,
Jordan Belfort
and you
was
could see a
Jordan
little bit of that
Belfort.
catch-up
If you read the
opportunity into
documentary
next
about
year.
his life, I'm
And
a
the second
purchasing
thing quickly
manager
I'll
in the
mention is
electrical
we
world.
talked about high supply,
Okay, cool.
lower demand this
I'm a
year.
corporate sales
I think
guy.
you could see the demand
Purchasing
side of
manager.
things
Okay,
pick
so
up
you
possibly
sit in the
next year
warehouse
in
and
2026.
make or
Now, the supply
you sit in an
outlook,
office
street
making sure
estimates
the
are
warehouse
still
is
forecasting
filled all
fairly
day with what you
elevated
need,
supply,
right?
similar to this year.
I saw the
The big
video you guys
difference will
posted
be
on what
we
is a
could see a
manager.
significant catch up in demand, right? That's a
Oh,
function
okay.
of
On the
the
what
Fed
is
cutting
manager?
on a steady path, reinvestment risk rising, but prices in cash.
Yeah.
And while I'm certainly not making any sort of an equity call here, I think you could
Yeah.
see some clients looking to rebalance
Contractor side.
portfolios,
Okay,
right, where
okay,
they
yeah.
may have been underweight fixed income going into
Okay,
this
so
rate
you
cutting cycle
make
in
sure they're filled
2026.
for what they need for a job site. Like if they get a job, you get the order list and make sure it's filled.
Triple tax free. Nisha,
What is margin?
talk to us about just the supply here. Why is there so much supply out there? I mean,
Are you serious? Are you
I
being
understand
serious,
24 was a
Brandon?
record year for issuance. 25
Are you guys
was a
playing with
record
me
year
again?
for issuance, and as you mentioned, the street's calling for another busy year next year. What's going on out there?
Yes. So I
You
would
know what?
say
You know the
the
first
main
time you
things that
figure
we
out
saw
when
this year, which
what
will
margin
carry
is
over into next
is
year,
your
I'll
either
mention
your
kind of the
phone
new
calls
dynamic next
or
year.
you get a big
In
pop-up on your
2025, I think
screen
we
that says
function a few
administrative
things.
close.
We
We
take a
closed
look
your
at inflation,
we just
right? We're still seeing
administratively closed
inflation
your
roughly at
account.
about 3%. Just think about those costs
Uh,
permeating down
that's
all the
when
way
you
to
really start
these
to figure
types
out
of
what margin
financing
is.
projects. So just
Oh, the
costs of
Discord channel,
projects
what
that
is
come out.
margin?
The second thing
Okay,
is
yeah, there's a
that
video
we've
that
had
explains it
stimulus money post-COVID,
in the beginner's
federal
guide.
stimulus money running off, and that's not
Jesse
necessarily a bad
Livermore.
thing, so this
Yeah.
shouldn't be alarming. But
Number
as
one
you
rule for
have
position
states,
sizing.
cities, local
Oh, the Charles
entities
Schwab guy.
feeling like,
What
look,
is
we've
margin?
had some of that stimulus run off. We do financially feel comfortable taking out, right, a little bit more debt to finance
Yeah,
necessary
that guy's pretty
projects.
based, huh?
You're seeing more of that inclination to do so this year. And again, that trend should continue next
Oh,
year.
what is margin?
And
You said
then
manager.
if you
What
think
is
about what
margin?
happened
Yeah.
very early on this year, there was that threat of tax
Typically
exemption to
closed
munis.
then the
So
call.
while
Yeah.
you usually see supply maybe a little bit
I was in a
second
really
half
big
back-end
position that I
oriented
was letting ride.
in
I got
terms of
caught.
just calendar
They
year
would call every
issuance.
night
We
talking
have
about, you
seen
gonna
a
close
little
this
bit
out?
of
And I'm
that,
like, no, I'm gonna
or a
ride.
significant amount of that pull
All right.
forward from
And then it got to the
2025.
point where they wanted me
So
to skim
those have been really
contracts
the
off.
main themes. And I'll lastly mention, I think issuers may have
Well,
been waiting for maybe more attractive
it's
yield
you either
environment in the light,
depending
in
on
the
how
name
big your
of Fed
account
rate
is and how
cuts.
over
And I think
leveraged
there's
you
a
are,
realization,
you
while
know.
yields have come down a little bit, there might be a realization that, look,
But
if
for
this
like
is a slow and steady path to rate cuts over a longer
you
period of
just if you
time,
hit your
and there's still financing needs,
you know, if you
look, let's look to get this
if
out
you hit your
as soon as
limit
we
for the
can. So I
prop
think
firm,
you'll
the
see a
loss
lot of
limit,
those
it'll
same trends
automatically
in
close the account in a
2026.
pop-up and it
And as
says
you have,
administrative
lastly,
close,
all of this
closed by the
CapEx and
administrator.
expenditure happening on the AI
But if
front,
you're in the real
data
world
centers, think about all of the
and you're
support
not on like
that
a
you need
500
from
to
an
1
infrastructure
contract.
perspective, water, right, utilities. Where is that financed? That's in the municipal
Well,
market, and
you're
I think
pretty
that could be a
leveraged
trend
straight
you start
out, you know
seeing
what I
in
mean? I had a lot
2026
of
and
money in
beyond.
there.
Nisha, thank you so
But
much. Always appreciate
they
talking with you. Nisha Patel,
it was not as leveraged. I had room to let it run and they just didn't like letting things run over the weekend. It was kind of like their thing. Everybody's got their thing. So they would just call and make sure you really wanted to like leave it. And I'm like, yeah, I don't want to cut it yet.
I knew all the macros.
They're like, okay, just making sure, you know, because they like having, yeah, I know. Well, they liked being flat going into the weekend. You know what I'm saying? They like being flat.
Story here.
They didn't like the books
This one I love,
running.
'cause this one hit home. This is titled "Why We Can't Quit Excel," and the subtitle.
Actually, it was
Microsoft spreadsheet software is expensive.
Transact. It was Transact, and then Ninja Trader bought Transact.
The most killer app of all time. That is awesome. Max Chafkin joins us here.
You know, when I'd pick up the phone, it sounded like he was in a pit. You know, with a bunch of dudes like yelling and shit like that. You could hear stuff in the background, be like, "Transact, you getting out of this position?"
Still a thing, right?
Yeah.
Like, what are you doing? You holding it?
You know, 40 years,
You know,
the anniversary.
or if I'd let it go to
of
voicemail, I'd be like, "Hey man, you closing that? What are we doing?"
Late September 1985.
You know, we're
That's kind of
15
what
minutes. What,
prompted us to do
you
the
holding
story.
it?
And just thinking about the fact that, you know, we talk about these developments.
But
in
when
the
that
software
trade came back
industry
around, I was in
happening
that
over a
trade
matter
for
of
like
months, where
5-6
like
weeks
OpenAI
maybe.
talking about its latest model.
And when
It's
it
so
came
much
back
better than
around,
the
I
last
almost
one.
lost the whole. I almost
These
got
advances that
pinched.
feel so
But when it came
urgent,
back around, I
and
was
then you
able to
look
get
at something
out of
like
it. That's when
Excel,
I
which
withdrew all my
has
cash.
basically
I said, "Fuck this! I can't do that." And I started working on the forecast strategy and learning how to operate through a prop firm to kind of start over.
You know, sort of the most important software applications of all time. Like this would definitely be a candidate.
Maybe, man. Maybe.
Business.
Maybe.
Just because
they were pretty legit, man.
you know,
He sounded like
numbers
he was an
into-
old school like
much more accessible
trading
way.
guy. You know,
Not only
guy
that,
you'd
but-
meet like
but
in the
kind of,
80s.
Vaulted personal
You know,
computers,
I don't know.
personal computers on the desk of every.
It looks like we're
worker.
breaking down,
And it
guys.
still is the thing
We're
that's
breaking
running
down. I
many,
gotta
many businesses.
fix the ES chart.
See, I know a lot of people still continue to use Microsoft Excel,
But
then you
the
also
next time I
have
load
Google
up an
Sheets.
account like that,
So is
I'm
that
not going to be,
competition there?
Absolutely.
I'm going to be in complete control,
what has
and that's
happened,
never going to
and
happen
you
to
see
me
this
again.
Even today, we got news yesterday that Microsoft was going to raise the prices.
'Cause I got
its
out. I got
productivity
lucky.
Office software.
I honestly got lucky. I could have got scam wicked out of a
this
lot
is
of
partly
money.
because Excel is so important. It's
Got to
partly
go
because Excel has
do an
market
office
share, and partly
shindig,
because of
playing
the way
Santa
that
for the
Microsoft
boys.
sells these products.
All right, brother.
Even companies that
Yeah.
are using
Let's
Google
get
for
weird.
some
Nice.
things
I'm glad you
are
stopped by,
often
man.
still paying Microsoft
Good luck on
because
those
the way
trades.
they've set things
And
up,
then
like, you
we'll be
can't
here
just
Monday,
take
man.
Excel
The
out
stream will be
without
open
taking
6 o'clock
PowerPoint
at
out and Word and
Sunday
so on.
night.
And we think of
I'll get it
Microsoft-
fired back
Microsoft
up, and we'll
obviously
be
big
back
in
on the mic
AI
Monday,
and
brother.
big in cloud
Now I'm
and all
mad. I
that.
closed
But
the cell
at the
contract
center of it
713.
still, 40 years later, is this Office suite.
Well, you didn't know, man. You needed to break through this level.
He's
You needed to have the runner on to see if we broke through the level.
He was the 2024 Excel World
I kick it
Champion.
around here most days, lurking a mofo. Okay, hey, I appreciate that, man. You have a good weekend, my friend. You have a good
Las
weekend.
Vegas. Jarman, who we spoke to for the story,
There's nothing wrong with lurking around.
to a newcomer, Darren Early, who won in a dominant performance, kind of a wire-to-wire final. Now, I have to admit, I found competitive Excel to be a little bit difficult, a tough watch. Although talking to people in the spreadsheet industry, I forget who it was. I asked someone about, what do you think about competitive Excel? He was like, I just can't understand why it's not more popular. Because if you know, you know.
Yeah.
Honestly, you learn something new every day. I did
Max,
not
here's
even know
my
this
Excel
existed.
story. I was an investment banker at Merrill Lynch. One of our dudes was going to leave to go back to business school. It turns out he's the only one that knew the model for this big corporate convertible bond that was a proprietary product to Merrill Lynch. And we're like, dude, you can't leave. You're the only one that understands the model. So Merrill Lynch paid him what was almost a year's salary to stay 1 month to train like 20
Interesting,
junior
guys.
analysts
All right,
all
what
the
are we
time.
gonna do? Are we gonna challenge this day in VWAP and go long again, or are we just gonna dump the rest of the day? Damn it!
This is part of
What
the
are we
reason.
doing?
I think those stories are more common.
Let's take a
than
look
you
at the
imagine.
NQ.
These
Looks
kind
like
of-
they're loading up another
these
rocket for
companies are
Elon.
entirely dependent on, like you said, some Excel model that somebody made a long time ago, and that they've basically been maintaining ever since. That explains all of these kind of huge payouts and so on, but also
I think it's a bear trap, but I'm more of a gambler. Hey, LTD. What's up, Brandon? Yeah, it might be a bear trap. See, I'm kind of like, I don't like for me, I should have, like right here was my signal to go short. So the confirmation candle probably would have been one of these two, and I could have got in on the short. But the problem is I don't like shorting at the VWAP. Like it gets, I don't like going straight into the VWAP. I like being confirmed on one side or the other, going away from it. Because this can more, if you did this 100 times, you would average out to be a loser. It's that's why I put the shaded area in around the VWAP to warn you that this is a volatile area. You could get wicked right back out to the first deviation, then roll over again. So it's a tough place to take a trade.
To Excel or something. I don't know. I was like, I spent like a month doing that over and over again. So there you go. I still have the floppy disk. Still have them. So if anybody wants a model of Consolidated Railroad or CSX, I'm your guy.
You have
S&P 500 up 9 points. This is Bloomberg. Good morning.
Oh, lost the chart. Hold on. Let's go back to the ES for a minute. Let's see. Waiting for the ad to go down. Okay. Hey, Matthew. Anyway, we hit needed target to moon end of year. So easy. Just look for dip. Could be nasty. Okay, so you think, do you think we're at the bottom and going higher, or are we still looking for another dip? So you think we head to the moon now? Is that what you think, or do we got to go down a little more? Is that... Anyway, we hit needed target to moon, end of years. Just look for dip. Oh, you think we go to the moon now? Should I get in now? I should load my cash account now and go to the, and we're in full port for the moon. This area here is holding pretty tight. Look, right? That was the open. This is kind of where we opened at. Kind of right here is this area. I got the same area on the NQ also. Oh, look for the dip now. Put your house in for moon. No. So this is a disclosure. This is a non-gambling site. So we will not use any titles for cars. We will not use any deeds for mortgages or for our homes or property to fund a trade. We will work our plan A. Our plan A is our regular job, and we'll work on plan B with our spare extra cash. It's the end of the wedge I posted yesterday. All right, Scotty. All right. Yeah, I like the wedge you had yesterday, man. Hey, PBR, what's up, brother? It's always a good day when you got a PBR on the horizon. That's Pat Blue Ribbons. I don't know if you're from the States. Pat Blue Ribbons is like a North Country beer. It's how do you say it? It's the blue collar. It's a step above natty ice. It's a step above natty ice. If you're not from the state, natty ice is cheap beer. Good. You get any trades in today? Are you in on the short, or what are you thinking, man? The big one from October. Hey, do you have it? Repost it, Scotty. Do you got that wedge? Hogwarts is always. If Hogwarts isn't shorty, he's worried about one he should have held on to a week ago. Oh, it's in the Discord. Sorry. Oh yes, I saw. Hold on, I'll find it. Oh, here it is. Yeah, I got it. So it's at the bottom of that wedge, right? You had the signal, we'll probably close the gap. Okay. Hogwarts saying we're going to close the gap. Scotty's got a nice wedge in Discord in the general chat. If you guys want to check it out, that's what he's talking about. If anyone's not in the Discord, more than happy to have you over there if you want to ever post anything or just check out what people are doing. That's the Discord link. Maybe long after it's 1 p.m. Okay. Hogwarts is reluctantly calling the long after 1 o'clock. It looks like Elon's craning in another rocket for some Starlink stuff or whatever. Oh, shit. PBR is Pale Blue Rose, my private investment fund. Oh, it is? PBR is Pale Blue Rose. Well, Pale Blue Rose is going to fund your retirement full of PBR in the fridge. That's what we're hoping for. Pale Blue Rose is going to fund a nice ice cold PBR. That's what we're hoping for. My private investment fund.
68.63. That is a gain right now of just about 0.1%. Dow Industrials up 39 on the Dow. Also a gain of 0.1%. NASDAQ.
What kind of equities do you have in your investment fund?
So selling off the Russell 2000 index down by
PBR.
0.3%. 10-year at 4.13%
Oh, hey.
with a 2-year
Got it.
3.55%.
Yeah. Let's see. Maybe after 1. Okay, I'm caught up in the.
Ounce up 0.1%. 42.12 the ounce. West Texas Intermediate crude oil trading below $60 a barrel. WTI 59.95.
All right.
0.5%.
This is looking weak,
The
man.
slump
This
for
is what
Bitcoin
I mean. This
is
is looking weak.
continuing today with the
Tenki's looking
sell-off
weak.
intensifying. Bitcoin
Weak.
now down by 4%. Bitcoin at $88,500 on a Bitcoin. The day's major deal: Netflix buying Warner Brothers Discovery in a historic combination, joining the world's dominant paid streaming service with one of Hollywood's oldest and most revered studios. Our coverage will continue. It's a $72 billion cash and stock deal. Netflix shares, they're down 2.8%. Warner Brothers Discovery up 3.8%. Some of the other players involved, we've got Paramount Skydance down 6.6%, and Comcast shares higher now by 1.1%. So again, recapping, we're looking at an up Friday here with the Dow, the S&P, NASDAQ. They're all in the green. S&P right now up by about 0.1%.
I got a damn Zoom with a customer in
24 hours a day. Subscribe to Bloomberg News.
I don't want to do it. I'd rather just hang out here and call the chart and try and get a trade off.
Business Flash.
That's living life.
Normalinda
It's
in
living
for
life,
Scarlet
baby.
Today. I'm here with Paul Sweeney in the studio. This is
I am
Bloomberg
85% in bonds, mostly private bonds, 12% yields short term. Interesting. I guess that ES is going to test 68.58. It may, man. It's like
Now we get to look ahead to 2026 and see what could be potentially
the NQ is looking a little stronger than the ES right now.
Joe Gilbert. He, of course, is
But
a
we could
portfolio
test
manager
that
of Integrity
68.58. That's basically the
joining us
double
now
bottom
from,
from this morning, I think.
Moreland Hills, Ohio, on Zoom here.
I think
Hey,
we're pretty
Joe,
close
what are
to
your
it.
expectations heading into 2026?
Double bottom from this morning.
Well, hi, Nora. Thanks for having me. Long-time listener,
Yeah.
first-time caller, I guess. That's the way to put it. So, no, next year, we think it's going to be a little tricky. I think that's kind of how
We
we're
could.
playing it out. We're coming off of pretty strong equity returns over the last 3 years, effectively, double-digit returns. This year, we may reach
Bonds?
but I doubt it.
85, like treasury bonds? You're 85%, or is that mostly private bonds?
Or we get to more of a standpoint.
So what is a private bond?
And we get more participation from just the max.
Are you scared of stocks? Yeah, stocks can be scary, man. I got to
That's
admit.
like Cleveland, right?
It takes a while to kind of figure out things and get comfortable with what you can handle, to be honest with you.
Yes, and then actually, but
I mean, we just talk about like lottery pick stonks here for fun.
23 degrees, and we started
MAGS.
I love that. I love the snow stories.
You check
see
that
in
one
the
out.
month of December from that part of the world are unbelievable. They just get dumped on. My son lives up there.
You know,
He's got some
like if you're
crazy video.
Round
Joe,
Hill Management,
we're gonna hear from the
EFT.
Fed next
Oh,
week.
okay.
I guess
Yeah.
Wednesday it is. How much
I'm in
more is that kind of
ALPS right
setting
now.
us up
Check
for
out
26?
ALPS. Tell me what you think of that one.
Yeah,
That's a lottery pick. That's a stonk.
Right now, looks like the futures are pricing in over a 90% chance of a cut next week.
Private bonds are
But we
risky.
really
Yeah.
think that's going to be more of a hawkish cut.
I don't know much about bonds. I gotta be honest with you.
Cutting into a really
I may not be the most well-rounded person. Round Hill Magnificent Seven. The Magnificent Seven.
you also have a very
With a name like that, I'd want to get in now. It's at like the 52-week high almost.
the Fed's going to cut as much as the market is projecting for next year. But we
Are you holding on to that one, or are you getting ready to cut that one loose? Or do you have an amount of time you got to be in it? Because it's looking pretty strong right now.
To reflect on everything that occurred, but one thing that happened a lot was the meme stock rally. Just back in the summer here, we've seen retail investors really hopping in as it relates to meme stocks more broadly and Bitcoin. I mean, are you?
All right, we got to.
expecting the same
Looks like
level of momentum
I'm in
here from
companies
retail
that
investors as we
are
look ahead to the new year?
creaming EU AI Act rearm Europe funds. Oh, okay, okay.
We think that the level of enthusiasm is from the retail investors.
Are they really? Is Germany really going to rebuild its army and get out of NATO? Because that's kind of like some of the stuff I'm hearing on other channels of news. Is that like a real thing?
That said, we think that we're going to be
Are they just about done with NATO? Is up $7 top 7 SPY stocks? Yeah, it's performing really well. I'm looking at it right now. Not really.
Very violently, and that's why we think that's going to probably shake out a little bit of their retail.
They're not leaving NATO. Okay.
Fixed income space here, Joe. I mean, if I look at the
There's a lot of grumblings. I hear that they're considering it, but that might be like one wing of their government. You know what I mean?
High single-digit returns. How do you think about fixed income next year? Treasuries versus maybe take some credit risk.
Yeah, overall with fixed income, once again,
I don't really know.
similar to the equity markets.
I'm not like immersed in European politics. I get pieces of it throughout the day, generalizing things,
So, what we obviously see is
Megs.
cut rates, but we also think that what's going to happen is that.
How you like my stonk pick, ALPS? That's a stonky stonk. Henrik, don't worry. Uncle Donnie will take care of them if they leave NATO. Henrik, Uncle Donnie will be there for you. Don't worry.
We're kind of a little bit skeptical.
All right. And Uncle Donnie will make sure that you got a nice cabin on the ocean if he decides to buy Greenland from you guys.
Think about tech and AI. Do you expect
Don't worry, Henrik. It'll be okay,
performance to
man.
broaden out next year, or do you still expect?
Whenever I smell free money, I go on the hunt. I heard that, man. I heard that. Whenever the money's, what I like is I like the stonky stonks at their 52-week low, not near a reverse split in any way, but have a real product and nobody's looking at it. I like just putting money in on those, you know what I'm saying? Waiting for the volume to show up. And then a news release.
Investors have gravitated towards this year. And we just think that going forward, the law of large numbers will start working against those stocks as we get into next year. And it will make the other, the broader market look a lot more attractive. And that's where investors.
Donkey ain't doing shit.
We think you're going to get a higher earnings.
Henrik loves Donald Trump. Henrik calls Donald Trump Uncle Donnie. No, Henrik don't like Donald Trump. That's why I tease him.
How concerned are you about that?
No, we're very concerned.
Oh, shit. USD going weaker and weaker every month since Trump. Yeah. Yep. I know.
Pretty robust gains over the previous years.
Yep, they may be. They may be at this. I can see the case for that, what you're saying, PBR. I can see the case for what you're saying.
Typically,
We got a lot of issues over here to get things turned around and get a foundation back.
I think we're going to lose a lot of the retail participation.
Hey, Craven. Are you talking about Uncle Donnie, Craven?
Names that have not been where people have been crowding into.
Yeah.
Is where a lot of the capital will flow.
What sectors in particular do you expect in terms of seeing some capital?
All right, guys, are we going to roll over again? Let's look at the NQ. ES and NQ are challenging this level again. ES and NQ are pretty organized right now, actually. Yeah, he does. Yeah, we got a lot of debt to deal with, and we got to find a way. We got to find a way. Things are so expensive over here right now. The young people are starting to turn towards socialism because they have no chance of buying houses and having families and stuff. So we got a lot of work to do over here. We got to get serious about things.
We think there's going to be a lot more M&A.
When I say young, I'm saying like the late 20s to early 30s
We think that's good. Those are
people.
that we still consider
Hey, SM. How you doing, brother?
through the year. Also like healthcare. Healthcare has a little bit of defensive and offensive characteristics.
How you doing today?
Right.
You slinging some pizzas tonight or
Hey,
what?
Joe, thanks so much for joining us. Really appreciate getting some of your time. Joe Gilbert, he's the senior portfolio
gotta-
manager.
Did you got your test next week, right? Not tonight, tomorrow.
Talk to George Ferguson.
Did you take your test? It's next week you finish your test, right? So you can finish the semester.
I guess here, citing the shutdown. So we'll break that down.
You ready for them?
George here.
For them?
S&P up 10, the Dow up
You ready for those
67,
tests?
And the
Yeah.
Nasdaq up 40 points, about 1/10 of 1% across.
Or is it a bell curve? You just got to get close enough to be on the right side of the curve. I'm joking about the bell curve. Donkey is only helping his friends, bankrupts honest America. So that is freaking fucking cheap. Henrik's a big Donkey Donald. Henrik's a Donkey Donald fan. I got to be honest with you, Henrik. You know, when he's sitting there with all those auto corporate execs in the White Office all back slapping each other as he's signing paper is not a good look. It's not a good look. That's exactly what it looks like. But what he was actually doing, hey, Dan Tesla. Hey, I got my first chat in from Rumble. Let's everybody say hey to Dan Tesla. Everyone else is over on the Twitch chat, Dan Tesla. He says, I like Tesla and gold. There's a lot of guys shorting gold futures right now, Dan Tesla. Let's see, a lot of US. Hey, good to see you, man. I'll give you, if you hold on a second. Do you trade futures, dude? I'll give you the introduction to the channel. They're not, a lot of US farmers are having a hard time at the moment. Yeah, he's rounding up the slaves, but they are working on subsidies for the farmers. See, the Biden administration completely gutted the farming, and they're trying to create these big, huge corporate farms where they make fake meat and are basically owned by Bill Gates. There's been a lot of food processing plants burned to the ground. It's a mess over here, and they're trying to clean that up. Oh boy, I can see he does have big TDS, not realizing what Biden did to farmers. Yes. Yep. Yeah, they're actively working to try and help US farmers rebuild the livestock inventory. Hey, Dan Tesla over on Rumble, man, do you trade futures? Are you a trader? If you want to kind of let me know where you're at, I'll introduce you to the channel. I think I can. That's my first dude from Rumble.
This is Bloomberg Intelligence with Scarlet Fu and Paul Sweeney.
I'll give him the Discord link.
Norma Linda here for Scarlet Fu
Where's
today,
the
here
Discord
with Paul
link?
Sweeney in the studio. We're looking at
I'm
markets
gonna have to figure out how to get all the chat in one place. But yeah,
indexes in the green. We have the S&P 500 up about
they're having a hard time. Plus we're slowly moving these people, all the slave labor out of here. I mean, it's not really fair for those people to be stuck, not being citizens, getting paid just barely enough to eat off. And I mean, it's not fair for them. It's not fair for the Americans. It's not fair for anyone. And it's something that needs to be dealt with.
But this did drag on a lot of the major airlines. And we have a wonderful person to discuss.
We got a new friend on Rumble.
Of course, he's Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst. And we want to chat a bit about what's going on.
I've only been on there for like a week
and
now.
how government shutdown actually weighed potentially on this company here.
But hey, Dan Tesla, are you still there, dude?
From Southwest.
Yeah, I mean, it was.
I got a beginner's guide in the Discord. If you don't like Discord, you can go to the About page on the Twitch channel,
on the quarter,
and you can see.
It was in line with what Delta Airlines had reported. We thought, perhaps Southwest.
I got to figure out how to do this.
As they're not as heavily into the sort of the high volume airports, and actually I think I was a bit surprised as well that they talked about the booking curve. We think most people. Typically book well before the holiday season, so we wouldn't have expected their booking curve to be as impacted.
Here's the Twitch channel.
Again, I think it's largely in line with what we expected.
Right. I was gonna have to work on that this weekend, or I get distracted. Hey, how about them data centers everywhere? I wish they'd burn. I wish people would start fighting those.
So George, what's the?
They're trying to put one near me here in a small town.
26 outlook here.
Get rid of the 55 million visas and boom, you can. Yes, that is a 1,000. Bashfield, with a few strokes of his pen, he could eliminate the boom. And everybody, every young person that wants to have a family can go buy a house again with a stroke of his pen. He could do that. The problem is I'm not sure if he's surrounded by people that are letting him know that. Because as of right now, I don't think we're going to win the midterms. I think it's all going to be lost at the midterms. Because if I was like, look, I bought my first house when I was 29. If I was 29 again, making what I made back then, there's no way I could have bought a house. There's no fucking way. It would have been 3 times as much. We would have never been able to do it back then. We can do it now, but we've had 20 years. 15 20 years to, build our careers, our income, our worth, so it's different. But not when we were starting out. No way. No way, man.
2025. So we're thinking that premium seating, full service seating could be a
back when I was young. No. Back then, listen. In northern New York, near the Canadian border, we bought 10 acres of land. I had a barn on it. I had a 4-bay garage that was detached from the house, and it was a 3-bedroom house with a basement. Maybe 1,800, 1,900 square feet with a basement. Paid $159,000 for it. Our mortgage was like $1,300.
Got a bit of a kicker, got a tailwind from lower.
That same house today is over $500,000 at 8%. So instead of a $1,200 mortgage, it's like a $4,000 or $5,000 mortgage for the same house. You know what I'm saying? That's how fucked up things have gotten. That's why I'm saying to have what I had. And, we did okay. My wife was in banking. She was a bank manager. And I worked in the car business. I started selling, and then I was a finance manager, and I was a desk manager. So we did pretty good. We did okay for, regular people. But regular people like that.
The truth is tariffs really.
However, I probably take margin to buy some of the U.S. equidties off the Fed chair first MOC call. Yeah, no, that's not even true, Sky. Whoever said that has no reality of what it's really like to be a regular person born into the world without, having to try and make most of it yourself. Too many undervalued gems that may generate quite a bit of value if rates go down.
Bridges the U.S. and Europe, and it's definitely sort of a NAFTA.
What you talking about, PBR?
Free trade zone is.
But anyway,
there's a lot of componentry that moves around.
No, I didn't buy the house with cash. We just got a mortgage like everybody else. We put maybe 10% down or something, or I don't remember. Not a lot. It wasn't a lot. It wasn't even really hard to buy. We just had to find one that we liked.
I think some of that had to play, obviously, with the European agreements.
Shit, actually, to be adding up with the iced coffees, imagine that $5 beat. Yes, that's very true. I mean, I can spend $20-$30 a week at Dunkin' Donuts easy. FinTech is undervalued due to risk provisions. FinTech, I've heard of FinTech. Oh, hey, we got the long coming on. Here I am chatting. And all right, so I'm in a long. I'm on my confirmation candle for the long. So the cross candle was right here. The cross candle, so I'm on my confirmation candle. This is how I got trapped yesterday. So my entry is going to be on this candle if I go long. If rates would go down, people, yeah, we need rates to go down. So I'm going to wait and see what this candle does, and I may get in on the long here.
Via satellite radio and Sirius XM channel 121. Access the world's only global audio business network, coast to coast.
The problem is the ES looks like it's about to burn through Middle Earth. ES isn't a full-on short is the problem right now. Where the NQ is looking to go long.
Coming up in just a moment. Nora, thank you so much for sitting in for Scarlett.
So I don't want to get plowed.
Absolutely.
We're in the VWAP again, damn it. And I got
a
a Zoom call I got to do in 2 minutes here.
Scarlett is back next week. She's been on assignment, I believe, for Wall Street Week.
I got so much going on.
We'll be seeing that soon. Your top stories and global business headlines are coming up right now.
I'm giving a sermon on the housing. All right. I'm going to wait to the next candle. I'm going to wait to the next candle on the NQ here and see how it does on whether I'm going to take the long or not. Yeah, it has, Scotty. It's completely unreasonable.
Panel stands to shift vaccine policy for the very youngest. Sabrina Cupid of WSB Atlanta.
8 votes yes and 3 votes no. The motion passes.
A federal vaccine advisory committee has voted to.
All right, we got 46 seconds to the next candle.
U.S. babies get the hepatitis B vaccine on the day they're born. Dr. Cody Meisner voted no.
And I will just say, we've heard do no harm is a moral imperative. We are doing harm
For decades, the government has advised that all babies be vaccinated against the liver infection right after birth. The shots are widely considered to be a public health success for preventing.
If you don't mind me
thousands of
asking, what's the
illnesses.
biggest one you've
Today's
taken from your
recommendation,
whole?
which has to be accepted by
I've had
the director of the
$10,000
CDC,
days.
would overturn a 30-year-old policy.
Well, President Trump's come out with a new national security strategy that portrays European allies as weak and aims to reassert U.S. dominance in the Western Hemisphere. It's expected trade will
I've never,
Trump meets with leaders of Canada
I've never made
Mexico
more
at the
than
World Cup
12 or
soccer
13 on
draw,
one
which is
trade.
going on now. CBS's Willie
But that was like a
James in.
perfect trade. All right, so this is the next candle. It's kind of getting me nervous here. All right, I lost the control EMAs. So this is a...
how all three of these nations will.
All right, I've got no trade here right now. I've got a... I've got no trade.
Netflix has struck a deal with Warner Brothers.
But I'm working prop firm stuff now, man. You know, I'm the prop firms. It's like prop firms are paper trading. You know what I'm saying? It's not real money. I don't have a live cash account right now. I'm trying to get my strategy reprogrammed and get everything fine-tuned. Then I'll start working my paid accounts through the prop firms and a cash account. Again. Yes, very true. Yep, COVID was designed to strip wealth from regular people. But that's a whole long conversation. I can't get into it right this second. I'm trying to watch this long. I got to go do a Zoom call, guys, for a client. I'll be back in a little bit.
New York saw the biggest rent increases, followed
Yes, that's what prop firms are. Did you watch that video? Yes. Yep. So you pay for an eval. Okay, so you pay for the eval. You got to pass the eval. That's step one. And then once you convert it to a paid account, if you follow the rules and get to the point where they allow you to have a payout, they'll pay you. They will pay you for paper trading. But you got to pass their test and follow their rules. And they're usually really good rules to follow anyway. So that's why I like it. It makes you into a better trader. And plus, if you can get a payout from a prop firm, then you can handle your own cash. I think that's the test for handling your own cash. So you can pay, $30-40 for an eval, and it's usually 119. Once you pass the eval, it's 119 usually to convert it to a paid account. And then you don't pay anything else. You trade it and keep the account. And once you get to the limit, once you get to the amount of profit they want to see by following their rules, you can ask for a payout and they'll pay you. Yep. And then if you're good enough, they'll ask you to trade their money live, or you just take the payout and you fund a cash account with it. Then you didn't really risk any capital. All you did was use your spare money to buy the eval. You know what I'm saying, Callista? But hey, I really got to go. I really got to go. If Callista has some questions on the prop firms, if you guys could help out, I'm going to be gone for about 20 minutes. Does that mean you could just keep doing? You could, but at some point they're going to cut you off if you're too good at it, because there's no point in keep paying you. They're going to want you to be a live trader. You know what I mean? Or you can just move around to prop firms. Yeah, Eric Heels is a great prop firm trader. All right, I got to go, guys. Thanks, Eric Heels. I'll be back in 20.
40 album, Dave's Picks, Volume 56, recorded at the Rainbow Theatre in London in 1981, hit number 25 on the Billboard 200 last month, breaking out of a tie with Frank Sinatra and Elvis. The 4-set CD features nearly 5 hours of music. Deborah Rodriguez, CBS News.
A preliminary cauldron has been lit by the Olympic flame at Italy's presidential palace as the countdown to the Milan Cortina Winter Games nears the 2-month mark. The flame arrived from Greece earlier in the week. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's open season for redistricting. Welcome to the Friday edition as the Supreme Court rules Texas can redraw its congressional map, a move that, of course, has prompted a red-blue tit-for-tat across the country, and it's not stopping. We'll discuss the impact of the court's decision and the effort to extend health care subsidies. In an exclusive conversation we're going to bring you in a moment with Democratic House Leader Hakeem Jeffries, only here on Bloomberg Radio. We'll talk with the constitutional law attorney Robert McWhirter about that Supreme Court ruling and the legality of U.S. strikes against Venezuelan alleged drug boats. And we'll have analysis from our political panel as President Trump takes part in the FIFA World Cup draw. It's a busy day in Washington, and we start, as always, with Charlie Pellet, his view of the market live from World Headquarters in New York. Charlie, happy Friday.
Right, a happy Friday. What a week. Well, we say that every week, Joe Matthew. We've got the Dow, the S&P, NASDAQ. They're all pushing higher right now. On to the weekend with the S&P right now up 1468.71. Where we stand, we're looking at a gain now of about 0.2%. Dow Industrials up 82, up by about 0.2%. NASDAQ Composite Index higher by 59, up by about 0.3%. Stocks, however, pairing gains after flirting with records. The 10-year 4.12% with a 2-year currently yielding 3.55%. Spot gold is now trading higher. Little change. The key takeaway there, up by about 0.1%. Precious metal at 42.17 the ounce. West Texas Intermediate crude 60 even a barrel, up 0.5%. And Bitcoin down 3.5% right now, below 88,096 on Bitcoin. So the Dow, the S&P, NASDAQ all higher. S&P 500 index right now trading at 68.70. The old record 68.90, up by 0.2% right now. As for the market backdrop, Urian Timmer is director of global macro at Fidelity Management. He was interviewed this morning on Bloomberg Surveillance.
You don't want this to be a runaway train that ends up, in tears. Rather have the tree shaken occasionally of weak-handed longs in order to sustain that bull market.
Urian Timmer of Fidelity interviewed this morning on Surveillance. You can hear more of that conversation on the Surveillance podcast. Netflix is buying Warner Brothers Discovery in a history-making combination, joining the world's dominant paid streaming service with one of Hollywood's oldest and most revered studios. It's a $72 billion cash and stock deal. Right now, Netflix down 2.9%. Warner Brothers Discovery up by 2.6%. Some of the other players, Paramount, Skydance down 7.8%. Comcast higher now by 1.3%. Again, recapping, S&P up 11, up 0.2%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, does that mean that we only pay once for Netflix and HBO Max? I'm trying to figure this out.
And I think the consensus here is that you'll only pay once, but you're going to pay higher, a lot higher. Maybe not a lot higher,
more.
But certainly somebody's got to pay for all of this.
Isn't that what they did to Hulu and Disney? There's too many bills, Charlie. I can't keep track of them all. We'll get more on the market.
Remember back in the old days where you had one cable coming into the house, and you flip through the channels, and as the song goes, 57 channels and nothing on it.
Nothing on.
Except
That's
for Bloomberg
Charlie.
TV.
See, I love that. Well, and then we cut that cable and made our lives more expensive. I'm still trying to get my head around that, but God bless Charlie Pellet. He'll have more from World Headquarters. Just about 15 minutes. We'll get back to New York for the look at the Friday trade. It's not every day in Washington, or anywhere for that matter, you get Donald Trump, Tom Brady, and the Village People in the same room. But that's what we have for you today at the Kennedy Center. It's snowing out in Washington. It's a beautiful day, actually. Kids went to school late. There's pretty much nobody on the roads around here. And the FIFA World Cup draw is underway. A little bit later on in the program, we might see Donald Trump on stage up there because, there's this rumor around town that he's going to win the inaugural FIFA Peace Prize. If that happens, we will let you know. In the meantime, we've got a lot of things to figure out today in Washington after a ruling that dropped from the Supreme Court after the late edition of Balance of Power yesterday. 6-3, Texas can move ahead with its plans to redraw congressional maps. Indeed, the new Republican-drawn map, the redistricting for next year's election, will be in place. And you know what that means. Look to California. Look to Indiana, Florida, even New York, and other states that have considered redrawing their maps because of what Texas was doing. We have this story and, of course, a looming vote next week. And we're not sure exactly what they're going to vote on when it comes to extending or reforming health care. That's why we left the building today to go up to Capitol Hill and spend some time with the Democratic leader in the House. Hakeem Jeffries with us here exclusively on Bloomberg Radio. Listen.
It's unfortunate that the Supreme Court has rubber-stamped a racially gerrymandered extreme map that Donald Trump ordered Texas Republicans to engineer as part of his effort to try to rig the midterm elections in 2026. But notwithstanding this adverse ruling, we're going to continue to move forward and ensure that there is a fair map across the country. California voters enacted Prop 50, and as a result, we'll have a fair map in California with some additional opportunities to be competitive, and I expect that you'll see other states across the country continue to respond.
Will yours be one of them? Are you on the phone with Governor Hochul today saying it's time to redraw the New York map?
Well, the New York map has some particularities relative to the Constitution that won't necessarily allow it to be revisited in this particular cycle. But some voters have filed a lawsuit in New York, and we're monitoring that litigation closely to see what the outcome may be.
Okay. There's a question about whether you really need it. Leader Jeffries, after the special election in Tennessee on Tuesday, we saw a plus 22 Trump district go down to a plus 9 Trump district, and you've got a lot of armchair mathematicians out there suggesting that could mean as many as 30 or 35 seats for Democrats in the midterms. How do you see it?
Well, Republicans know that if the elections were held today, they would lose. That's the reason why Donald Trump has decided to engage in this extreme effort to gerrymander congressional maps all across the country, and it's very unfortunate. Our view is that we're not going to unilaterally disarm, and we have to ensure that there's a fair map nationally across the board so that it's the voters who get to decide who is in the majority after the November 2026 election. Part of the challenge with Republicans is that they've broken all of their promises. They indicated that they were going to lower costs. In fact, lower costs on day one. Costs haven't gone down in America. Costs have gone up. Housing costs are through the roof. Grocery prices through the roof. Electricity bills through the roof. And now, because my Republican colleagues refuse to extend the Affordable Care Act tax credits, we know tens of millions of people are about to experience dramatically increased health care costs. Democrats are actually the party focused on driving down the high cost of living.
And so let's talk about a couple of those points of leverage that you just pointed out. Affordability and health care. Many would argue that it's kind of the same story here. President Trump has been saying that affordability is a Democrat hoax, a Democrat con job. Does that mean you do not have Republicans on board with you in reforming health care or extending Obamacare subsidies?
It appears that way. It's unfortunate that the president's position, which is the Republican Party's position, is that the affordability crisis in the United States of America is a con job and it's a hoax. No, what was a con job and hoax was the fact that Republicans spent all of last year claiming that they were going to lower the high cost of living in the United States of America, that they were a party committed to addressing the inflationary pressure that the American people were under. That's all they talked about last year. But they lied to the voters. That's the con job.
They lied.
They absolutely lied to the voters because there's no evidence throughout this year that they've had any intention to actually address the affordability crisis that exists. In fact, they now say it's all a hoax. But everyday Americans, when they go to the grocery store, the supermarket, when they see their health care premiums dramatically increasing, when they see the electricity bills that they have, which are through the roof in part because Republicans in their one big ugly bill attacked the clean energy economy at a time in America where we have growing power needs in terms of what we see with the expansion of artificial intelligence. It's all extraordinary. So Republican leadership has made it clear they have no intention to extend the Affordable Care Act tax credits, and that's very unfortunate.
You know what the White House would say? Hold on, Leader Jeffries. This president's been working overtime to cut deals to lower the cost of prescription drugs. Does he deserve credit for that effort?
We haven't seen any evidence that prescription drug prices have gone down in any meaningful way. What we have seen are that the Trump tariffs are out of control. They've increased costs by thousands of dollars per year on everyday Americans, and they've created an uncertain environment for businesses and corporations throughout the country. And we know that uncertainty is one of the biggest problems that American corporations and companies may face. It's difficult to actually make investments when you have this chaotic environment that has been visited upon the economy.
So let's talk about what you can get done before the expiration of these subsidies at the end of the month. A bill was introduced yesterday, a framework that was bipartisan. A Democrat and a Republican, Gottheimer and Kiggins. It would extend these subsidies for a year and put new collars on eligibility. Is this a path to renewal in your eyes?
Well, we'll have to take a look at the particulars in the four corners of that bill.
Yep.
214 Democrats have signed a discharge petition that will extend the Affordable Care Act tax credits for 3 years and give the American people the certainty that they need in order to move forward during these otherwise uncertain times. All we need are 4 Republicans. There are 219 of them. All we need are 4 House Republicans to join us, and we can extend the Affordable Care Act tax credits. We also want to take a look at what happens in the Senate. I'm thankful for Leader Schumer and Senate Democrats who will put a bill forward next week and force an up or down vote on an extension of the Affordable Care Act tax credits. You know, we're in this fight until we win this fight on behalf of the American people, because in the wealthiest country in the history of the world, it cannot be the case that working class Americans and middle class Americans are unable to afford to go see a doctor when they need one.
Are you in touch with the Speaker of the House on this? Is Mike Johnson talking to you about a potential vote after John Thune promised a vote on health care in the Senate for next Thursday?
You know, the big challenge with House Republicans has been that they've adopted a my way or the highway approach. They have zero interest in actually sitting down and finding a bipartisan path forward. We've said from the very beginning of this year and throughout the Trump Republican shutdown that we will sit down with anyone, anytime, any place here in the Capitol, or go back to the White House, sit with the president to try to figure out how we can fix our broken healthcare system and address the Republican-created healthcare crisis that's devastating people all across America. They've refused repeatedly to sit down and even try to find common ground.
My conversation from a short time ago with Hakeem Jeffries, of course, the Democratic leader in the House of Representatives. If you want to see the full interview, go to the terminal or look online at Bloomberg.com. Find it on YouTube. Moments after we spoke, this is important. The Speaker of the House may not be in touch with Hakeem Jeffries, but is with Bloomberg. And as we just learned this morning, Speaker Johnson is pushing to unveil a Republican health care bill in the coming days for a vote, his office says, by the end of the month, when, of course, Obamacare subsidies would expire. We'll have much more on this for you as we learn more. Live from Washington, I'm Joe Matthew. Thanks for being with us on the Friday edition of Balance of Power, only available on Bloomberg Radio.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We are well off session highs, but still looking at gains for the Dow, the S&P, and NASDAQ. S&P up 8 right now. It's 68.65. Keep in mind, the record for the S&P is 68.90. Right now, we're looking at a gain on the S&P of 0.1%. The Dow up 74. That's an advance of 0.2%. The NASDAQ Composite Index up 34. NASDAQ up now by 0.1%. Our Mag 7 Index up by 0.1%. The 10-year currently yielding 4.12%. The 2-year 3.55%. Bottom line, though, stocks pairing gains after flirting with records. We've got spot gold up $7 the ounce, up by about 0.2%. 42.15 where we stand on the precious metal. West Texas Intermediate crude oil up 1%, above 60 now at 60.25 a barrel. And Bitcoin, 88,978 Bitcoin today, down by 3.5%. Earnings news, Victoria's Secret reporting better than expected sales, also lifting its outlook for the year. Shares of VSCO, Victoria's Secret, up by 10.9%. Also after earnings, Hewlett-Packard Enterprise down now by 0.7%. And Ulta Beauty surging after earnings by 13.6%. Netflix is buying Warner Brothers Discovery in a historic combination. Netflix down 3.1%, Warner Brothers Discovery up by 2.3%. Again, recapping, S&P higher, up 0.1%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Great to have you along for the Friday edition, and we'll have more with Charlie Pellet. In just about 20 minutes, we'll update the Friday trade for you, which we do every day here on Balance of Power. Thanks for joining us on the early side. I'm Joe Matthew in Washington, where the FIFA World Cup tournament draw is underway officially at the Kennedy Center. And yes, President Trump is in the box. We also, in fact, saw the leaders of Canada and Mexico there. They're all up on the screen at the same time smiling. Maybe this is the salve we need for trade in the hemisphere. But a short time from now, we understand that the inaugural FIFA Peace Prize will be awarded. He was asked on the way in, because you've seen the stories, right? This is supposed to go to Donald Trump. He was asked on the red carpet if he was hoping to win the prize or if he had been told. He said there's no hope. He would just be honored. In fact, went on to say, I don't need prizes, just to save lives. The pool is in the room there. When he gets on stage, we'll show it to you as we keep tabs on the latest here. Big questions about redistricting this morning. After a late call by the Supreme Court last evening, this dropped after the late edition of Balance of Power. Right when you thought Texas had to put the map down, the U.S. Supreme Court has cleared the state to use its new Republican-drawn congressional map, the one urged by President Trump for next year's midterm elections, lifting a lower court ruling that had blocked the map. Now, this is, of course, the effort that took place in Texas that prompted California to pursue Prop 50, that prompted many other states to start doing the same. Red states and blue states trying to push back with their own redrawn maps. And we still don't have a real sense of exactly what the country is going to look like when it comes time to vote, never mind launch a political campaign. This is a 6-3 ruling here. It's one that we've been waiting for. And it's only where we begin our conversation, because we have a lot to talk about with constitutional attorney Robert McWhirter, practicing criminal defense civil rights lawyer in Maricopa County, Arizona, back with us here live on Bloomberg. Mr. McWhirter, it's great to see you. Welcome back. It's open season then for redistricting, right?
Oh, it looks like it. It's very interesting what the court does, and some of the liberal justices seem to go along with this. It looks like there's going to be a reworking of the law related to racial gerrymandering. Remember, the Supreme Court said regardless of how many voters you disenfranchise, you can politically gerrymander all over the place. I think that's terrible for democracy, and I'd like a court someday to really look at that issue or relook at it. But always racial gerrymandering has been violative of the 15th Amendment and the Voting Rights Act of 1966. So they seem to be signaling that they're going to relook at that law related to that. In the meantime, Texas, the new map seems to be back in place.
Does this allow every other state to do what it wants? California, for instance, is being challenged, even though it put the vote this idea to a vote before voters, but there are at least a half dozen other states that are thinking about doing this. Do they just plow ahead now?
I think they just plow ahead. I mean, you can't argue that what California did, which is also bad for voters, really. And I think California recognizes it because they want to dial that back after this whole election cycle is over. After I think it says 3 years in that resolution, it is bad for voters. But you can't now say that what California is doing as political gerrymandering is somehow bad after you've just given the stamp of approval to Texas political gerrymandering.
Elena Kagan writes, today's order disserves the millions of Texans whom the district court found were assigned to their new districts based on their race. This is not so cut and dry. When you add the racial component, Robert, and I'm glad that you brought this up, it's still back to the drawing board here, right?
Oh, I think very much so. And again, we're going to have to see how this plays out in the court. But what you have is a majority on the court that is not open to the issues that courts used to be sensitive to about racial discrimination in voting. Remember that the great cases that came out about racial equality had mostly to do with voting from the Warren Court from the 1960s. And this seems to be a court that's trying to dial that back. And they also seem to have this fiction that we don't have racial problems in this country anymore and that people are discriminated in voting on the basis of race. So on the basis of that fiction, they seem to be going forward and saying, okay, we don't need this fix that the 15th Amendment clearly says is constitutional. And so they're just kind of reread all of that. And I find that very, very sad and disturbing. But at least with this court, there's not much you can do about it.
Well, let's talk about what's happening meantime in the Caribbean, because there are a lot of questions about legality surrounding what we're now all calling the double tap strike against this alleged drug boat coming out of Venezuela. It depends on who you talk to on this, Robert. If you talk to a Republican in the briefing yesterday, they're probably going to tell you that the U.S. acted legally. That's certainly what Tom Cotton said. He called the strikes righteous, I believe was the term that he used. Democrats, meantime, are outraged, and there are big questions about whether, in fact, we can put the idea of a war crime aside for now, but in fact are conducting an illegal operation off the coast of Venezuela. How do you see this?
Well, Senator Cotton can call things righteous, but I'll note he didn't say it was legal. He may think it's righteous, and that's a political statement, but whether it's legal is a whole different thing. If I was Pete Hegseth, I'd be getting pretty nervous under the collar right now because it looks like what is clearly shown is that there were survivors clinging to this boat, and they went back and did another strike to just kill people. And by the way, they had presented no evidence that this boat had drugs in the first place. I mean, look, the normal course is the Coast Guard is always operative in the Caribbean. They often grab boats that are drug traffickers, and if those boats existed, they are more than happy to display the evidence as justification for the arrest and seizure of the boats. This is just wanting to blow things up with no evidence. That's the first problem. But then going back, there's a whole series of rules on this. And by the way, this goes back to World War II, when Grand Admiral Dornitz of the German Kriegsmarine ordered basically, or sent out an ambiguous order that was clear to his submarine captains to not help any survivors of the boats that were being torpedoed. Well, at Nuremberg after the war, that was considered a war crimes. And under the War Crimes Act of 1996, which Congress passed, a violation of international law, in this case the Geneva Convention, is now prosecutable under American law in federal court. Now, the Justice Department has to do it, and obviously Pam Bondi's probably not going to do anything, but there's something that Pete should really worry about, and that is there is no statute of limitation on this. It's a murder on the high seas, and he can be prosecuted under another administration 20, 30 years from now if it takes that long. So if I'm Pete, I'm getting pretty nervous, as should the admiral who ordered the strike.
Okay. So, but that would also suggest the buck stops with the defense secretary. I'm going to hold you right there for a minute, Robert, because we've got breaking news down the street at the Kennedy Center. I didn't see this one coming. The inaugural FIFA Peace Prize goes to Donald J. Trump. This is a live shot. You might be listening to us on the radio. He's walking out on stage right now. And there is the trophy. This is quite remarkable. They were just playing a sizzle reel, the FIFA Peace Prize. All right, is there a red hat on that? Robert, I'm sorry. We just need to keep the news flow as it's going here. Okay, so if you're the admiral and there were pre-existing conditions set by the defense secretary that were outlined in the New York Times, he just put the medal on himself? These conditions dictated how to handle a scenario like this. And if in fact the individuals were shipwrecked, incapacitated, no longer considered in the fight, they would be rescued. And Robert, that's what we have done since that first strike, isn't it?
Oh, yes. But this is different. Look, the admiral, I think, is potentially looking at prosecution under the Uniform Code of Military Justice. You did mention Donald Trump. I'm not sure Donald Trump gets a pass on this either.
Wow.
You know, the Supreme Court granted Trump broad immunity for any official acts. But we do have the War Powers Resolution from 1973, which drastically limits the power of the president to fight an undeclared war. And this is an undeclared war. In fact, it doesn't even fit the definition of a war, regardless of what people like to say with the rhetoric. So it's not beyond the realm of possibility that Donald Trump can be prosecuted for this as well, depending on where the order emanated. And as this
Oh, hey, I'm back. Hey, Callista.
throwing each other under the bus on this issue.
Are you there? You want to do
To the president.
the add-on one day? You want to take the 1 day and you want to take the reduced PA. You don't need the reset
Said so in the Oval Office that he's
for the bundle. Are you there?
that video. So
I just got off my
maybe we'll
call.
be talking about this together at some point soon.
You want to confirm that?
Down to our final minute here. I don't know if you're buying the dip on Netflix right now, but we've got a massive
Okay, yeah. So you've got to
about
reset
Netflix
if you want to
buying
use it
Warner
on
Brothers.
something
Is
later,
this-
or you got a reduced
pass muster with regulators?
reset. Okay, all right. It's just $1. But if you do another one, you don't need that one on the bundle. You just need the first two, not the add-on, not the reset, the add-on reset. But all right, if you get like, if they ask you who sent you, just tell them Trading the Forecast did.
Another thing to look at, and that is
And maybe they'll want me to
states'
sponsor
law and
them.
antitrust laws. And if you may recall, in the year 2019,
Okay.
it was the
No,
states
you
that
gotta, okay,
prevented
hold
the
on.
merger between Sprint
You're
and
gonna get
T-Mobile.
an email and you gotta
So
follow
even
the
if
directions in
Donald
the email. You
Trump
gotta set up
exercises undue
Rhythmic
influence
and you gotta
and
set up
somebody
Ninja
gets
Trader.
involved and
Or
wants to
what,
approve this, typically he'll file
well, you don't
a
have to
lawsuit
use
and then
Ninja
several
Trader.
lawsuits
Do you
later,
have,
and then he lets the merger
are
go
you
through
using, what are you
and
using
claims he
for a
won a
broker now?
lawsuit
Do you
against
have
the news outlet.
Tradeovate and TradingView,
Yeah,
or
but
do you
they have to worry
you
about all
use
the different
Ninja
states'
Trader?
attorneys generals as well, because this affects every consumer in every state. And I can't sit there on my couch. at
Did you
night
get the
and
did you
a
get the
nice
setup email?
inexpensive
Because you got to
movie
set
anymore
up.
because of antitrust
You have to
laws.
you have to follow their directions
A lot
on
of
how to
lawyers are
set
gonna
up.
make a lot of money, it sounds like.
I got to make this video
Robert
on how to
McWhorter,
set
it's
up
great to
Rhythmic.
have
I
you
got to
back.
make a
Let us know
Rhythmic
when you're
video.
coming to Washington, for crying out loud. Constitutional law attorney practicing criminal defense and civil rights.
Let me
lawyer,
know if you got that
covering the
email.
waterfront with us here on the
Okay,
Friday
you're
edition.
not going to be able to
We'll
use
have
it on
much more
that.
news straight
Download.
ahead
You're gonna
here.
have.
We'll
Can you
sum
use
up
my
the
link,
panel.
my affiliate link to use Ninja Trader? You're gonna need Ninja Trader or Tradeovate. Yeah, no, you're. When you get that email, when you get that email, read. Oh, you do? You have an account in Ninja Trader? Okay, that's what you'll use. Use Ninja Trader. It doesn't matter. You don't need funds. You don't even need a data connection. Rhythmic's going to provide the data connection with Lilu's login portal. So your next job is go get the email from when you set it from when you set it up, and you got to set up Rhythmic, okay? You don't need any funds. You just need the Ninja Trader account. All right, guys, we never went long. And we kind of confirmed the short rate. Well, no, and the short never came again. So the short was really from this morning. These are the worst days if you don't get in early. All right, let me know where you're at. But you gotta get that email first. Let me know when you have the email. Okay, so sorry guys, I'm doing 5 things at once here. So you want to follow the instructions in that email to set up Rhythmic. Okay, let me know if you have an issue. You gotta set it up exactly the way they say, and then you gotta go in NinjaTrader and configure it. And configure NinjaTrader. Okay. Okay, so you need to download Rhythmic. You got, all right, hold on. I gotta make a video of this. Hold on. So you need to go to the knowledge base. You gotta set up Rhythmic, okay? It's not set up correctly. Hold on, let me. I know it's a pain in the ass the first time, I know. Hold on. So you need to go to Lilu support, go to lilu.com, go to support, and then go to the knowledge base, okay? And then go to connection guides. This tells you how to do it.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all advancing. We're off session highs. Little change right now on the S&P 500 index, up by just about 0.1%. Dow Industrials up 51, also an advance of 0.1%. NASDAQ up 30, up by 0.1%. But we are seeing a decline in the Russell 2000 index of small cap shares.
So you're okay. So you're at knowledge base, and then you got to go to Connection Guides A, required first step, Rhythmic Trader Pro. Okay.
Gold little changed, up $2 the ounce.
And you got to set it up exactly the way they say here. You just do the top area. Like this. You got to set it up like this right here.
890 on Bitcoin. Bank of America CEO Brian Moynihan says November consumer spending.
And then you got to go over to NinjaTrader and you got to configure it. You got to configure it in NinjaTrader to connect to Rhythmic.
From Washington.
you can get deals done, and you're seeing the time
and
frame of
your
drop by
your
half.
eval should
And
show
that's
right
important
up.
because the idea of a deal being open for a year and a half, or
And then we can
that's
do
tough
some
on the
full
companies.
ports.
And so that's good news. Then the
All right.
second thing is settling out the major.
We're not doing
policies
full
that
ports. That was a
you guys
joke.
talk about every day on
But you
trade,
can if you want. But
immigration,
no, don't do
tax.
it.
Those are settling in, so we can see that. There's still work to do. But I think that means that companies can look and discount cash flows and make decisions. And then even a rate structure that's higher, as long as it's consistent, they can plan into it.
Brian Moynihan, CEO of Bank of America, he alluded to deal making. Speaking of which, Netflix buying Warner Brothers Discovery in a historic combination, joining the world's
Yes.
dominant paid streaming
Yep.
service.
You got to download and set up Rhythmic first.
Most revered studios.
No, our Trader Pro, right?
$72 billion cash and stock.
And what you see on the
Netflix
screen is
shares
how
down
it should
now
look.
by 3.4%. Warner Brothers Discovery up by 1.9%. Recapping, stocks higher, S&P up 0.1%, Bitcoin down by 3.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Balance of Power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we thank you so much, and thank you for being with us here on the Friday edition on the early side. Balance of Power. Indeed, I'm Joe Matthew in Washington, where it's a snow day today. Kids went to school late. Snow's still
I'll be
coming
right
down, as a
back.
matter
2
of fact,
seconds.
As we are reminded that winter is upon us, and quite the festivity underway down the street at the Kennedy Center, the building that the president envisions someday being called the Trump Kennedy Center. He is the chairman of the board now, right? It's the FIFA World Cup draw that's underway now, and if you were with us a short time ago, you heard the breaking news. The headline on the New York Times here, as Trump covets Nobel Peace Prize, FIFA cozies up to him with its own award. Well, now, how did they know that? This came out at what time this morning? This came out just after midnight. It's almost as if everyone knew what was going to take place. Yes, Donald Trump won the inaugural FIFA Peace Prize a short time ago when he was asked about it on the red carpet when he was walking in. Listen.
I can tell you I did settle 8 wars, and we have a 9th coming, but which nobody's ever done before. But I want to really save lives. I don't need prizes. I need to save lives, and we're saving a lot of lives. I've saved millions and millions of lives, and that's really what I want to do.
Don't need prizes. I just want to save lives. This is where we start with our political panel today. Bloomberg Politics contributor and Republican strategist Rick Davis is with us, partner at Stone Court Capital. We're also joined by Yemisi Egbewale, former chief of staff advisor to the Biden White House, our Democratic strategist, founder of Podium Strategies. It's great to have both of you with us, and welcome. Rick, you didn't see this coming, did you?
Yeah, Hard News Friday. I can tell this was really a big shock and surprise to everybody. At that event, President shows up for basically the FIFA draw. And,
all right, I'm back.
It's got to be the first time an American president's ever attended a FIFA draw. And
that must be true.
And just happened to be there when the award was announced. I mean, imagine the coincidence of him being there to accept this award in person. Congratulations. Look, the one talking point that I completely embrace of Donald Trump's, and he says it a lot, so it makes me happy, is that he wants to stop wars.
Okay.
And he wants to save lives. There is no downside to that. And I applaud him.
Let me know if you need to see that again.
Gone recognized
Got it
by
up
the FIFA
on the ES.
Group. Great. We look forward to having them all here, spending lots of money in 2026.
That's right.
Watching their version of football.
The headline on the screen, if you're with us on YouTube, Trump wins FIFA Peace Prize. And so here we are. Does the President of the United States deserve a little credit? As he says, he's stopped 8 wars. Is that how you see this?
I do see FIFA as a soft power moment for the president. I think his congenial relationship with FIFA has been beneficial to him on a global scale. I mean, at the same time that he's enacted tariffs on our allies that have put us at odds with some of our longest serving countries that we've been partnered with.
Just the top part,
This is
yeah.
really the time where he gets to
Just the top part.
piece people back together. But remember, he's doing it at a time where
Like
the
this.
backdrop is domestically in this country. Immigration is a huge
And when you
issue.
log in, you should
And
see
at the
your,
same
you
time,
should
when
see,
you overlay it with the fact that he is
You should be able to click on,
cities that he deems
let me look at
unsafe
mine.
for Americans and our fellow visitors.
You'll be able to
It's
click
all
on
a bit
Trader
of a swirl
Dashboard,
happening for
and
him.
I'll pop up, and you should then you should see your
What do you
5.
think, though, about what you first said there, with the President of the United States in this room with Carney and Scheinbaum? Could this event, which is, you know, made for TV and made for the president, actually bring world leaders together?
Yeah, I think this event could help folks feel a bit more confident in his leadership. I mean,
Maybe pull the hemisphere together. We've been at odds with our neighbors, Canada and Mexico.
Maybe the Canadians will come down, have a little bit of fun with us. I mean, he is right that his focus has been foreign policy, but that is to the chagrin of a lot of people who first elected him based on the fact that he was going to focus on domestic issues happening here and put, in a sense, America first. So I think the challenge for him and his team is, how does he promote the fact that he is this global leader while at the same time reminding his core base that he still believes in the values of America first?
The president was asked about this, you know, knowing that the leaders of Canada and Mexico were going to be in the room, of course, and taking part here in the draw, although producer James tells me there has yet to be a single team drawn yet. It's been going on for almost an hour. Here's what the president said about that.
How do you see the World Cup playing out with the tensions you have with Canada and Mexico?
Oh, I think it's going to make it more exciting. Tension's a good thing.
Even for the World Cup?
Yeah, I think so. I think it makes it much more exciting.
All right, let's see if we can see if we're going to go into the long, or if we're going to do this dance all day again the way we did the other day.
Yeah, a little tension never hurt anybody. Draws attention to the event itself and the events, and it will be interesting to see how the tripartite games, events being held in Mexico and Canada and the United States, get along. Does the president use his
non-professional? You're a non-professional.
Events are going to occur, and to put leverage on, these two
non-professional.
New MCA agreement. Who knows? It'll be all very interesting and get lots of press coverage, and certainly going to give us plenty to talk about between now and when the games kick off.
Well, they are going on stage together right now. Maybe they'll actually do the drawing here, but they're sharing a stage. This has got to be a positive moment for international relations and trade with our neighbors. Of course, Carney, if you're with us on YouTube, you see Carney on the right there, Scheinbaum in the center, President Trump on stage with, of course, Mr. Infantino, who's having a big day here in Washington, D.C. Emma, so you mentioned the president's threat to start moving games out of cities that were plagued with crime, as he puts it. He was asked about that on the red carpet this morning, tried to back away from those comments. You don't think that's something he has planned, do you?
No, I mean, the folks that have been working on this from the American side for FIFA have worked on the logistics for the arenas, for staffing. I mean, at a time when we are talking about immigration, but right, like our immigration policies are going to impact temporary workers, workers that are needed for surging staffing for all of these arenas across the United States. I mean, to move these games anywhere would just show an instability. And showing instability right now is not something he wants to do, right? Like, working with FEMA is his reach towards a form of normalcy here. So he's got to just continue to show some stability. No quick draws here.
Yeah, some of the preparations, though, we understand, have been complicated by the president's migrant crackdown, stricter visa rules. Rick, how do we rationalize all of these priorities at once from this administration?
It's hard to reconcile a lot of them. They seem to run in conflict with one another from time to time. A lot of Hispanic sports enthusiasts in this country. Are they going to show up at a stadium if ICE is standing in the parking lot? That certainly wouldn't be unusual. ICE has shown up in baseball parking lots and football parking lots.
That's right.
Before, so it should make it stressful.
Is this good for America? You referred to soft power. What are we getting for this other than maybe some economic stimulus?
I mean, this is really putting America on the world stage. Okay. Regretfully, Nigeria, where my family's from, has once again not qualified for the World Cup. But it's exciting. I mean, it's pulling together all of the continents. Look, the president has had a contentious relationship with some countries on the continent of Africa, but I know that those fans are still going to come out. Football is one of the most uniting things globally, and we're gonna just have to call it football in this conversation. Sorry to
That's
our
fine.
American
There is
audience.
a soccer caucus. I learned this morning in the Capitol. I did not realize that. They do call it soccer, just for what it's worth, and I did hear the president refer to soccer as well. In terms, Rick, of just projecting power, that's one thing. But when it comes to actually getting into Americans' living rooms, you know a lot about political optics. You've got, in this case, you're advising Donald Trump. You've got your guy on stage here at the Kennedy Center with two world leaders. He just won a Peace Prize. Tom Brady's in the room. Wayne Gretzky's going to be there. You got the Village People playing. What does this mean culturally for this president and this White House?
You know, look, I think when the president hits a skid on politics, he's very
Okay.
deft at, changing it up by doing something.
I don't use TradingView,
say,
so I don't know how to. I mean, it might. I know they use Tradeovate or
and he's used
Ninja
sports
Trader.
quite a bit to,
I've only used
sort of
Ninja
bolster
Trader.
that
All right,
image
so I gotta
of,
pay attention. here.
being
Let's see.
every man in the White House, and whether it's showing up at football games or other award ceremonies or whatnot, he's not shy about being on a platform. One of the biggest events he did, in the campaign that really helped him was showing up at a UFC fight. Very few politicians would have thought that was going to be something that would help them, and he had a keen sense of the marketing aspects of that. So, and by the way, one of the highest growing.
Well, I mean, it's up to you. Yeah, I mean, it's up to you. If you can figure out how to connect it to the TradingView or whatever, then that's fine too. I just don't know how. I've only ever used Ninja Trader ever. I don't know how to. It's the only platform I've ever used.
The games kick off.
This is publicity you can't buy, right? I mean, to have an elected official surrounded by all of the celebrities here, of course, other world leaders, it's kind of less the point, to be honest. But this is interrupting daytime TV, right? This is happening instead of soap operas right now. People are watching this.
All press is good press.
Well, and this is actually pretty positive, though, right? The Americans just watched him receive. You can joke about the FIFA Peace Prize and however everyone knew he was.
Hey, Lord Titty, how you doing? Good job, man. Good job. We're running into CHOP again today. Okay, guys, so
his image across the country.
technically this is my confirmation candle, but I'm right on top of the VWAP inside the CHOP area.
Globally, it does send
Yeah.
a very
He said it was
strong
one of the great
message.
honors of his life. A Happy Meal toy.
We'll see who gets the second one. I'm not sure. Oh, we got the
What's
first
he holding
draw.
up, James? We're showing the president on stage. It's something that says USA.
Okay, well.
Oh,
wrong
he drew you in.
message.
Okay,
Yeah,
gotcha. I'm
okay.
sorry. This is the actual drawing now. We're getting to it here, just to the end of the first hour. There we go, all three of them. Rick, how many Americans knew he was going to win the Peace Prize today? Are we being a little too cute about this?
Yeah, we're in the bubble. Outside the bubble, nobody was thinking about this. Nobody was thinking about the FIFA draw, with all due respect to FIFA. And yet, your point is well taken earlier, is that people are all going to see this as great. Nobody knows what the Nobel Peace Prize is, and we talk about that every week. So, why wouldn't FIFA be bigger than that? Because, it's got a bigger brand. So at the end of the day, it's a good Friday for Donald Trump. He's had some really rough ones lately, and today I think they're gonna celebrate. Maybe they'll open up the deck with some heaters and play a little rock music at the White House, just to celebrate what a good day it's been for him.
They got the Village People in town. I think they're all going to be at the Rose Garden Club later, right? This is a great panel. Rick and Yevesey will be back with us in our second hour as we welcome our global television audience to the conversation. Major hat tip to producer James. Managed to put together, I never thought we'd have a segment with the panel on the FIFA World Cup draw. But this is politics in 2025. We'll have a lot more in our second hour, so stay with us here. Balance of Power only on Bloomberg.
Yes, that's right. You got it. You got five chances to pass. So you got 5 chances. Only one passes, but you got 5 chances to get to the PA. That's why I like this account. You know what I'm saying? Yeah, if you're on the same page, if you scroll down, it tells you how. There's a couple of things you got to change, but it tells you how right here. If you scroll down on this page. Oh no, you go back. I'm sorry. You got to go back and go to step 2, which is connect NinjaTrader. So now you got to go connection guides, connect to NinjaTrader. C, connect to NinjaTrader. Yeah, we're almost in along. I might take one here in just a minute. I'm kind of
Live from Washington, D.C., this is Balance of Power.
Yeah, that's what I'm saying. It's a no-brainer for somebody just trying to figure this whole thing out, you know. It's like a total no-brainer. Now, their customer service isn't the greatest. Kind of sucks, but I mean, it's so cheap that,
we're going to get the latest on the data, what it means for the markets when we sit down with Ed Harrison, author of Bloomberg's Everything.
you can wait a couple more hours for an email.
Today says Republicans in the House.
Yeah, so you go to step C and got to follow those steps. If you get stuck, let me know.
Talk it out coming up with Republican Congresswoman Lisa McClain, chair of the House Republican
All right,
Conference.
you know what, guys?
And with our political panel, all after a look at Wall Street. Let's start right there with the Friday trade and Charlie Pellet in New York. Charlie, how are we doing?
Right now we are higher across the board. In fact, we are on track for another week of gains on the
All right,
S&P
I'm going to wait
500
just a minute
index.
to see
If
what
that does
happens
happen,
here.
It'll be 2 in a row right now. On the week, the S&P is up by just about 0.4%. What's happening today, you ask? The Dow, the S&P, NASDAQ, all advancing. Lots of moving parts, economic deals, and of course that mega merger. Right now, the S&P up by 18 points. That is a gain there of 0.3%. The Dow up 152. Dow Industrials up 0.3%. NASDAQ Composite Index also up 0.3%, as is the S&P. The Mag 7 Index up 0.3%. Red on the screen, though, from the Russell 2000 Index of small cap shares, down now by 0.2%. Your 10-year at 4.14% this Friday. 2-year 3.56%. Gold up $9 the ounce, 42.16, up 0.2%. And West Texas Intermediate crude oil up 1%, 60.24 a barrel. While we're talking
All right.
commodities, do not want to ignore silver. It is surging now by 2.7%, 58.65 right now on silver. We've got Bitcoin tumbling 3.1%, 89,334 on Bitcoin. Deal-making news, what a big one. Netflix buying Warner Brothers Discovery in a historic combination, joining the world's dominant paid streaming service with one of Hollywood's oldest and most revered studios. It is a $72 billion cash and stock deal. We got more coverage coming up on Bloomberg throughout the day. Again, Netflix shares, they're tumbling by 3.6%. Warner Brothers Discovery up by 1.9%. Some of the other names associated with this transaction, we've got Comcast shares up 1.5%, and Paramount Skydance down now by 8.1%. So we're watching a lot of moving parts to this Netflix Warner Brothers Discovery deal. Recapping here, S&P up 18, up now by 0.3%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we thank you. Charlie Pellet live from New York, the voice of Wall Street and the New York subway. He'll have more on stocks, bonds, and the rest of what is moving coming up about 20 minutes from now, about 1:20 p.m. Eastern Time. Here on Balance of Power, welcome to the Friday edition on Bloomberg TV and radio. Find us as well streaming live on YouTube with breaking news ahead of our conversation with Republican Congresswoman Lisa McClain. And it's something I want you to hear. This is a member of the leadership chairing the Republican conference in the House and also from the critical swing state of Michigan. We're going to talk prices and health care in just a couple of moments. First, we want to look at the data today. We'll set the baseline with Edward Harrison as consumer spending shows up little change in September. We got new BLS data today. Core personal consumption expenditures.
Yeah, well, you got to take profit off when you have it. I mean,
measure of inflation up to 10.
If you're letting it run to $6,000 against you on one trade, that's
more than 2%. So let's get into it with Edward Harrison, Bloomberg senior.
I know what you're saying, though, but that's a lot to let it run. You know, that's a lot of heat to take.
Edward, we're hungry for data, so we're pouring over anything that we can get. And in this case, it's a pretty important one with PCE. Does this
got 10 things going on
next week?
You know, Joe, the interesting bit is you kept on saying versus the August number. And here we are in December.
Yeah,
so we're talking about numbers
weird.
that are
So do they not
August
matter?
It doesn't really matter.
It doesn't matter.
Because, you know, we've moved on from that.
It's just, it's too stale.
It's too stale. And a lot of things have happened in the interim. People are much more concerned about, was the holiday shopping good?
Right.
And is the consumer, after that month-long pause in the U.S. government, still able to continue to power the U.S. economy?
So when you sit down with your everything risk,
well, if you're up 1 to 2K and you're trailing,
about prices today,
you should be okay, right?
the health of the job market.
You know,
How
I'm
far
probably
is your
more
trail?
concerned about prices.
Yeah.
I think that the job market concern, it's deep in the sense that I think very large pockets of the U.S. economy are in recession because the job market is so weak. But I think that we still have a price problem. And with the Affordable Care Act subsidies, some of those going away in January, it's going to be even more difficult for a lot of U.S. consumers.
Well, what pockets, by the way, of the economy do you see in recession? That's quite a statement.
Yeah, I would say that, you know, we've had the...
So you blew the account with only one contract on with a trail? How is that possible? That's crazy.
Space has been in recession. And then also, if you take the whole cohort of people who are, you know, say the bottom quintile, bottom 2 quintiles, they've had a very hard time given the price pressures that we've had and also the very low growth in job formation.
Sure. We see consumer sentiment rising for the first time in 5 months. Do you take heart in that number?
You know, I take some heart in the number, but if you looked at the present situation number, I really look at it as a reflection of, okay, now we know that the government's not going to be shut down anymore. But if you looked at the present conditions number, it actually went down relative. It was lower than expectations. So people are saying that it's actually not all well and good, but you know, enough people from the upper quintiles of the income distribution are spending, and then we have AI bubble as well. That's helping to keep things going. But you know, there are pockets of distress there for sure.
Interesting when you look at the state of the market here. We've had some shaky days. November was not a blast. But the fact of the matter is it's still been a pretty darn good year. And the indexes are not that far from their highs. We haven't had a full-blown 10% correction in a long time. Does that suggest that the stock market is part of everything risk right now because we haven't accommodated for the trends you're talking about?
Yeah, you know,
hey guys, I got a phone call. I'll be right back.
At risk per se, unless the labor market weakness starts to broaden out, I would say that
you know what, man,
dip mentality is still in effect, and that what you see from the
I'm just gonna watch this for a minute. I'm in a long, like I'm in confirmation zone right here. I can take a long anywhere in this zone down here. I just got to make sure that we're gonna challenge the VWAP and get out of here. So I'm just gonna watch it. I got to take a call. I'll be back, guys.
And then they're back in the game. The whole buy the dip mentality is still there. I would say that there are probably two things that are keeping things a little bit tighter. One is that crypto is constantly creating externalities into the other risk assets.
How about that?
And then the second thing is that actually global interest rates are rising. You know, the U.S. is a laggard in terms of the rising of interest rates and also in terms of cutting. You know, the next move could be higher for many different central banks, and Japan is already there.
Fascinating. This has been an interesting couple of days. Edward Harrison, author of the Everything Risk newsletter. It's great to have you, as always. With us here in Washington on Bloomberg, I'm Joe Matthew. As we consider affordability and, of course, the breaking news coming from Capitol Hill today, the Speaker of the House suggesting that a healthcare proposal will be on the table, a Republican healthcare proposal, by the end of next week. This is something that I, in fact, talked about earlier today on Capitol Hill with the Democratic leader in the House. Hakeem Jeffries talked to us about the looming deadline for the expiration of Obamacare subsidies that Edward just mentioned. And he doesn't see a lot of opportunity for cooperation, at least not yet. Here's what Hakeem Jeffries told us today.
The big challenge with House Republicans has been that they've adopted a my way or the highway approach. They have zero interest in actually sitting down and finding a bipartisan path forward. We've said from the very beginning of this year and throughout the Trump Republican shutdown that we will sit down with anyone, anytime, any place here in the Capitol or go back to the White House, sit with the president, to try to figure out how we can fix our broken healthcare system and address the Republican-created healthcare crisis that's devastating people all across America.
Now, our next guest is going to disagree with everything that Hakeem Jeffries just said, and that's what we do here on Balance of Power. We hear from both sides of the aisle. The important headline, though, is that Republicans apparently will have their own plan next week, and that's where we start our conversation with Congresswoman Lisa McClain, who's chair of the House Republican Conference from Michigan's 9th District. It's great to see you, Congresswoman. Welcome back to Bloomberg TV and radio. Do you have a sense of what this plan will look like?
Yeah, I'm actually rather excited. The biggest difference between the Democrats' plan and the Republicans' plan is the Democrats want just to subsidize the ACA credits. And the problem with that is if we do that, no one's premium comes down. All it does is line the pockets of big insurance companies. And what I might remind everybody is this is Obamacare. The healthcare crisis was started by the Democrats. So I am excited to hear that both sides agree that the Affordable Care Act is anything but affordable and that it needs revamping. And that's what we're doing. We will focus more on driving down actual premiums, one, and two, giving people choice. So if they get a subsidy, can they only use that subsidy for the unaffordable health care, or can they use it somewhere else? So the main differences are we are really truly focused on driving premium costs down, not subsidizing large insurance companies.
Understood what you're saying in principle, but I'm curious what happens in the immediate term here. There was a bipartisan bill introduced yesterday that I'm sure you know plenty about. We talked about it with Hakeem Jeffries this morning. The Gottheimer-Higgins bill would actually extend Obamacare subsidies for 1 year while also reforming the plan to add some collars around eligibility. Will we need to see a plan something like that so there's not this so-called Obamacare cliff or healthcare cliff that's looming at the end of the month?
Yeah, listen, we want to make sure that everybody who wants to keep their Obamacare plan can keep their Obamacare plan and that it's affordable, right? We both agree and both sides agree on affordability. But I think you're going to see, we have a menu of options. And what we're going to have to see is how do we thread that needle to make sure that premiums are down, that things are affordable, and that we eliminate the waste, the fraud, and abuse. Because I do believe that both sides also agree that somebody making $600,000 a year doesn't really qualify for the subsidies or the tax credits. So that's what we're focused on working on. I am an optimist by nature, and I've been in those meetings with the speaker and with the heads of our committees, and you will see a plan that will be put on the floor. There's going to be a lot more work to be done, but it will be a good start.
Fascinating. President, while we're talking about affordability, says he's got an issue with that word. He calls it a Democrat con job. What does he mean?
Yeah. Well, I think if everyone were to take a look at what got us here, let's take a look at the past 4 years. Under Biden, inflation was sky high, upwards of 9%. It's down now less than 3%. He shut off all of the oil and gas in the United States, made that more difficult. So if we talk about the affordability crisis, the root of that, not to mention the trillions of dollars that his Inflation Reduction Act put in place and insurged into the economy, it made things very unaffordable. And we are in a recovery.
All right, I'm back. That was quick. I'm back.
On that, right? Gas prices are down, heating prices are down, mortgage rates are down. So
I got I'm in the long call was right here. I'm still in a confirmation, so
happen in 26 if you listen to Scott.
If we tag maybe this 200 and
the economy will be
the ES holds up, maybe I'll go ahead and take the long. I still have the option to take the long based off the chart or off the strategy.
Security, those are all positive things that puts more money in the people's pockets and drive wages up. That's
I'm watching both the ES
positive.
also. I'll be right back.
Avoiding the largest tax increase in history with the working families tax cuts.
I want to hit you in your backyard here, Congresswoman, and talk cars while you're with us. The Trump administration has begun the process of easing fuel economy requirements, CAFE standards, as they're called, for new vehicles. I believe you were standing right next to him in the Oval Office when this was announced just the other day. And that's not the only thing that he announced, Congresswoman. Let's go to the White House and listen to the president from earlier this week.
My administration has taken historic action to lower costs for American consumers, protect American auto jobs, and make buying a car much more affordable for countless American families and also safer. Just about everything is down. This whole thing is, they use the word affordability. It's a Democrat hoax. They're the ones that drove the prices up. I think affordability is the greatest concept. When they use the word affordability, they never say anything else.
You were standing right next to him at that event. What are you hearing from automakers in your state? What does Mary Barra say? What does Jim Farley say about the CAFE standards? They were all in town as part of this. Will this, in fact, lower the cost of a car?
Yeah, listen to what the automakers say. The people that actually are building the cars, they are extremely excited about it because it's less regulation and it makes the car more affordable for the average American. There is, I think, roughly about $16,000 to $17,000 per employee that these automakers are spending because of regulation. And the more regulation you put on manufacturers, on people, that's passed right down to the consumer. So they're excited on twofold. One, that they can produce the automobiles more affordable, and two, that they produce an actual automobile or a product that people want to buy. So they're extremely excited about it. Don't take my word for it, take theirs.
Well, so I want to pick up on something you just said, because I always hear that Americans want to buy big cars. We love our SUVs. We love our F-150s.
Okay, so right now,
park in the garage half the time because there's so many big trucks.
You have to
down
decide,
there,
like,
the president on Truth Social, though,
we're going to hold this level. I'm going to wait for the next candle, and then you would get in on the long.
Tiny cars to be built in America, he says.
I'm going to sit right here.
Manufacturers have long wanted to do this.
Order submitted.
Are so successfully built in other countries. He says they can be gas, electric, or hybrid. Very near future, inexpensive, safe, fuel efficient, and he says quite simply amazing. Start building them now. What are these tiny cars that are coming?
Yeah, I haven't seen the tiny cars, but I think what the president's trying to do is actually give the consumer choice, the American people choice. If you want a big F-150, you can have one. If you want to drive a small, tiny car, you have that opportunity and you have that choice as well. No different than if you want to buy an electric car or a hybrid car, you can.
Yeah.
But if you want a gas-powered engine, you can too. So we are all about, and the president is all about, we don't want to tell you what to do, when to do it, how to do it. We actually believe in people, and people can make the right decision. We don't need big government telling us what to do and what to buy and how to buy it.
I've got you pegged for, I'm just blue sky in here, Escalade driver? What do you have in the garage, Congresswoman, in the state of Michigan?
I have an old GMC Yukon. That's what I drive. And it's great
Driving a Yukon?
Yep. I have 4 kids, and they all have spouses, so when we all get together, it's a good vehicle to put the whole family in.
You can't drive that thing around New York. I mean, you can, but good luck while you're up there. It's great to have you back with us. Live from World Headquarters in New York, that's Congresswoman Lisa McClain, who's chair of the House Republican Conference. We've heard from Hakeem Jeffries, the Democratic leader in the House. Now the woman who runs the Republican Conference, to give you a sense of exactly what the conversation is like. Next week's going to be a doozy. We could have a vote in the Senate on a Democratic health care proposal. We'll get a look at what Republicans have up their sleeves as well. That's why we do this every day, live from Washington. I'm Joe Matthew. This is Bloomberg TV and Radio.
Order filled.
All right, I'm in the long. Yes, why are we doing this? All right, so I'm in the long based off the strategy at my confirmation point here. So see if we hold this level.
Order filled.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the U.S. stock market pushing higher, off session highs, but still looking at gains for the Dow, the S&P, and NASDAQ. 68.69 where we stand on the S&P right now, up 12 points, up by just under 0.2%. Dow Industrials advancing 123 points, up by roughly 0.3%. And NASDAQ pushing higher by 50 points, up by about 0.2%. The Bloomberg Mag 7 index up 0.1%. A down day for small caps with the Russell 2000 index lower by 0.3%. The 10-year 4.13%. The 2-year 3.56%. Spot gold up 0.1%, 42.12 the ounce. And West Texas Intermediate crude up 0.8%, 60.15 a barrel. On WTI, Bitcoin meanwhile down 3.1%, 89,337. Paramount said to be mulling taking its offer straight to Warner Brothers Discovery shareholders. That headline right now from CNBC. We've got Netflix shares after announcing its takeover attempt. Netflix up by down by 3.5%. Warner Brothers Discovery up 4.5%.
All right,
Paramount,
let's get a little pop
Skydance
here.
shares, they're losing 7% right now. Comcast shares up by
liquidation candle going on.
1.3%. Briefly, earnings news. Lots of companies reporting this morning. We heard from Victoria's Secret. Stock surging 13.2% last night. Hewlett-Packard Enterprise reported earnings up now by 0.9%. And Ultra earnings surging by 13.3%. For On
Stop,
Demand
Bill.
News, 24
All
hours
right, we're
a
in
day,
good shape
subscribe to
now.
Bloomberg News Now wherever you
We're in
get
good shape
podcasts.
now.
Back, we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, thank you so much, and thanks for being with us here on the
We
Friday
got one
edition
runner on.
of Balance of
We
Power
took profit on
Bloomberg
3.
TV and radio. We meet once again at the threshold of the weekend with big
Took a little
questions
heat on that liquidation
about
candle.
congressional maps around the country. The districts that you may or may not take for granted in your state could soon be redrawn.
So now
after
I'd like to see us work up to the VWAP, and we could add after we got
clearing
past the
Texas
VWAP.
to use
We're
its
looking
new
good.
Republican-drawn congressional map for next year's midterm elections, lifting a lower court ruling that had blocked the map.
Gotta run a
Not
damn
everybody saw this coming, although
ringer.
we have been waiting for this ruling, and it's something that I talked about earlier, the effort to redistrict, which, by the way, some Democrats have taken up in their states. Look no further than California and Prop 50.
All right, I'm gonna let this cook and see what we get.
Democratic leader in the House.
I gotta make a call real quick, guys. I'll be
Republicans know that
back.
If the elections were held today, they would lose. That's the reason why Donald Trump has decided to engage in this extreme effort to gerrymander congressional maps all across the country, and it's very unfortunate. Our view is that we're not going to unilaterally disarm, and we have to ensure that there's a fair map nationally across the board so that it's the voters who get to decide who is in the majority after the November 2026 election. Part of the challenge with Republicans is that they've broken all of their promises.
So it's open season on redistricting, and that's where we start today with our political panel. Bloomberg Politics contributor and Republican strategist Rick Davis is with us, partner at Stone Court Capital, joined by Yemisi Egbewale, former chief of staff advisor of the Biden White House, Democratic strategist, and the founder of Podium Strategies. Yemisi, what do you think about this? Gavin Newsom wasn't waiting for the Supreme Court to rule. Should other blue states do the same?
Look, Gavin Newsom knew what we all knew, was that a conservative Supreme Court would eventually rule in the president's favor on this. And I think that other states are going to follow. Now, I think it's going to be tricky. Some Democrats have already raised a little bit of an alarm saying this might be a race to the bottom. But there are other folks in the Democratic Party that are saying we're already at the bottom. So I think this is going to give some division to the Democratic Party, but it's looking like Texas is definitely getting more red.
Well, that's right. Will states around the country other than California get more blue?
I think some states like Illinois. I mean, and we have to think about New York as well. And who runs those, right? Maryland, you've got Governor Wes Moore, right? We've got Pritzker over there. Well, we might see if Shapiro does something. I mean, these are also people that are looking at 2028. This is beyond just a redistricting for some of these folks. Gavin Newsom pushed Prop 50 because he saw what happened in Texas, but also because he has political ambitions of his own. And so we have to factor that into how some states will play it.
Absolutely right. What are you thinking about this, Rick? Will Democratic governors like Wes Moore, who have been a little gun-shy to start redrawing congressional maps in the middle of a cycle, be suddenly convinced by this ruling?
Well, I'm not sure there's anything in the ruling that'll actually convince them other than it's fair play now to change your redistricting in midstream. I mean, basically this ruling ruled against the district court because it said they were trying to actually change the changed redistricting in midstream, and that it was too late to do that. They didn't rule on race, and they didn't even rule on the politics of redistricting. So I don't think that's going to change anything. I think it's open season. It's advantage Republican. There are more states that Republicans can just have the legislature do it and not have to take it to a referendum like they did in California. But realistically, I mean, if the election were today, I don't think it'd change a 4 or 5 seats are going to make a bit of difference. Right now, it's sort of at par. Texas got 5, California got 5, starting all over again in other states. But the reality is it is a distraction from our party's need to make a case on affordability and cost of living and the future of our economy. And if we don't do that and we play all these drawing of lines games, the only thing that's going to result is we'll only lose by a few less votes, not, but a loss is a loss. And so I just wish the Republican Party was spending more time talking about the issues that people care about and not, playing these games around the table, drawing up maps.
Understood. What do you see in terms of trends outside of redistricting, MSC, coming off of Tennessee the other night? Trump plus 22 district, you saw what happened. The Republican won by single digits. And so you've got strategists running around town saying that's 35 seats for Democrats in the midterms if that trend continues. Why would you need redistricting anyway?
Well, I think some folks still want to bolster up their bets a little bit. I mean, look, we can look at Tennessee and say that is concerning for Republicans that she was able to get that close. But also Democrats have to own a little bit of candidate quality here. Okay. She was able to get close, but I do think a moderate would have been able to get a little bit closer, especially in those suburban areas. We can have deep blue cities like a Nashville and New York City, but they're different shades of blue. Nashville is not the same blue as a New York City, and somebody running as a Zoran or an AOC does not work below the Mason-Dixon line. And I think that was a test to prove it. Candidate quality is going to matter so much for the midterms, and if folks don't start getting more to the middle, we're going to see some issues.
Oh, that's why they were labeling her the AOC of Tennessee, right?
Right. It
Donald
works as a
Trump
negative.
says she despises country music. Look at that. She lost. But the result was, according to many Democrats, not only a moral victory, but an indication that the electorate is bending your way.
Is the electorate bending our way, or are Republicans just not as engaged? I think we do a better job at firing up the base and getting people out to vote.
That's an honest reply.
Yeah, and I think Trump also helps in our favor. All you really have to do is play some of his sound bites, and it can get some people out. Sometimes in the Democratic Party, it helps to have a common enemy, and Republicans don't have that as much. But I wouldn't say that this is just a positive and our foot is on the gas pedal and we're raging ahead. I think it's just a cautionary tale.
Interesting. Rick, you've talked before in these conversations involving redistricting. You've talked about or gerrymandering, I should say. You've talked about dummy mandering, and I wonder how many states are going to find themselves in the process of redrawing maps and maybe regretting the final product.
Yeah, I think this is something that you can take away from the Tennessee 7 and also the elections in November in Virginia, New Jersey, and elsewhere. And that is when Donald Trump's name's not on the ballot, you have a substantial decrease in a pool of voters who are willing to turn out on election day. Democrats have a different demographic. Their demographic is more urban and suburban and more college educated, and they just turn out more frequently. It's just a fact of, demographics. And so if I'm a Republican candidate living in a rural district and I'm looking at those numbers, I'm trying to figure out, what in the world can I do to get these guys who historically never show up in a midterm election to turn out? And now I've got even a more diluted district because my digital list was bright red when we started redistricting in Texas, and now I've got
hey guys, we got one running. We got a runner, baby. Finally, signal came through.
Dumbing redistricting is a real thing, and they got to worry about that.
Well, it's good logic that Rick brings us here, and maybe the answer, by the way, for that candidate would be we saved your health care, because Democrats and Republicans will be called to task when it comes to the expiration of Obamacare subsidies. That's set for the end of this month. MSC, we've talked today with Hakeem Jeffries and with Lisa McClain, who confirmed that Republicans are going to drop by the end of next week a health care proposal in the House. Are we going to meet this deadline?
Okay, I'll believe that when I see it. Members of Congress are like students who always push back the deadline and tell their teacher they're turning in the homework.
Got a big deadline here, though.
It's a huge deadline, and I don't think Congress has really shown itself this year as being a unit that meets the moment for the American people. So I hope they don't back themselves into a corner here. I'm glad that it introduces the conversation more about healthcare. And going into next year, we're going to see more people start to talk about Obamacare and why it is that you do need subsidies for it. I think we have to take a larger look at what is a landmark legislation for the Democratic Party, because we've run on healthcare, we've won on healthcare, but now we need to re-examine our healthcare.
Well, you heard Lisa McClain, Rick. She tells us that Democrats have finally admitted that the
All right,
Care
so we're
Act
just
is
going
not
to kind of
affordable
work
and
this
we need
trade
more
for a little
subsidies.
bit
We've
and
heard
see if
that
we can
from a lot of Republicans.
get any
But
more
what the
mileage out of
Republican
it than
plan
where we're at.
look
We're kind of
like?
double
It might
topping now, so
resemble that bipartisan bill that dropped yesterday.
we'll see how this
A
next
one-year
candle acts in
extension
7
with no
seconds. If
limits on
this looks
eligibility.
like a green candle, I think I
the
may add
extension
in
is
this
sort of
area.
like the one common ground. Everybody is going to want to get this off their back. The last thing any Republican or Democrat wants is a lot of people getting thrown off the rolls without some kind of soft landing. That being said, I think everyone also agrees that there needs to be substantial reforms. A lot of these subsidies were put on during the COVID era to soften up the impact of COVID. COVID's over. The economy doesn't need that. And now what are we going to do about these folks who've been able to buy less expensive insurance because of it? We don't want them to have to spend more money on insurance. What we want is
Anyone else in the long?
insurance reform and reform on who is actually going to be eligible for these things so that the cost can be brought down. And I don't think there'll be that much pushback by Democrats. I think this is one thing, especially after the Minnesota scandals, that people have seen that they got to be responsible. It's just not healthcare for all anymore. Those people who are talking about that are tone deaf when it comes to the electorate.
If we see next Thursday, John Thune promised a vote, right? That's how we got the government reopened. Promised Democrats a vote on whatever the health care proposal would be. That's less than a week away. If that passes convincingly, will Speaker Johnson have any option but to bring it to the House?
I mean, yeah, he'll have all of the pressure to have to bring it to the House. I view the Majority Leader, John Thune, as the real driver here. I think he's able to navigate outside of that kind of Trump aura and bubble. I don't think Johnson is that strategic as people make him out to be. I think he just follows orders really well. And so if Thune moves first, Johnson's just going to have to be in a position to move next.
That would also suggest, I'll just extend this a little bit, Rick, in our final moment, that Donald Trump needs to weigh in at some point. Is Speaker Johnson waiting for the president?
I think Speaker Johnson's waiting for the president, but I think Thune is too, in the sense that Thune is not going to do anything that isn't going to have the full, presidential backing. And by the way, that then ensures that he gets what he needs out of the House, because Johnson's not proven that he's willing to buck the president on anything. So as the president said the other day, he has two jobs, both Speaker and as President of the United States. And I think Thune understands that completely. His deal will be with Trump, and then Trump will take care of the House.
Great panel. Rick Davis, many thanks. Bloomberg Politics contributor. We'll see you on the late edition of Balance of Power. Yemisi Egbewale. Podium strategies, our Democratic strategies. Great to have both of you as part of our conversation. Patrick McHenry will be with us next as we spend some time with the former Speaker Pro Tem on what comes next. This is Bloomberg.
Order filled. Order submitted.
We're working it. I'm just hoping I don't get too crazy and it flattens the whole thing.
Stop filled. Order canceled.
I'd like to get this one off right here at the top here, if you can. Let's get it locked in. Come on, get it locked in. Thinks we go further. Anyone think we grind up the rest of the day?
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing.
Order canceled.
Flirting with records. We are seeing stocks off session highs, but still looking at a 21-point gain this Friday. On track for a winning week, by the way, with the S&P right now at 68.78. We're up 0.3%. The Dow Industrial
Order
is
submitted.
up 73, higher now by 0.4%. The Nasdaq Composite Index up 82 on Nasdaq. That is a gain of just about 0.4%. On an update from much of the market,
Order
the
submitted.
2000 index of small cap shares slumping by 0.1%. Your 10-year at 4.13% with the 2-year 3.56%. Gold right now trading higher by
Now the glitch let me do three contracts off now.
58.62 an ounce. West Texas Intermediate crude up 0.7. WTI 60.12 a barrel, and Bitcoin now down 3.2%.
I'm hoping when we hit the sell up here, it doesn't flatten the whole thing.
Bitcoin. We are looking at Southwest Airlines shares higher. They're up by 6% right now. Southwest, though, did lower its operating profit target for the full year, citing the fallout from the recent U.S. government shutdown as well as higher fuel prices. Other airline stocks are advancing. United up 0.2%. American up 1.6%. The exception, though, Delta, it is retreating by 0.5%. Netflix buying Warner Brothers Discovery and a historic $72 billion cash stock deal. Netflix right now down 3.5%. Warner Brothers Discovery surging 5.9%.
think
For
you
online
right
news
click
24 hours a day. Subscribe to Bloomberg News now wherever
and then
you get
properties.
your podcasts. And back we go to Washington. Balance of Power continues. Once again, your host
Yeah.
is Joe Matthew.
So you right click.
Charlie, thank you so much. Charlie Pellet will have more on the markets coming up at the top of the hour, 2 p.m.
And then
Eastern
properties.
Time as Bloomberg Business Week Daily gets underway. Thanks for spending part of your Friday.
And then
with us here
active background,
on Bloomberg TV and
chart
radio,
background.
as we seek
You can
voices
set all
and
your
new
colors
ideas
right
from
here.
both sides of the aisle. That's been our exercise this hour. We've heard from Hakeem Jeffries and Lisa McClain,
Order canceled.
Democratic leader in the House,
Order
and the chair
canceled.
of the Republican conference in the House, with news today
Order filled.
that Republicans in the House of Representatives will likely unveil, Speaker Johnson says, unveil a health care proposal by the end of next week. That would coincide almost to the day with the promised Senate vote on a Democratic health care proposal. So we may be seeing the gears turn a little bit here. We're joined at the moment by a problem solver with a lot of experience in the House of Representatives. That, of course, would be Bloomberg Politics contributor Patrick McHenry, former Republican congressman, former Speaker pro tem. It's great to see you here at the desk, and I hope you had a great Thanksgiving. You can see across the valley here to some sort of compromise, right? Because if you can't, I'm thinking not many people can right now.
On healthcare, no.
On healthcare with a deadline at the end of the month, you do not.
No, I don't see this. I don't see this coming together.
Premiums are going up.
Yes, yes, and what you have are democratic politics at stake. The subject matter of the shutdown became health care. They eventually figured out an issue that was salient to the voters. The Democratic Party had strength in. They doubled down on that strength, and that was to their ends the shutdown. The shutdown was about something to them.
Yes.
It's not regarded that way by the populace, and it didn't net them anything in terms of policy, but it solidified their base and their position on health care. They want to double down on that strategy for the election year. They don't actually want a solution. They want to keep the problem. Keeping the problem is their political power, and rising premiums is to their political benefit. This is the reason why House Republicans and some Senate Republicans are working so fervently to address the premium question for a narrow group of the American people because of the political impact on it. The difficult problem here is that Republicans don't have a cohesive message or policy set on health care. This has long been the problem. It's not that Republicans lack a plan. It's the problem is they have plans. They have lots of them, and there's no cohesion around any one that is the Republican response. So they find themselves in this pretty hopeless situation of trying to get together enough of the party around a plan. They're not going to get everyone, and I have a very difficult time seeing them originate a bill out of the House to send it over to the Senate that is a Republican-only vote. They need Democratic support. The Democrats just want to extend existing failed policy, but that's what they want to do. That's their political power is around.
But you're suggesting they don't, in fact. You believe Democrats are that Machiavellian that they'd like to see premiums rise so they can win the House back in November.
So they have a vote on health care, and they chose a 3-year extension as their request. It is a greedy request. A 1-year extension should suffice. That should be their offering, and victory should be their goal.
But through compromise, could it not end up being a 1-year extension? You start with what you want, and you end up
they've
getting what you
pared this
can.
down from about a $700 or $800 billion request to keep the
Stop,
government open
Bill.
for 6 weeks, down to a 3-year extension of policy that no Republican voted for, extending Obamacare. And so it's still a massive request that they have, but it shows that they want to hold on to this as a political cudgel rather than do a 1-year extension, which is really which should be the end case for these negotiations.
Yeah, well, I mean, it does seem, I don't know what you think Republicans are going to put forth next week in the House, but there was a bill that dropped yesterday. The Gottheimer-Kagan's bill would extend Obamacare subsidies by a year, and it would put new limitations on eligibility. This doesn't have to be that hard, right? I mean, could that not be the bill?
That should be the bill.
That should be the bill.
And that should be the final compromise.
Would it not pass both chambers?
Yes is rolling
yes,
up.
but you have to have a coalition willing to do that.
Right.
And you don't have enough Democrats willing to come with the Republicans.
We weren't flat. I could have scaled out of this a little bit more, but it's all right.
What do you think the Speaker has up his sleeve?
Well, no, they have to put together something that unifies Republicans. That's their attempt. That is always the goal out of the House.
Be more along the lines of Bill Cassidy, health savings accounts.
Yes.
Something that does not resemble Obamacare.
Correct.
Okay.
and also doesn't fix the problem.
So then we have a collision next week. We go off the cliff at the end of December.
And
do
then,
I keep going and then we shut down at the end of January?
Oh, no, because the dynamics around the shutdown on an election year are different than what the Democrats just experienced. So this is now about getting the government funded, and they'll move on with that. They will keep the health care issue, though. Man, that's how I think this thing
nets out. It's going to be a brutal year for people. The premiums are really up. Quadruple in some places. They just drop off the rolls in that world.
Yeah, right? But this is 10 to 15 million people. It's a serious number. These are disproportionately red states, and there is opportunity for the state legislatures to fill these gaps. It is not fully up to the federal government to respond here. So this isn't a necessary disaster for the people that would experience these healthcare premium increases, nor is it premium increases the end of their access to health care.
Yes, sure.
But it is being described that way. And so Republicans have a political issue. Democrats have a political issue. And this is the collide and the reason why the compromise is unlikely to happen because the political importance of that issue at the election box benefits the Democratic Party.
Yeah, all under the banner of affordability, right? This is all one issue. The president calls affordability a Democrat con job, which they're turning into commercials right now. What does he mean by that?
What he means is the feel of the economy is largely driven by discourse. Republicans think the economy is going pretty well, and Democrats think the economy is going pretty poorly. That has a political overlay more than an economic overlay, and everything is becoming highly political in our society over the last 20 years.
That's right.
Order submitted.
And so affordability is the message the Democratic Party is seeking to drive through Election Day because that is their path to victory. In 2010, a slow economic recovery meant that John Boehner spent 2 years saying, "Where are the jobs?" A message of where are the jobs got Republicans the majority in 2010. Yeah. And I think that is the case.
It's like one of those Shreks right now.
The cost of things are not down since President Trump got reelected. There's a lot of economic
those fancy
impact
long
for
Shreks.
this administration. The tax bill, landing the tariffs deal with China, and in the world. All those things will have an economic benefit that has to be accrued over time, and that is really. The imperatives on the administration to perform, provide the regulatory relief, the tax incentives, and clarity on tariffs, and that way the economic engine can churn. And the
you can get the basics down, but this is a one-load strategy.
Mr. President, where are the jobs?
I'm hoping within the next couple months I'll have it ready where people can subscribe and have everything I have in a one-click load.
Kevin Hassett is
I'm working on it.
At least that's what everyone seems to think in Washington. Bloomberg reporting that he's at the top of the list, and he was on Fox News, asked about whether it's time to cut rates.
But you can get the basic EMAs and stuff, so you can follow along.
The Fed governors and some of the regional presidents, they now seem much more like they're leaning in the direction of a rate cut, which is I believe, the right.
And how much would you like it to be?
Like the trade box and all that stuff, that's everything is programmed in to work with each other.
Around 25 basis points, which it looks like there is, then I'll take it.
Is that 25 basis point cut in the bag?
It's not in the bag, but I think that's where they end up. I think there's still haggling to be.
Your app? How my app looking like? All screens are scattered.
The Open Markets Committee is disproportionately.
It's all maybe, but it's all custom. All this has been custom programmed.
That impact is still driving the Fed decision making. The president needs to get his appointees on the Federal Reserve Board. The next available one is the chair of the Fed.
That's right.
See if the 200 EMA can be a hero here.
Nomination in the bag?
Nothing's in the bag.
Okay.
Look, I mean, there's still drama to be had. And so I do think the president has enormous high regard for Kevin Hassett in the first term and bringing him back in the second term in an elevated way. And I think Kevin Hassett has proven himself as a very good voice for President Trump's economic policies. I think he has the qualifications, obvious qualifications to be the chair of the Federal Reserve, very important decision. And he has the qualities necessary to drive consensus on the Open Markets Committee, which is actually how it's done. And the difficult part of being Fed chair is you don't get to make the decision independently. Yes. You have to take all these inputs from your committee members. And so He is certainly on the short list. I think it's affirming and should be affirming to the markets that somebody of his caliber is on that short list.
Because you think he's a good pick. Do you share the president's, I won't say disdain, disappointment in Jay Powell?
Look, I got a different perspective on Chairman Powell. I think he's been given a very tough set of circumstances and has danced very well.
All right, let's see if we can get a strong 200 EMA
the threat of the music being turned
bounce.
off. And I think he will be proven as a successful Fed chair who maintained Fed independence in a very complicated
Yeah, you can make one good trade. Like the eval, there's no real rules on the eval, but on the PA, you can't do that. So I would just recommend trading how you would normally trade. You know what I mean?
Something that's not settled law.
If you want to take a big swing at one of those, you got 5 chances. You know what I'm saying? But the PA, you can't trade like that.
The president having broad authorities to.
All right, maybe that was the liquidation candle I needed.
There's been
we've been in the long the whole time, so
the definition of
I'm just sticking with the strategy. I may get out of this though the next time I go.
Rights that the American people have, based off of from birth to natural death. And there are consequences for these decisions. So you shouldn't have one branch of government make that determination. The courts are always going to have to step in and make a determination or clarify the capacity the president has.
Change needs to be made?
No, look, I think birthright citizenship has been the case in the United States from the very beginning. And we don't judge.
We're holding above the VWAP on the ES.
Their parents, good qualities or bad qualities, or where they're from.
So I like how this looks up here.
Distinct nation from any of the European powers or any of the Asian powers, based off of how we treat how we treat citizenship here in the United States. The importance of it, the regard for it, how we honor this as not just something given to you, but the story of America and who we are. So you can't just make a quick administrative change of a body of law that is, in many cases, 200 years old.
Runs to our founding. That was a good answer. I'll be curious to see what happens here. We've only got a minute left.
It can be multiple trades. You should trade multiple trades if that's what you're asking. You can't really pass it on one. It's kind of silly to even try and do.
Have a say in the president's military action in the Caribbean.
I mean, you could, and people do, but
on this under the War Powers Act, I think what the president is doing is born out of sound law and taking action. Yes, when you have these incursions from the South and movement of drugs in a concerted way, and in some respects supported by nation-state actors, for them to take military action, I think is a justified thing. It is a clear signal to stop the flow of drugs from the South, just like we're having the clear signal to China to stop the flow of fentanyl.
Fascinating. It's always great to spend time with you. Patrick McHenry, let's do it again soon. Bloomberg politics contributor, former Republican congressman, former Speaker Pro Tem, only here on Bloomberg TV and radio. I'm Joe Matthew in Washington. I'll meet you back here on the late edition of Balance of Power. It starts at 5 p.m. Eastern. Enjoy your Friday between now and then. This is Bloomberg.
I just lost the cloud. Yo, let's see the bear flag or the bull flag. Bear trap, bull flag.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Good Friday
Right.
afternoon,
Got a
everyone.
call
Live on
coming
Bloomberg
up.
Television and radio, streaming on YouTube and Bloomberg
All we
Originals.
can
I'm
do is-
Scarlett Fu here with Alexis Christophorus, and we're in for Carol Masser and Tim Stenivek. A lot going on
Got a
this Friday,
50
the
EMA
first
battle
full
here.
week of December. No shortage of news at all this morning,
And
this
a
afternoon.
blockbuster, might I say, deal of the year in the media industry.
Absolutely. $72 billion media merger. Bloomberg News media and entertainment editor Felix Gillette joins us to discuss Netflix's planned acquisition of HBO and Warner Brothers' film and TV library and studios. Later on, Bloomberg Intelligence senior analyst for antitrust litigation Jennifer Rhee will help break down the industry reaction to the deal, potential legal pitfalls, and how regulators might want to step up and maybe, put some guardrails up here. And of course, we did get some eco data, some of it stale, some of it current. U.S. consumer sentiment most recently improving in December for the first time in 5 months. LinkedIn chief economist Karen Kimbrough will join us before the last Fed decision of 2025. So quickly. It comes so quickly.
And every month I said, can you believe it's November? Can you believe it's December? And now it's going to be 2026.
All right. First, though, let's get a check on the day's trade and top business news. And for that, here's Charlie Pellet.
Hi, thank you very much. Do want to begin with the developing story headline right off the Bloomberg Professional Service. U.S. Supreme Court says it will review President Trump's planned rollback of automatic birthright citizenship, setting up a high-stakes showdown over what long has been understood to be a constitutional.
Order canceled.
Equities pushing higher. The Dow, the S&P, NASDAQ all advancing right to the numbers here. Fast-moving markets to the upside with the S&P up 15, now up 0.2%. Dow Industrials at 48,006 today on this Friday. We are on track for a winning week with the Dow right now up 150, up 0.3. NASDAQ Composite Index up 55, up by about 0.2%. Interestingly, though, a retreat for the Russell 2000 Index of small cap shares. It remains lower by 0.2%. Your 10-year at 4.13%, the 2-year 3.56%. Spot gold currently trading lower, flat on the day, down 50 cents, 42.06 the ounce. The silver is moving higher. Silver surging 2.2%, 58.40 the ounce. West Texas Intermediate crude up 0.6%, 60.02 a barrel, and Bitcoin down 3.5%, 88,950 right now on Bitcoin. It is the business story everybody's talking about. We got you covered here at Bloomberg. Netflix is buying Warner Brothers Discovery in a historic combination. Shares of Netflix down 3.6%, though. Warner Brothers Discovery up 5.3%. Cannot ignore Paramount Skydance. It is down 7.8%. Comcast up by 1.1%. We'll have a whole lot more as our coverage
held on
continues
too
on
long.
this story. Again, recapping here, S&P up 14, up 0.2%. Bitcoin down 3.4%, 89,000 right now on Bitcoin. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie. And we're going to stick with that big story of the day. And as I said a moment ago, possibly the year, Netflix buying out Warner Brothers Discovery, or at least wants to buy out. They still have some hurdles they're going to have to clear. This is an $82 billion deal if you include debt. We want to break it down now with Felix Gillette here in our studios. Felix is a media and entertainment editor for Bloomberg News and also the author of It's Not TV, the spectacular
Order
rise,
filled.
evolution, and future of HBO. The perfect person to talk to about all of this. Felix, thanks so much for being here.
My pleasure.
I guess, first of all, this is sort of your sweet spot. This is your beat. Were you surprised to see Netflix come out the winner here?
Yeah, I think it was a little surprising. I mean, I think at the start of all this, Paramount kicked off the sale by making an unsolicited bid for Warner Brothers Discovery and for the whole company, right? And they rejected 3 bids, opened it up for sale. Along came Netflix and Comcast saying we'd like part of the business, not the whole thing. But I think, in spite of Netflix's strength in Hollywood, I think people were thinking, well, they only want part of it. David Ellison, just finished this deal to combine Skydance with Paramount. His father, Larry Ellison, the co-founder of Oracle, has an enormous amount of money to
Order
back the deal.
submitted.
So I think a lot of people thought that the Ellisons were going to be able to pull this off, and we're surprised that Netflix was able to do it.
Well, the Ellisons might still be able to pull this off because there are reports that Paramount Skydance is considering taking its offer straight to Warner Brothers Discovery shareholders. So it's not quite over yet.
Yeah, we're all waiting the next move from the Ellisons. And they signaled some displeasure yesterday in a letter to Warner Brothers saying that they felt the process had not been fair and that, sort of laying the framework for potentially
And they bid a
going
higher
hostile.
price than Netflix did too, right?
It depends. It was kind of apples to oranges, right? Because they weren't bidding for the same thing. Netflix was bidding for part of the company and, Paramount Skydance was bidding for the whole thing.
But part of the company, they were still going to offer even more for part of the company than Paramount was going to give for the whole company. Is that right?
Order canceled.
I value the part of the company that Netflix is not acquiring, which is all of those legacy cable networks.
Well, let's talk about it since you wrote the book on HBO.
Yeah.
What would let's just say, for instance, this deal goes through Netflix, Warner Brothers, Discovery. What happens to CNN, TNT, TBS, HBO?
They'll all be spun off into a standalone company. And that's going to be, it's a declining asset, but it still throws off a lot of cash. Will it be eventually potentially combined with some of the other cable networks that are now out there? It's, conceivable that someone will come along and roll up what's left of all of the traditional legacy cable networks.
And I misspoke. HBO is not part of that. That would be CNN, the cable.
Right.
The cable entities.
Cartoon Network, TBS,
Right.
TNT, CNN. Yeah.
Felix, Netflix is the original disruptor. I mean, it kind of accelerated the cord cutting that we're seeing everywhere. Are we setting up for a major culture clash here by having a tech company buy a classic Hollywood studio?
Well, these deals always look great on paper, and then you start combining the assets, and often you do get culture clashes. And particularly with this company, with Warner Brothers Discovery, which was previously Warner Media, we're now 25 years into mega mergers for this company, starting with AOL Time Warner, which was one of the most disastrous, combinations in entertainment history. And then, then also the deal with AT&T buying the company later. And there was a huge culture clash
I should have got out up here.
Discovery coming along and combining assets with what remained of Warner Media also has been a
trade flattened on me and I kind of got stuck in the middle
part
of
of the
it.
question is, why would this be different? And people asked that, analysts brought
Same
that
things
up
last
today
time.
in the phone call with Netflix executives. And what they said is, look, we're in the entertainment business. And they didn't bring up the other companies' names, but AOL was not in the entertainment business. They were a tech company, dial-up.
I've got
access to the internet in the early days.
I got 3 copied
and
on this.
AT&T also had, basically no entertainment.
It's still
industry
I thought Netflix
history.
was a tech company. That's what they tell investors.
Yeah, I mean, and they, there's the famous quote of that Ted Sarandos said, early in the streaming wars, where they said, he said, we have to become HBO faster than HBO becomes us. And
All right, I gotta
think
make
if
a
you
phone
look
call.
back
I'll be
at
right
what's
back.
happened in the dozen years since then, Netflix was able to master the skills of an entertainment company and how to develop original programming, how to build franchises quicker than HBO was able to master the streaming technology and distribute in this post-cable era.
I think about the culture clash, and I think about how Amazon bought MGM for $8.5 billion. And you
That's
don't
right.
hear about MGM anymore. It's kind of like it's lost its identity.
I can't imagine that would happen with Warner Brothers, but I mean, could it? Does Netflix just become so big it overshadows these legacy brands?
Yeah, I think there's some serious questions about how these are going to fit together. And people ask today, like, what is, what's the plan? Like, is HBO going to be a standalone streaming service? Is it going to be integrated? Is it going to be like a tab on Netflix? And they said, well, hold up. We have basically a year to 18 months to figure out these questions. We're still ourselves kind of figuring out how they're going to fit together, but they see them as complementary services, complementary brands. And I think it's interesting when you think back about the past year, because in a sense, this was something that executives of Warner Brothers Discovery also came to this conclusion in the past year.
No, you
they
can
spent
trade.
The past couple of years saying, "Oh, we're going to."
On just my strategy, sometimes we'll flatten trades because it's just the programming is shit.
From Warner Brothers to build.
So I'm struggling through that until the final programming is done, and it kind of fucks up my trades halfway through. But
in terms of
the entry was right.
The service, and eventually, in the past 6 months, they started saying,
it's just the ATM management goes haywire on me.
Everyone has Netflix, and there's a bunch of other complementary streaming.
But this trade is still okay.
HBO Max is one.
All right, I gotta make a call. I'll be right back.
We're not going to try and offer everything. So in some ways, there is, other people kind of saw this come in. Maybe there's some world in which if you already have Netflix, do you buy the HBO add-on in the future from Netflix to see the next season of
another bundle choice is what we may have.
More bundling.
But this is more bundling. Oh, yay! Something to look forward to.
Yeah.
Real quick, Warner Brothers Discovery has a market cap of about 64. Is it 64 million? Is that right? Billion. Yeah. Why do we have million here? No, 64 billion. That's right.
Yep, 64 billion.
So are they overpaying for this? Is Netflix overpaying? Because they're not getting the whole company and they're taking on the debt.
Yeah, I mean, I think the share price is down a little bit today, so I think there is some skepticism and questions about Netflix's overall strategy. Did you run out of other things to do? There have been talk in the past of where is Netflix's growth going to come from? Well, they did this password crackdown efforts that people were like, what could that really do? But it was actually pretty successful. And then they said, okay, we're gonna start doing advertising, have an ad-supported version of Netflix, which previously they'd said we're never gonna do advertising.
Yeah. Oh, and sports too, right?
And sports, live sports, which is part of attracting advertising. Then what's next? So what's next is this deal, and it's not that out of the realm of what they're already doing. So I think there's some question is like, paying for all that additional library, how much does that help you? Especially when you look back at, say, Disney's acquisition of Fox. And their whole library, which again, huge library of really rich content, movies, TV series. And when you look back at that deal, people now think Disney maybe overpaid.
Well, certainly we know that Rupert Murdoch sold out at the right time, if nothing else. All right, Felix, appreciate your joining us this afternoon. Felix Gillette wrote the book on HBO. He is Bloomberg's media and entertainment editor, and of course, author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. And I think you nailed it when you said, oh, bundling, yay, because the history of media is about bundling and unbundling, and now we're back to bundling once again.
Yeah, and also never say never. I think those are the two big takeaways, right, from this merger.
All right, well, we also have data that we want to get through today, some economic data. What I found really interesting was a recovery. I don't even want to call it a rebound. It's just a bit of a recovery in consumer sentiment, rising for the first time in 5 months, although it's coming off some very depressed levels, the second lowest ever, according to the latest University of Michigan survey. Let's talk about the health of the labor market and economy now with Karen Kimbrough, chief economist at LinkedIn. Karen, you are looking at the labor economy through your lens over at LinkedIn. What do you see when it comes to job postings on LinkedIn and the take-up of those job postings?
What we're seeing right now is a labor market in the U.S. that is continuing to soften. It's not collapsing. We still see some pockets of momentum, but largely this is the labor market where employers are cautious and workers are feeling a little insecure. So, for example, when we look at our data, what we see at LinkedIn is a workforce that is adding that little badge on their profile that says, I'm open to being hired someplace. And we
Open
saw a
to work,
20%
yes.
increase. Yes, a 20% increase in members on our platform adding that badge in the U.S. alone in the past year.
Wow, that's
That's kind
significant.
of a sign of insecurity. So despite this confidence measure you just mentioned among the consumer, what we're seeing amongst the worker is a little bit of insecurity. It shows up also in our own confidence measures where we say, how do you feel about getting a job, finding a job? And it's at the lowest level we've ever seen since we began this over 5 years ago.
Yeah, and we know that
yes.
Well, I was just going to say it's taking longer, right, for folks to find a job, which is an ongoing problem. So I'm curious to know where you're seeing the most hiring, the least hiring from your lens there at LinkedIn.
Yeah, so just taking it industry by industry quickly, some of the standout industries where we're seeing hiring pick up, it's actually positive, it's looking healthy. Tech, for one, believe it or not, is back in the black. It's positive. We're seeing hiring rates running around 6%. So tech is hiring, media is hiring. We also see it in healthcare, which has been a long-standing story of healthcare just outperforming in terms of hiring, and for obvious reasons. We see it in education. When you think about primary and secondary education, a lot of hiring going on there, not so much at the university level, though. So there are pockets where we're seeing the hiring happen. Finance is holding in as well. Where we don't see it happening, where there isn't much momentum, is construction. Think about retail, accommodation. Not seeing a lot of hiring happening there. Manufacturing is looking very depressed. So these are pockets of no momentum. And I think when you put it all together, what it tells me is that we've got a labor market that is still moving forward very slowly, without much momentum, but it's got a fragility to it. If we were to get a shock, it probably would be pretty rocked by it.
Wow. Okay. So that's a great way of characterizing what we're seeing right now. I think there's also frustration for a lot of job seekers, Karen, by so-called ghost jobs. There's an abundance of listings, but when people apply to jobs, there's very little follow-through on actual hiring. And it's not clear if there's a qualifications mismatch or whether maybe companies are just building up an inventory of candidates for potential positions down the road. I'm curious what you're seeing at LinkedIn.
You know what, I wouldn't put it so much as ghost jobs. What I would put it as people are finding it's taking longer to find a job. So we do see applications per applicant having been, elevated over the past year. Again, like I said, people are putting that open to work badge. They're feeling a little frustrated by a labor market where, frankly, it's a lot tougher and it's taking longer to find a job. But I don't think it's a question of just ghost jobs. I think it's a question of many more applications per job. The other thing I would say is, there is a bright spot. There are places where people are having more success, and one of them is in the small business area. So small businesses are hiring. Their hiring rate is positive relative to large businesses. So those big companies, 10,000 plus employees, they're expressing more caution. They're holding back. They want to wait and see what's going to happen with the economy, with rates, with industrial policy, with AI. But the smaller businesses are taking up the mantle. They are absolutely hiring right now.
In about 30 seconds, Karen, what's the outlook in 2026? What are you seeing there at LinkedIn? Might we start to see a bit of a loosening up and more companies willing to, expand the payrolls?
Look, what I'm seeing right now is I think that the optimism that we're seeing about the economy, the outlook from small businesses who say, look, I'm finding it actually pretty easy right now to kind of continue doing my hiring. I hope that continues. I hope that small business optimism continues because that really is a backbone for the economy. I think the bigger companies are a lot more cautious. I think that's more of a wait and see. They have a big AI play for a lot of them. So I think they're going to be more cautious.
Karen Crimbro, really appreciate your joining us, Chief Economist at LinkedIn in Sunnyvale, California. And, Karen talked about small companies being big drivers of job growth. I think for job seekers, the concern is benefits. You might not get health insurance coverage at the same rate or in the same quality that you would at a bigger company or other benefits for that matter.
No, it's true. But I think for a lot of folks who are just looking for the work, and to your point, the ghosting, the not being able to get an interview, going on one interview and never hearing again. Yeah. For some folks, doesn't matter if it's small or large, they just want a shot at that job.
Right. And we know companies sometimes list jobs for people they already have in mind. They just need to do it to make sure that it's out there.
A lot of that.
All right, well, a lot more to come here on Bloomberg Business Week. Right now, we are looking at an S&P 500 that is in the green, up for a fourth straight day, up by 0.2%. The Russell 2000 negative by 0.3%. This is Bloomberg Business Week.
Order filled. Order submitted. Stop filled.
So good for them. So
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. SpaceX said to be in talks to sell insider shares in a deal that would value Elon Musk's rocket and satellite maker at $800 billion. Now, this according to the Wall Street Journal, citing sources. The other top story at this hour, the U.S. Supreme Court will review President Trump's planned rollback of automatic birthright citizenship, setting up a high-stakes showdown over what long has been understood to be a constitutional right. Stocks right now trading higher. S&P, Dow, NASDAQ all advancing. S&P up 1568.72. That is a gain of just about 0.2%. We do have the Dow Jones Industrial Average up 153, a gain of 0.3%. The NASDAQ Composite Index up 0.3%, higher by 59 now. A down day for the Russell 2000 Index of right now, looking at a loss of 0.2% on the Russell 2000. 10-year at 4.13% with the 2-year 3.56. 6%. Gold, $42.08 the ounce, flat on the day. West Texas Intermediate crude, $60.03 a barrel, up 0.6%. And Bitcoin now down by 3.1%, 89,358 on Bitcoin. Deal news, Netflix trading lower, down 2.7% right now. Warner Brothers Discovery up by 5%. Stay with Bloomberg for the latest on the deal news. Also, the other story that we're following for you at this hour, Southwest Airlines lowering its operating profit target for the full year, citing fallout from recent U.S. government shutdown as well as higher fuel prices. Southwest up by 5.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie. Alexis Christophorous here with Scarlet Fu. Carol and Tim have the day off. From the White House to Hollywood, just about everybody seems to be weighing in on this Netflix mega buyout of Warner Brothers Discovery. So let's break it down a little further with Chris Palmieri. He is Bloomberg Senior Editor and Entertainment Team Leader, joining us from Los Angeles. And here in New York City, we want to talk about the legal and antitrust concerns with Jennifer Rhee, Bloomberg Intelligence's Senior Analyst for Antitrust Litigation. Thanks, guys, for joining us here on a Friday afternoon. Chris, I want to start with you. There was a group of anonymous film producers yesterday who sent a letter to Congress, and they said they had, quote, grave concerns about a Netflix deal. They argued that Netflix views any time spent watching a movie in a theater as time not spent on their platform. What are you hearing in terms of industry reaction to this deal?
Well, I'll put it this way. The Writers Guild that represents screenwriters came out with a statement that said this merger must be blocked. So they always have a way with words, I guess. Yeah, no, Hollywood not happy. Everyone from James Cameron to Jane Fonda publicly saying that losing Warner Brothers would be, in some Cameron's words, a disaster. They're not happy. The industry's already gone through wrenching change. Movie theater attendance is way down, cutbacks, runaway production, everything being shot overseas. Already seen, big mergers of MGM and Fox, and so nobody's really happy about seeing another giant deal like this.
You mentioned how the WGA, the Writers Guild Association, wants this deal blocked. Jen Rhee, is this something where regulators would step in and say, hold on, we need to go through a lot of things before we give this our blessings?
Oh, I absolutely think so, Scarlett. I mean, it's got a long haul before it to get through the antitrust reviews. I'm sure it'll go into an in-depth investigation by the Department of Justice. Some state attorneys general may join in on that, and likely in the UK and in Europe as well, where Netflix is quite popular. These concerns that Chris was just talking about in the antitrust world are called monopsony concerns. And this has kind of come into focus before the DOJ in the last 5 to 10 years. And it's about too few buyers of products or services, right? And so this would be about Netflix. And it's kind of two-pronged because it would be about Netflix now owning all of this content, the video creation assets of Warner. They already hire artists, writers, and talent for writing their own original scripted content. And now they'd be even a larger buyer of these services. And that could push down wages, quality of work, et cetera, for this big pool of talent. And that's one issue. And then the movie theaters are concerned too, because Netflix is a streaming entity, hasn't historically released movies in theaters, and would down the road be able to do what it wants to with new theatrical releases.
Chris, what is Netflix saying, if anything, about how they may treat movies in the theaters if this deal were to go through?
They've said they honor commitments that Warner Brothers has with films being released in theaters.
Okay,
Part
I'm
of
back.
this is the talent, the people that have the clout when they
All
make
right,
these
so
films
we're
made,
still in the trade here.
want
We're
their
still working
pictures
it.
in the theaters.
The trade flattened, the ATM
What's
flattened back
not been
here,
addressed is what happens
and then
with
it kind
sort
of
the
caught me in the
deals that
trade.
Warner Brothers made
So that's
with
the bugs
James
that I'm
Cameron or
trying to work
whoever.
out. But
What happens
so the trade really should have ended up here
Netflix's strategy
on
has
probably this
been very
candle. I
limited
should have
releases
probably
in theaters,
tightened
usually
up and
just
got
to
out up
qualify
here.
for Oscars
But
nominations and things.
the
It's
ATM
always been
strategy's
its primary
being
audience is
reprogrammed so
the
that it'll
subscriber
just
at
work
home.
correctly.
I think about what this would mean to me as a consumer because,
And
of course,
technically, I
I've
could have
been with
got out
Netflix
of the other
and HBO,
contracts
and
if
I
it didn't
wonder
crash
whether
on me,
combining them will result in a lower price, the
and
same
probably
price, or
maybe
whether
kept
Netflix
one
might
on.
make me pay for an extra
So,
access to HBO.
overall,
Jen, how do you think about what regulators
overall,
are
really
likely
what
to
we
say
need to do
regarding
here is just keep
subscription
challenging the
prices?
View app and break through,
That's
and
certainly
then
an argument that Netflix is going to make as to why this deal is pro-competitive.
then
But
the
I'll
whole
tell you that
the trade
a company with
the
market
trade worked
power
out as
promising to
intended.
keep prices low doesn't really hold much sway
Yeah,
with the
but
antitrust
I'm on
regulators because
evals, and
antitrust is
honestly,
about
if we get a
maintaining
Shrek
a
here,
market structure
I'm
that
gonna let it
lends toward
roll because I'm
competitive
on a
prices, that
5-pack
results in competitive prices,
like
not a promise
Callista
of a big
setup,
company
and
that, hey, we're going to keep
I'm
releasing
on a
movies in
5-pack,
theaters or we're going to keep the
so
prices down.
I'm just gonna let it roll, and
A short-term
I can
gain
get
for
half of it
consumers
knocked
in
out if this thing
early
spikes.
on lower prices
And I
could
got a good
result in
position,
long-term harm
so
to consumers
I mean
as
that's
other
kind of where it's
smaller
at. It's not real
streaming
money,
entities go out
just
of
so you guys
business,
know.
let's say
And
because
I'm
they can't
experimenting with the
access
final
popular
stages of
content
the
of Warner
program
Brothers.
so
They
it
can't
works
license it
correctly,
because
just so you
Netflix,
guys know.
doesn't allow for that.
So it's
And
been a
then it
3.5,
sort of
4-year
leaves a combined
project now,
Netflix,
finally,
HBO Max able to do
you know,
whatever it wants to
part-time while
with
I've been
prices down the
working,
road. And I
kind of
think
like what you guys are
that
doing,
would be
finally
concern of
coming,
regulators,
hopefully,
even though there would be an
coming full
argument that
circle here,
early
but
on there
let's
could
just
be a
see if we
lower
break
bundle
through.
price.
So Jen, what
There's
about
really nothing at risk, you
divesting?
know what I'm saying?
What I don't know, but would the government ask Netflix to divest something? Would they have to make some changes in the way that Skydance had to when the FCC greenlit their deal with Paramount? I think they had to scrap some DEI initiatives and do a few other things. So what might that look like here?
So we're just going to let it play out.
Well, I know it sounds strange because HBO Max is a big asset here that they're buying, but I think they could be asked to divest HBO Max. And it may be that Netflix would be willing to do that in order to get those studio assets. I think that would really solve their problems in the UK and Europe. It would go a long way to getting
And
those
then if
things
we start
resolved.
to get the
And it would
upward
solve
move,
some issues in the US as well.
I'll try and move in and
I would
out and
believe they
scale
would still
until it
likely have
flattens
to
it
enter
again,
some
and then
sort
I'll
of
just be
behavioral
out.
remedy with respect to being willing to freely license.
Okay, so you're
out
learning
your
already,
content,
Callista.
IP, what's in the library to some of its
Are you
streaming
learning?
rivals.
See, that's why you do the
But maybe
5-pack
that would
for
be
the
a path to
deal,
getting this deal done.
so you can
Chris,
learn.
jump in here. Would Netflix be willing
You
to
know what I'm
divest
saying?
HBO Max at this price
Because if
tag?
it would have been top step, that would have been
We
$150 just gone,
asked them and
or
gotten an
$100
answer
bucks,
on that directly. Right
and
now,
you'd
their
have to
plans
do
are
another one. Do you
operate
get what I'm saying?
HBO Max separately and can bundle Netflix.
Remember what I said in the video?
And HBO together, sort of like what Disney does with Hulu.
Right, but I mean, this is part of why it wants to buy this asset, right?
It would be very difficult to separate HBO because so much of the content is associated with Game of Thrones, The Sopranos, and that with the brand. So if they were to sell that, I mean, HBO Max is also very dependent on the movies that Warner Brothers makes, Batman, on, Harry Potter. So it's not impossible to separate, but it would certainly be tricky.
You know, look, let's face it, a lot of these things happen because people have relationships, right? And we were talking earlier about how
All right, it's
Paramount
2:30.
really seemed to be the one
Shit,
that
I got
made
another
the
call.
most
All right, guys, I
sense
got to
out
do
of the
another
three
call. I'll be right
suitors
back.
Here. Does a lot of this, Chris, have to do with Netflix's Ted Sarandos having this personal relationship with David Zaslav at Warner Brothers?
Good question.
That certainly does seem to be a factor here. You know, Ted is very well liked in Hollywood, which is shocking considering the power that they have. You know, other people less so. I mean, it's not like Ellison is disliked, but there's certainly a little bit of a feeling that he was a bit of a newcomer to come over here and take up Paramount and then immediately try to buy Warner Brothers. People are used to working with Netflix. Certainly the idea of Netflix having control of these franchises and being able to grow them all around the world as they've so successfully done with original franchises is certainly appealing to some people. So I think that that's part of the reason why Warner Brothers went with Netflix.
Now, speaking of people to watch, Jen, I'm going to ask you a dumb question. Does Brendan Carr, the current chair of the FCC, play a role in any of this, or does he not get involved because this is cable television assets?
He's not involved because it's not even cable television assets because
Netflix right, because that part of the deal is not part of it. Yep.
Yeah. So the FCC would not be involved. This would be, at least in the U.S., the Department of Justice. And like I said, probably some state attorneys general. We've already heard from California that they're concerned about this.
Chris, we're getting reports that this is not over yet, right? Paramount is now considering taking this deal straight to shareholders. Would you see that resulting in anything?
Probably not. So Paramount has offered 30, but it's Netflix is at 27 cash and stock. Plus, there's this extra value shareholders will get from the Warner Brothers cable channels when they're spun off. So Paramount might have to come out an even higher offer. There's questions about their financing, even though they're backed by one of the richest men in the world. They've tapped some Middle Eastern funds, and Netflix being able to borrow $50 billion seems like more of a sure thing. Paramount may certainly, try to go hostile here. Not necessarily going to work.
Jen, what will you be watching for? What are the next steps? I mean, there are a lot of investors who bet on deals and whether they'll go through or not. And this one looks like it'll take a while to unfold.
I think so, and they expect it too. I mean, they're saying 12 to 18 months before closing, but their purchase agreement gives them time all the way through toward the end of 2027. So I'll just be watching, I think, a lot what the administration has to say, because in this day and age, we do have a Department of Justice that's really pushing the policy priorities of this administration when it looks at outcomes for deals, when it's reviewing deals. And that's going to play a big part here. You talked about relationships, and it was clear that President Trump favored Paramount as the buyer, and the White House has already come out to say that they have some reservations about Netflix as the buyer. I'll be watching that to see what happens, because that's really going to tell you what the DOJ is thinking as they go into it. But this is going to take a long time. The investigation is going to start, and things are very quiet during that time, because that's really just a time period where the companies are turning over data and documents to the Department of Justice, and we don't really hear very much.
So basically, sit back, relax, grab some popcorn, and watch this thing play out.
And they're going to turn this into an HBO special at some point.
At some point, they are. Jennifer Rhee, Bloomberg Intelligence's senior analyst for antitrust litigation. Chris Palmieri there in L.A., Bloomberg senior editor and entertainment team leader. Thank you guys so much for putting it all in perspective for us. And just a quick recap of these stocks. Netflix down 2.5%. Perhaps no surprise there. Warner Brothers up better than 5%. As for the other players in this, Paramount, Skydance down more than 8%, and Comcast, haven't been talking a lot about them.
No, it's like we forgot about it. They haven't come up and said anything like they're going to try to put in a bid, as far as we know right now. I mean, there's time.
And you know what? Their stock is up almost 1%. As for the overall market, we're higher, guys. The Dow Industrial is up 128, NASDAQ up 102. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story, and SpaceX is telling investors it's aiming for a late 2026 IPO. Now, this according to the information earlier, the Wall Street Journal reported that SpaceX was in talks to sell insider shares in a deal that would value Elon Musk's rocket and satellite maker at $800 billion. Again, developing story. Stay with Bloomberg for the very latest. Stocks paired gains after a dated reading of the Fed's preferred inflation gauge, with the S&P 500 index now climbing by 0.2%, up 15. 68.72 earlier today was flirting with records. Keep it locked into Bloomberg Radio to see how things shape out at the close. And of course, Bloomberg Television has got you covered at the closing bell as well. Dow Industrials up 155, up 0.3%, 48,006 on the Dow. Nasdaq Composite Index up 60. That is a gain of 0.3%. Bought on an up day for much of the market. Russell 2000 index of small cap shares lower now by 0.2%. The 10-year 4.13%. The 2-year 3.56%. Spot gold flat on the day, 42.06 the ounce, while West Texas Intermediate crude 60.01 a barrel. WTI right now up 0.6%, and a retreat for Bitcoin now down by 2.8%, 89,610 on Bitcoin. A deal we continue to talk about, a deal we are covering on Bloomberg Television and Radio, is Netflix agrees to buy Warner Brothers Discovery in a historic combination, joining the world's dominant paid streaming service with one of Hollywood's oldest and most revered studios. It is a $72 billion cash and stock deal. Netflix shares down 2.2%. Warner Brothers Discovery, WBD on the ticker, up by just about 5.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pelleton. Just to recap the breaking news that we got, a red headline crossing the Bloomberg terminal, Alexis, that SpaceX is telling investors that it is aiming for a IPO, an initial public offering, in the second half of next year. This is according to the information, which cites people familiar with the matter. And of course, SpaceX, if it were to go public, would be a massive company. It's already seen as one of the most valuable private companies out there.
Yeah, now valued at $800 billion, according to the Wall Street Journal, more than OpenAI. Pretty incredible when you think about it. We did want to see if Tesla was reacting at all, and it's actually not. It's not doing a lot of anything today.
Yeah, like you said earlier, Tesla shares are tired. They've had
They're
volatile year. But okay, of course, we will continue to keep you posted on any further headlines on this. In the meantime, when you look at the overall business environment, there are headwinds and tailwinds galore, right? You have a massive AI spending build out. You have deal making, as evidenced by today's bid from Netflix for Warner Brothers Discovery assets. You also have the prospect of lower interest rates from the Federal Reserve as early as next week. Softer job market as well, with a lot of concerns, especially from consumers, that they might not be able to spend it the way they had been because they're not feeling as confident about their employment outlook. And then, of course, there's tariffs too, which threatens to keep prices, if not higher, then certainly elevated. So with all this in mind, let's bring in Dr. Rebecca Humkes. She is a lecturer at the London Business School, and she's at the faculty at Duke Corporate Executive Education. Dr. Rebecca Humkes is also author of Survive, Reset, Thrive, Leading Breakthrough Growth Strategy in Volatile Times. Dr. Humkes, thank you for speaking with us.
Thank you so much for having me. It's my pleasure.
So I guess the first point I want to tackle is this idea of AI, whether we're in an AI bubble. And of course, we won't know the answer until after the fact. But if AI and the excitement around it starts deflating, how much does that cast a pall over everything else that we have going on?
Yeah, the difficulty right now is that AI investment was the primary driver of U.S. GDP in Q2. It is the primary driver of all S&P earnings, and as you know very well, 10 companies in the S&P 500 are driving over 40% of the returns. You know, this is incredible concentration. So if a few of these big AI hyperscalers have a bit of a hiccup, we could see a lot of the other market taken down with them. The challenge with any bubble is it's not black and white, as you know very well, Scarlett. There is shades of gray. And that's what we're seeing right now. Every time we get a market earning, if it's great, we think, okay, well, this is just more a narrative that we're in an AI bubble. If it's bad, we think the bubble's starting to burst. So we're going to see this constant swinging over the next couple of quarters every single time we get one of these earnings reports for that reason.
You know, Rebecca, we've been talking a lot about this K-shaped economy, and you say when it comes to people in leadership positions, to executives, they should be leaning into that, right? Like playing into the K-shaped economy. What do you mean by that? What would that look like?
So we've now had several quarters of data and really a couple of years. We are very much into this K-shaped economy. There is a small percentage of customers, 10% of American consumers are driving half of spending. We've been saying this, and we're actually already seeing this happen in the holiday shopping period. Now, this lower income consumer is still spending, right? We had some good data over Black Friday that they're still spending, but it's a different type of spending. It is very value-based. It is very purpose-driven. It is incredibly researched, right? So influencers and AI engines have a role to play. But we're seeing more research and purpose-driven than we have before. And it's now time for companies to say, okay, we're beyond the point that we can do more shrinkflation or one-off promotions or even worse, wait and see. And we're still seeing this reaction from some of the big players. So my guidance is step up and play, right? This lower income consumer wants real innovation. They want value. And it's time for companies to reinvest and think about what does innovation for this economy and for this consumer look like.
So for companies, does that mean the easy answer is to just make a play for the premium consumer?
There's no easy answers in a growth strategy, of course, and we are seeing some go that way. We're definitely seeing a very bifurcated economy and a bifurcated consumer. So if you have an offering for everybody, you essentially have an offering for nobody right now. This is really the time where we want companies to really think about who their ideal consumer is. Now, if it's in the luxury end, this is still a research-driven and purpose-based, but there is a lot more froth in that aspect of the market. So they could lean in there, but then we're leaving out a large proportion of the American consumer that wants innovation, right? They still want to spend, they still want to gift this holiday period. So that is a answer, but I definitely don't think it's the answer.
And as we are about to close out this year and look ahead to 2026, how should executives, Rebecca, be thinking about the new year in terms of expanding payroll, R&D, investing, et cetera, et cetera?
Yeah, the challenge is the macro data is very messy and it's very lagging. Given the government shutdown, we are really lacking that gold standard data we really need to make decisions. And we're going to see this reflected in the Fed meeting next week. Both aspects of their dual mandate are moving in the wrong way, but not so dramatically so, right? Inflation is high, but still within the tolerance level. The job market is cooling, but we're still roughly in that no fire, no hire narrative, though we might start to see some of those fires happening. And a lot of organizations, as CEOs are looking to make their growth strategies for next year, are facing this environment. The challenge that we have is we look at all of these data points to try to get a reading, is it good or bad? And that's not how we should be looking at data as executives. We should be looking at data for insights. What does this data tell me about what my growth insights are and leading on to those? We unfortunately look at uncertainty and tend to frame it as negative or bad. And when things look gray, we assume it's going to be a downturn and start planning that way. That's not the view we should take if we want to perform in this world. It's about seeing uncertainty for what it is, a series of future events which may or may not occur. And whether or not those events are good or bad depends on what that organization is trying to do and how they're set up. So I do think on a macro level, we're going to see a real more lean into an AI investment. Many companies are really just starting to go up the curve there. R&D and innovation are looking a little bit mixed across different sectors, depending on where you're set up right now. So I think we're going to see it next year, and that'll be interesting. We're going to start seeing it coming on through earnings from next summer as well.
So, Rebecca, what is the black swan, or what's the one thing that you really worry about that keeps you up at night that you think executives, would kind of freak out over if it were to happen?
Well, executives freak out over quite a lot of things, but I tend to be a pretty preliminary bull and try to reframe everything for what that possible insight would be. There's a couple of things that we should be looking for, though. This AI investment bubble right now is very much built on anticipated demand. If we get a few industry leaders, non-tech, come out and make pretty firm statements that they're pulling back from AI investment, that would have real market implications. So, of course, we're looking for that. We're also in an environment of extreme political and geopolitical uncertainty. So any big changes to more trade policy or regulatory policy that really upends industries, that could shake a lot too. So kind of anything in the AI bubble, geopolitical uncertainty, and the extreme policy uncertainty. If we could get a little bit more stability in the political landscape, that would actually do a lot to helping some of the economic uncertainty and the labor market. If you actually dig into the data that we're seeing from the recent job reports, a lot of this is saying, I'm just waiting until I have a bit more certainty coming up. So again, there's lots of things that could happen. Those are the couple things I'm most looking out for.
All right, thank you so much. Dr. Rebecca Humkis is a lecturer at the London Business School and faculty at Duke Corporate Executive Education. Alexis, we need to go back to the breaking news that we were telling everyone about just a few moments ago. SpaceX telling investors that it is aiming for a late 2026 IPO. This is according to the information. SpaceX is mulling an IPO of the entire company, in fact, according to that publication.
At an eye-watering valuation of $800 billion, far surpassing OpenAI's record-setting $500 billion. So we want to bring in Bloomberg Tech co-host Ed Ludlow, who's in San Francisco, and on top of all of it for us about this SpaceX IPO deal. First off, Ed, I guess it was a question of just when, right, not if it was going to happen?
Yeah, I just want to correct and clarify some things for you guys. There are two distinct things here. There is a tender offer, which is an insider share sale, where basically SpaceX does this annually or biannually. It allows employees and early investors to sell shares at a specific price and therefore valuation to give them some liquidity. So the Journal had reported that this tender was at a share price that would give a valuation of $800 billion, double what we believed the valuation to be earlier this year. I'm hearing that there is a tender underway. It could close by Monday, but actually the share price I was hearing is much nearer to $300 a piece, which would put the valuation nearer to $600 billion. So this is a kind of live situation. The IPO part of it is separate, that, you know, in communications with investors, the company is saying that in the second half of next year, 2026, they'd look at an IPO, and the bit you're right about is that it would be the whole company. Previously, we reported that one of the ideas was that SpaceX would spin off Starlink, its space-based, constellation-based internet service, rather than the whole company. But, you know, that is contrary to what the information's put out this morning.
Right. Okay. Thank you for clarifying that. There's a lot going on here with SpaceX, and we know investors are hungry for any information they can get on it, because right now it's privately held, and so you can't really get access to it. Having said all of that, Ed, Elon Musk would be the CEO of two publicly traded companies if this happens. Does his current contract or his current setup with Tesla allow for that?
Yeah, I mean, as you know, Scarlett, we spoke to Tesla's board chair, Robin Denholm, about this exact idea twice. The board seems comfortable based on the compensation agreement, which has now been ratified by Tesla shareholders, that Musk continues on at the helm of other companies. And actually, the board went a step further to say that there's value in Elon Musk having interaction with these companies, because in the future, they basically believe they're highly analogous. You know, if you think about space-based internet and where this market's going right now, a very big concentration on the potential for space-based data centers, they will see it as a kind of value add to have the relationship between the two companies. The technicalities of being the CEO of two public companies, no idea. You know, that will come out in the wash, right, when they talk to investors about it. But remember that SpaceX does have highly capable executives in president.
Okay, I'm back. How we doing?
Runs the place day to day, and then Brett Johnson, the CFO, is the guy that does all the money talk with investors. Anyway.
Turn this into anything yet?
I wonder if this is going to make Jeff Bezos want to take Blue Origin public.
Ooh, good question.
Yeah, it's a great question. I mean, like, look, it is an expensive endeavor to first get the company off the ground, pardon the pun, for launch companies. But at this point, the difference with SpaceX is that they...
Yeah, I see that. I've been just adding at the bottom of the range. These are 250K evals. So the initial trade was back here, guys, right here. Let me kind of map out what went on.
Is that the revenues from Starlink now eclipse launch.
There's still some, you know, experiment. This is not a cash account. If this was a cash account, I would have closed the trade. I would have closed the trade up here. Like we got in, I think we got in right here. I would have closed the trade up here the first time and not let it run. The thing is I was moving contracts in and out. I had an ATM failure because the programming sucks fucking Shrek
All right,
cock,
good stuff. Ed, always
and it
appreciate you
flattened
hopping
it. So
on.
I
Ed
just
Ludlow
decided to
is Bloomberg Tech
just
co-host,
manually
speaking with
try
us
and
about this
manage it and
report
let
from
it
the
run
information that
because they're
SpaceX is
evals.
telling
If
investors
not,
it is
I
aiming
would have
for an
manually closed and
IPO
been
in
up
late
5 to 800.
2026. All right,
So the trade was
let's take a look at
successful.
some
This
stocks
was
on the
the
move. We're about
this
just
was the
over an hour
signal.
away from
The
the
EMA
closing bell
crossed
here on
inside
this
the
Friday.
cloud,
I'm Scarlett Fu with Alexis
and then
Schaffers,
it
and we're
took
joined
off.
now
Then the
by Bloomberg News
confirmation
equity
was
reporter
around the
Natalia
20 EMA. I
Kanedinsevich.
took some heat,
And Natalia, you're looking at a
and
number of
now,
companies, but we first have to start off with the ones
you
that
know,
are
and
in
and the
headlines
profit
all day.
taking was up in these candles. I would have been out by this, by touching the cloud. I would have been out somewhere in here. You know, if this was a cash account or a PA or whatever, and it would have been an $800 to $1,000 winner. But because it flattened, I let it ride, and I'm on evals. I don't know if that makes sense or not. If you've been watching long enough to understand what I'm trying to do long term, but the trade was good. The call was good. The trade was good, and I'd be even from yesterday already. So now we're running again.
Cable networks such as CNN and TNT into a separate
So
company before
I'd like to break through this
the sale of its
VWAP
studio,
finally.
And HBO to Netflix. So of course Netflix will get a big library of programming and studios in California, which gives it competitive advantage over Walt Disney and Paramount Skydance. To some investors, actually, this is a question that what if Netflix is doing this big acquisition because it cannot sustain its business or expand its business at a big scale. However, we'll see. At least it is a good deal for Warner Brothers shareholders as stocks.
Yeah, I'd say Netflix would be paying a pretty penny for the rights to be able to do that if it couldn't sustain things on its own. All right, let's move to beauty because Ulta had a really nice quarterly profit report after the closing bell yesterday. Stock is up nicely as well.
Exactly. The ticker is ULTA. Shares are up by 13, almost 14%. That's actually the highest level ever. The company posted better earnings results, also boosted its guidance.
All right, so let's see if we can double top, and then I'm going to tighten up. If we can double top, if we break through that top, that'd be super nice.
And skincare. As for 2026 forecast, the company sees net sales at $12.3 billion, previously expected 12 to 12.1. But notably, just this summer, the company was very cautious about consumer spending. Now it looks like it's a kind of turnaround.
All right, so the more robust outlook in the second half of the year. Let's finally let's wrap it up with VSCO.
Yeah, so Victoria's Secret shares jumped by as much as 20% today. That was the biggest move since 2022. Again, strong sales, strong outlook, and comparable sales rose 8% last quarter.
All right, so we finally got the push. Let's see if we can clear out some contracts here. So if we were on micros, guys, we wouldn't be talking about a lot of money like through this whole trade. It looks like more money because it's minis.
Really strong, heavy discounts. Now, there's also some data showing that traffic was really strong on Black Friday, and some analysts say that this positions Victoria's Secret really well ahead of the rest of the holiday season. But overall, the company was really a little bit cautious about post-holiday period. So we'll see how it plays out.
All right, thanks so much, Natalia Kanedinsevich, with those stocks to watch. And for more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or wherever you get your podcasts. We have a nice rally underway here to end the week on Wall Street. Still about an hour to go before that closing bell. Dow Industrial is up 174 points. We've got the NASDAQ gaining about 77, and the S&P 500 up 18.
All right, so I'd like this candle to confirm above the VWAP. And finally, maybe we can start making a move up here.
SpaceX now telling investors
maybe through the end of the day. We're at 3 o'clock now. Been in this trade since
right. This is
about
according to the information, which cites people
1 o'clock.
familiar with the
Been
matter.
in this trade a couple hours
discussions
now.
come as SpaceX considers selling shares.
But you got to understand, if these are minis. If this was micros, we were never really into a lot of money. You know what I mean? It looks like more when you multiply it.
But for those of you watching on television, up next
So,
is The Close with Romaine Bostic.
if you're on the appropriate sized account for what you're doing,
at least right now, on an up note.
So it'd be nice if this one double tap the top there. I'll get some contracts off and see what we can work into for the end of the day.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The Supreme Court will decide the issue of birthright citizenship. Linda Kenyon reports.
Birthright citizenship, as outlined in the 14th Amendment, has been challenged by President Trump's executive order that states children born to parents who are in the U.S. illegally or temporarily are not automatically American citizens. The order, which is part of the president's crackdown on immigration, would upend more than 125 years of interpretation of the amendment, which grants citizenship to everyone born on U.S. soil, with some narrow exceptions. The administration argues the 14th Amendment was meant to grant citizenship to newly freed slaves and their children.
A CDC advisory panel has changed the recommendation for when children get their first dose of hepatitis B vaccine. Sabrina Cupid reports.
8 votes yes
All right,
and
let's
3
get a
votes
Shrek.
no. The motion passes.
A federal
Give me
vaccine
a
advisory
Shrek.
committee has voted to end a long-standing recommendation that
Never
all
get
U.S.
one when
babies
you
get the
want.
hepatitis B vaccine on the day they're born. Dr. Cody Meisner voted no.
And I will just say, we've heard do no harm is a moral imperative. We are doing harm.
For decades, the government has advised that all babies be vaccinated against the liver infection right after birth. The shots are widely considered to be a public health success for preventing thousands of illnesses. Today's recommendation, which has to be accepted by the director of the CDC, would overturn a 30-year-old policy.
The chill is on in the northern tier of the country. Meteorologist John Elliott is watching the record shatter.
These records dating back as far as 1899. I want to stress that we had multiple cities from Indiana to Vermont with morning lows below zero.
Netflix has announced plans to acquire Warner Brothers Discovery Studio and streaming business.
The $72 billion deal could see iconic movie franchises like Batman and Harry Potter moving under the Netflix umbrella.
You're a wizard, Harry.
I'm a what? People might appreciate the package if it's available to them. There's a lot of fans out there.
How much would you be willing to pay for all of these in one place?
No more than 20.
But other Netflix subscribers worry that streaming will soon cost just as much as cable.
And I canceled my cable because I wasn't willing to pay.
The Warner Brothers Discovery buyout is expected to face possible antitrust scrutiny. Matt Bigler for CBS News, Los Gatos, California.
With the 2026 FIFA Men's World Cup draw underway, President Trump was also awarded an inaugural FIFA Peace Prize.
I just want to thank everybody. The world is a safer place now. The United States 1 year ago was not doing too well. And now I have to say we're the hottest country anywhere in the world, and we're going to keep it that way.
This is CBS News.
Order filled. The new color of the year isn't very colorful. Here's CBS's Deborah Rodriguez.
In the white room,
Lots of home decorators may be painting their rooms Cloud Dancer white. That's Pantone's chosen tone for 2026. The paint company calls it a billowy balanced white with an aerated presence that acts as a whisper of calm and peace in a noisy world. It's the first time Pantone has picked white since it began making its annual color choice in 1999. The company says Cloud Dancer peels away layers of outmoded thinking and opens the door to a fresh start. Deborah Rodriguez, CBS News.
A treasure trove of more than 200 figurines has been discovered inside a tomb in an ancient Egyptian city. It's a rare find, according to experts, and it solved a long-standing mystery. Most sites like it have been looted. This one contained royal symbols. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is 3:05 on Wall Street. Welcome, everybody.
Okay.
About 55 minutes away here from the closing bell and from the start of the weekend. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. I'm Alexis Christoforous, along with Christine Aquino. If you haven't realized it yet, Carol Massar, Tim Stenovec are off. They've started their weekend already. But
Where's the
Christine,
Reddit
so
crew
great to have
for
you
the
here
squeeze?
co-hosting today.
Thank
We
you
need
so
the
much
squeeze.
for having me. I'm sure it's a busy day today,
Oh
Alexis.
my gosh,
We have a lot to talk
what a
about.
day to be co-hosting. We have a packed 2 hours ahead. Of course, we're going to have to dig into this Netflix deal with Warner Brothers. We're going to attack it from all sides, okay, from a bunch of different angles: antitrust, legal. What about the financing?
Absolutely. And what about the consumer side of it, right? I mean, we are all consumers
At
of
the end of the
streaming
day.
services. Exactly. So what does this mean for yours and my choices when it comes to our Netflix watching?
Yeah, and what does it mean for Hollywood? We're going to get into all of it. Also, a billionaire investor is offering up, I guess, a dose of healthy skepticism when it comes to all that spending we're seeing on data centers to support AI. And then, because it's Friday and because, frankly, we deserve it, a little segment on wine, the business of wine.
I'm very excited about that one.
Because it comes with a wine tasting, I'll tell you that
Exactly,
much. And
yeah.
we'll let our viewers and listeners know how it tastes when we get there. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. I'm in. We have got the Dow, the S&P, NASDAQ all advancing right now. The S&P was trading very close to a record. Right now, we're looking at 68.70 on the S&P, up by about 0.2%. Previous closing high on the S&P, by the way, if you're keeping score, and yes, we are here at Bloomberg, 68.90, and again, 68.70 where we stand right now. The Dow up 131, now up 0.3%. To be sure, S&P up by 0.2. We've got NASDAQ up 0.3%. Interestingly, though, on an update for much of the market, the Russell 2000 index of small cap shares is down by 0.2%. 10-year at 4.13% with a 2-year 3.56%. Gold now lower by 0.1%, 42.04 the ounce. West Texas Intermediate crude up 7/10, 60.08 a barrel, and a retreat for Bitcoin now down by 2.9%, 89,524 right now on Bitcoin. The story everybody's talking about, and we got you covered. Netflix buying Warner Brothers Discovery in a historic combination, joining the world's dominant paid streaming service with one of Hollywood's oldest and most revered studios. It is a $72 billion cash and stock deal. Netflix shares down 2.9%. Warner Brothers Discovery up 5.6%. But one of the big questions, and there are many, what about the antitrust outlook? Jennifer Rhee is senior litigation analyst at Bloomberg Intelligence, and she was interviewed right here on Bloomberg Business Week Daily.
I think it's going to get really significant scrutiny, not just in the United States by the Department of Justice, but likely also in Europe and by the UK and possibly some other jurisdictions as well.
Jen Rhee of Bloomberg Intelligence. Again, Netflix down 2.7%. Warner Brothers Discovery up 5.6%. Other players, Paramount Skydance down 8.5%. And Comcast Corp up by 0.8%. Again, recapping here. Friday afternoon in New York. Cold Friday, I might add. We got the S&P close to a record up 0.2%, up 1368.70 right now. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is a cold Friday here. in here. But we're warm in our Interactive Broker studio.
Cozy in here for sure.
All right, look, we want to stick with this deal that everybody's talking about, Netflix, Warner Brothers. We want to put this deal of the year, as we're calling it, in context in terms of size and score. And by the way, what's going to happen to CNN, TNT, TBS? You see where we're going with this, right? All right, let's bring in Geetha Ranganathan, Senior Media Analyst at Bloomberg Intelligence. She's joining from our Princeton office, and here in studio, Bloomberg Senior M&A Reporter Michelle Davis. Thank you, ladies, for being with us today. Geetha, I want to start with you. Cable properties, CNN, TNT, TBS, not included in this deal with Netflix. What's going to happen to them?
Yeah, so they are going to get spun off into a separate company called Discovery Global. This is just the TV networks business. So as you pointed out, CNN, TBS, TNT, all of that's going to be spun off by mid-year. Actually, the deal should be done by the third quarter of 2026. And so you have Netflix that is
how's everyone out there doing today?
Of Warner Brothers.
This is the only mess I got myself into. But there you go.
Right? What's to happen?
I could have closed it up. I could have closed it up here for $2,000, but I'm kind of swinging for the fences,
really paves the way for
hoping to get the pop out, but it's just not happening.
It absolutely does. And I think
all right,
that was
good.
Initial
be careful with it. Don't give it back.
When they announced kind of this
Don't give it back.
Strategic decision to split the two units, they knew that.
See, on these, I got to make 15,000, so I'm kind of.
You know, that it would sell like hotcakes, which is exactly what happened. But then with the TV networks business, that is a business that is in secular decline. I mean, we've seen EBITDA, advertising revenue, affiliate revenue, all under constant pressure. But the reality of the situation is that it still generates a fairly good amount of cash. I mean, it's a cash generative business. It will throw off about $5 to $5.5 billion in EBITDA even in 2026. So yeah, it is a melting ice cube, but the idea is you have to manage it properly. And so what do? You have to potentially combine it with somebody else.
And to that point, Michelle, I want to ask you, since you're sort of looking at this through the M&A lens, we know that Paramount was interested in buying the entire company. If what they can get out of this is CNN, maybe the other properties like a TNT and a TBS, do you think there would be interest there? Would that make sense?
It's a really good question, but especially during the last few weeks and months, it's become clear that the prized asset that people see here is the studio and the streaming. And so
Graph rocketed up when I was in a sell order.
It had an advantage in that it could go after the whole thing. A lot of these companies have been trying to separate out their cable
Excelente.
So we'll see if that's how they pivot, but I don't even think, I mean, this might not even be the end of the story or the saga for Paramount, because
good point.
I think if we
a letter came out.
I think if we get above the VWAP again, I'm going to just go ahead and look at closing this out.
Seemed like they might be laying the
I don't want to add any more contracts to it.
TBD on whether they will do that. If they were to do that, or if Comcast, the other bidder, were to try to come in with a counteroffer, they would have to pay $2.8 billion of a break fee to make Netflix or Warner Brothers whole, basically. And then, of course, some premium on top of what's already on the table. So there's just a lot that could still come out.
It's not the end of the story by far. And there is a report today that says that Paramount is considering going straight to shareholders now. So we'll see if that actually happens.
Yeah, I mean, Michelle and I were just talking about this just before the show. I mean, we have an 18-month road ahead of us, right? So apart from, the potential for other bidders coming in with better offers or going hostile, as you say, what other kind of potential hurdles that we might see here, particularly on the regulatory side?
So that's the big one. It's the regulatory hurdle. The big question is, how are regulators going to weigh in on this? Do they think it's anti-competitive, or do they think it's good for consumers, as Netflix is arguing? The big question that we will be looking into is, how are they going to define the market? Because if the market is defined as purely streaming, then maybe, Netflix, the king of streaming, buying HBO's Max, looks like they're going to be very dominant. But if you zoom out a bit and look at overall TV viewership, Google's YouTube is actually the top, has the top share, 13% of viewership. And the two combined, I think, get it right there at a place where it competes with Google and Disney. So we'll see. It'll all hinge on that.
Geetha, what's your take on antitrust concerns here? And do you think that this is going to pass muster, or might these companies need to get rid of some
game?
Things, make some
It is a game in a way.
Yeah, totally agree with what Michelle
Is
said.
you're
It's
trying to
really
give
going to come down
yourself
to
an
how they
edge.
define the
You're
market.
trying to give yourself an
Because,
edge.
Netflix has
That's all
always
you're
argued
trying
that
to
it
do.
just does not compete with an
It's
Amazon
like a
Prime
game
or a
of
Disney
poker
Plus.
in
It
a
really
in a
competes
sense.
with
You're just trying to
YouTube.
give
You're the
yourself an
social
edge and
media
take
platform.
profit
And think
down when
about
you
the
have it.
amount of
You know
time
what I'm
spent
saying?
on, a Reels or a TikTok or YouTube Shorts. I mean, this is where the world is headed.
But this is why you
And so
don't put
Netflix
your
could
real
very
money in.
easily
You know what
say
I'm
or put the
saying?
argument forward that it has to compete
You
with
don't
all of
put
these
your real
different
money in
platforms,
until
and you
you've got
can just
evals
narrow the
or until you
scope.
got the prop
But
firms
they are saying
mastered.
all the right things so far, right? One of the big
You know, how
concerns,
much of your
apart
real
from
money would be
obviously the
gone
prominence
already if you
with the
did
number of
that?
subscribers, is
That's
about
why
their
this
whole
is
stance
the
on
safest
theatrical
way
releases. So from the get-go, they have been
to learn
they have
and
vehemently
get in the game.
opposed having movies in theaters. They've always kind of advocated for this day and date release, putting movies straight to the streaming service. And so now this seems like a little bit of a departure when they are saying they're committing to actually continuing to support Warner Brothers releases or movies in theaters. We'll see how far that actually goes. So far, they're saying all the right things. They're saying that they'll continue
All
to
right.
release the movies. So they're basically assuaging, Hollywood content
Yeah,
creators,
that's what I'm saying.
the labor
That's
unions,
why, that's why I
the
was
theaters.
telling you, you
But
got it.
again,
This is the
I
way to
don't know
do
if
it.
everybody
I
really
figured out the
fully believes
cheapest way
Netflix.
to not
The
really
other thing
risk
to consider
anything
is the licensing
to be
part.
able
So
to figure it
remember,
out. Because this
Warner
way you
Brothers
can
Studios, when
experiment,
they have all
like
these
I'm
theatrical
doing.
releases,
You know,
40% of their revenue actually comes from
I
licensing. Think of,
make good money.
Ted
I
Lasso
can
or
experiment
Apple
with
TV or
evals and have
Abbott
live data
Elementary on
going and
ABC. Those are all
until I
Warner
got the
Brothers
program
shows.
all figured
So the big
out. And
question
then
now
once I
becomes the other
prove it and I have
licensing
other
buyer,
people
is
beta
Netflix actually
test it
going to
and I
restrict
know it's
that
going to
supply
work
of
right,
content?
then
Because
I can
then
put
that
real money
becomes
in or
another
use my
potential
PAs.
regulatory
You know
issue.
what I'm
But
saying?
again, so far they're saying they're not going to do any
And then I'll have
censorship,
real money on the
TBD
line.
on what
And that's
actually
kind of what I'm
happens.
doing.
Now,
And
Alexis, we promised
I'm
to
to
cover
the
all
end now.
angles of
It's
this
gonna
story, right?
it should
So
all
I'm
be
gonna ask
wrapped up.
Michelle, actually,
And I'm
who
hoping
are
to
the
be
real
able to
winners
offer
in this deal of the year
the
in terms
strategy
of
as a
the
subscription by
executives who are probably going
February
to
is
get
what I'm
big payouts
hoping.
from this?
So, the winners would definitely be Warner Brothers. They're looking, and its execs, they're looking very good right now. The stock has gone up a ton ever since they even announced earlier this year that they were going to be potentially splitting themselves in two. And then there are some banks here that are actually some clear winners.
That's what I'm hoping.
We saw Wells Fargo
Quarter after three,
helping
guys.
to arrange a $60 billion
So,
bridge loan to
I'm
help
gonna
Netflix
I'm gonna
finance
start
this.
I'm
That's
gonna
one
look
of the
at closing
biggest
this.
bridge
I'm
loans of
gonna
all
look
time.
at tightening
And Wells
this up
Fargo
and
is actually
taking it
contributing
down.
the most any single bank has ever contributed for
I
something
don't want
like
it to
that.
come
And
back
so
on me again
we saw
after
Wells
this
Fargo,
run up.
Evercore, Allen and Company, Moelis, they all jumped
If I
in the
double
league
top,
tables.
I'm gonna
So
pull
when we
these
come to
5
the end of
up
the
to
year,
get
bankers
them
are
off.
all focused on what their bonuses are going to be, and I'm sure they're all seeing.
So if we're
those
gonna get a
winners
Shrek,
right
I'd
now.
like it now.
Yeah,
If I
lots
could
of folks are
order a
gonna be
Shrek.
making
I
lots
don't
of
know if
money,
you can
including
order
the
a green
bankers
cock.
on this deal. All right,
Probably
want to
not.
thank Michelle Davis of
That'd be like weird if you
Bloomberg. She
could.
covers M&A for us here, and also Geetha
But in only in
Ranganathan,
trading
senior
terms.
media analyst at BI, joining us from our Princeton office. Thank you so much, ladies. We appreciate it. And just to tell you again where these stocks are, Netflix under pressure, Christine, down about 3%. Warner Brothers Discovery up about 6%. We mentioned Disney and all, because I sort of forgot about Disney in all this discussion. They're not one of the bidders, but they have a lot at stake here. Disney stock barely budging. Comcast up about 1%. And Paramount down 8.5%.
Yeah, it's very interesting how uneven the investor reception is, right? I mean, Netflix definitely kind of being seen as
You got to take profit off, dude. Like I've been at profit at 2,500 profit 2 or 3 times, and I just haven't taken it off.
Yeah, but again, it is, I think, far from over, folks.
If I was starting from day one and I wasn't playing around a little bit, I would just take the profit off at 2 grand. You know what I'm saying? I go in on my signal. If I got a grand or 2 grand profit, I pull up behind it and I take the profit off and I do it again.
And this is Bloomberg Business Week Daily.
Now, have you been watching this trade? I was up 1,000 and I could have just closed it then, right out of the box. But I was playing around with the ATM to see where it would trigger out. And then it flattened on me. You know what I'm saying? I've got 10 NQs on right now. The thing is, when I first enter, I don't let it run against me, you know? No, it's just you have to adjust how you it's hard. It's a hard adjustment, I know. But I think it's one that's necessary to be successful long term, because you got to learn how to take your profit down because you can always re-enter. and it's probably the hard. It's easy for me to say. You can't. It's like telling somebody they shouldn't get married. You know what I'm saying? There's no way you're talking them out of it. And you can tell them exactly what's going to happen with the next 20 years of your life. And they'll be like, no, that ain't going to happen to me. And then 20 years goes by and they're like, fuck, man, you were right. You know what I'm saying? I'm going to start peeling contracts off now. Damn it. I didn't take those out. The problem is with many minis, the programs could wreck you, but you would be running 10NQ with real money. Yeah, well, the way I got the program set up is if you're following the fucking rules, you're always going in the right direction or you're getting out quickly. I programmed it to work this way for a reason. The signal is never really wrong. If you follow it every time, you'll have the edge. But the thing is it's hard to, like, because after you enter, it's really sketchy on how it fucking works because the programming is so bad. It's hard to, like, show you that is what it is. The entries are what they are. But you got to take profit down. You got to scale out. And you got to let the trade develop. And if it keeps going your way, you scale in at the bottom of the zone and scale out at the top through the trade. You know what I'm saying? See, I should have got those 2 off up here. And then I'd only be on for 8. I didn't want it to come back against me again. And that's the secret to it. It's how you manage the smaller trades within the bigger trade is the secret. Is you take profit down and keep your risk low as it comes along. Yeah, I know. I was talking. Yeah, I know. It came back right where I was trying to set it, or I'd have those 2 off. And that would be profit in the bank. But now I gotta wait for it to do it again. I didn't want it to come back with all of them. But if this was a cash, if I loaded up 40 or 50,000 cash, I'd have got out with my grand up here. I wouldn't have played with the rest of this shit. You know what I'm saying? I'd have got my 1,000 back I lost yesterday, and I'd be even for the last 2 days, and I'd been done for the day. But because I'm working evals and I got 5 packs going, I got to use them, and I got to get to 15 grand. So,
and learn how to add metals to your IRA,
you know, it's
401k tax and penalty free.
Once everything is finished with the programming, I'm not gonna, like, I'm pretty much fucking done with the eval stuff. I'm just gonna run the PAs, I'm gonna run a cash account, and then maybe one day a prop firm will say, hey, we'll fund you with live money, and then I'll be done with the prop firm game. I'll kind of move past it. It would have run its course for my path.
Dow up 145 right now, up 0.3%. NASDAQ up 63. That is a gain of 0.3%. The rest of the market higher, but a retreat for the Russell 2000 index of small cap shares, down now by 0.2%. Your 10-year at 4.13% with a 2-year 3.56%. Gold flat on the day, 42.05 the ounce.
So I'm kind of getting pissed now. I wish I would have pulled those contracts off up there because I'm not sure if it's really going to run.
And Bitcoin now down 2.7% below 90K, 89,647 on Bitcoin. As for the market backdrop heading into next week's Fed decision on Wednesday, Barbara Reinhardt is Chief Investment Officer for Multi-Asset Strategies and Solutions at Voya Investment Management, and she was interviewed this morning on Bloomberg Surveillance.
I do think that the Fed's likely to cut. I think that you've got the labor market. Looks like it could probably use
one more
some
pop.
relief.
Damn
I think consumers could use some relief as well. And I think there's enough in the pipeline from the data that we have that says that the Fed could cut. It may be a hawkish cut where they say we're going to cut and this may be it for a while, or it may be.
I should have been out of this 10 times already. I'm just looking for the Shrek at the end of the day if I can get there.
Market's indeed going to react to.
Voya's Barbara Reinhardt.
So if I pull 6 or 7 grand down from this trade, then I only, then it's easy to get from there.
16%.
I got extras.
Hewlett-Packard Enterprise after earnings up 2%. Ulta Beauty after earnings up 13.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie. Alexis Christoforous here with Christina Kino on a Friday afternoon on Bloomberg Business Daily. Carol and Tim have already started their weekend. Thank you very much. Christine, we talk a lot about concern over spending on AI. All the CapEx money flowing into these data centers that we need to fuel AI. And earlier this week, Bloomberg News' Texas Bureau Chief Julie Fine caught up with Fernando de Leon. He is a founder of Leon Capital Group. The holding company has 3 primary divisions across financial services, healthcare, and real estate. And now, despite having built much of his fortune in the real estate sector, de Leon is not as bullish as some investors about this wave of data center construction that's taking place in support of big tech companies. Just want to play for you all a small portion of that interview.
One of the basic things that I try to understand is the question around these large infrastructure costs. You have a $10–15 billion asset. And to me, the question is, why don't the hyperscalers, why don't the large technology companies want to own those buildings? They are asking financial companies to develop them for them and to finance them, and they don't want to own them. These are the largest companies in the world.
When I closed my order, did you see it go flat when
Facebook and Meta that own these leases? They're 15, 20-year leases, but they don't want to encumber their balance sheet with these assets. And so I wonder why. I'm curious and I'm skeptical about why.
See, this is why I wanted to pull those contracts off.
They'd rather lease them.
I do want to talk to you about Alphabet Google. They recently announced a $40 billion investment.
Should have been out of this trade 5 times already, but
in Texas, one near Abilene. That project will be co-located with a new solar.
Yeah, but what you got to pull it down when it's going your way. You know what I mean? You can't worry about what it does after you're out. You gotta take the profit and put it in the bank. And you always have a runner until the very end. You always have a runner till the very end. So you can always add to the trade and then take it off again when it's going your way. That's how you manage the inside of the trade.
Those energy sources. But I'm a little bit more worried.
But the way the programming's so complicated, it's just not working. So I'm having the ATM strategy built directly into the strategy. It's not NinjaTrader anymore. It's when you load the strategy, everything is inside it, including the ATM. So all these buttons won't be the chart trader. This will be gone. And when I load the strategy will have its own. Does that make sense? That probably does to you, SM.
I saw them in the early 2000s with the telecom
Because
industry.
you kind of know how NinjaTrader works, I think.
Cisco and JDS Uniphase.
So NinjaTrader, chart trader doesn't have to talk to my strategy. It's all in one place. That's the goal of the whole thing, is so a new guy can come along like you, Callista. And if you can afford $50 a month, you can just click a few buttons and have everything on my screen. And you just got to learn how to click them and how to read the chart by watching the videos. And you can start trading. You can start trading. And then as you grow, if you create your own stuff or you come up with your own thing, you can learn by doing and then create your own method on the side that you like more, or you can keep using it. It doesn't mean you have to use it forever, but it gets you started quickly you learn by using it like a technician. You don't have to be an engineer. You just have to be able to follow the manuals and use it. That's the idea.
Now, some of them are being accommodative to quantum computing and other capacity that's going to change over time. So I think they are sort of hedging that way. But I'm concerned if Google wants to open a facility and own it on their balance sheet, then great. But when you have financial intermediaries like BlackRock and others that are financing these on behalf of those companies that have giant balance sheets, I'm just asking the question, why?
Yeah, very interesting comments indeed on data centers. Let's bring in some of our experts to discuss more. Bloomberg Intelligence Senior Technology Analyst Anurag Rana, who is coming to us from Chicago. Anurag, do you share the skepticism over data center investments, particularly when it comes to the land?
I think it's very difficult to go out and paint a broad picture that the entire space has skepticism. When you look at investments made by a company like Microsoft, Google, or Amazon, truly I'm not that concerned about it, because what happens is as they are expanding capacity to take care of the AI workloads, two things are there. First of all, they have the backlog to support some of that growth. Second, let's assume in the most wildest way that all of the workloads that they are seeing rise up next year. It's okay for them because their cloud business and their own internal
Yeah.
businesses
Yeah,
can
you
bear
just
just that
follow the
expansion
screen and
over the
just
next few
watch
years.
the
So
videos,
on
and then
one
you
side,
can
I'm
sit at
less
home while
concerned when
I'm
it comes
using
to somebody
mine,
like a
watch the
Microsoft.
stream,
When
and
they
just
report
use
their
it.
earnings, they
You
give
know, then that
all
way
of
you
the
can work
capital
while you use
expenditure,
it.
including leases and
Yeah,
excluding
you do.
leases. So
Once you hit six
any
grand,
financial
stop
analyst can
trading.
figure
You
out where that
passed. Then you
particular
just got to pay the
investment is going.
119 for the paid
The
account.
big question at this point
And then you
is
can start working
the
toward a
expansion
payout.
that
That's how it
OpenAI is
works.
doing right now with the help of Oracle and NVIDIA. And the big question over there is that OpenAI's revenue run rate by the end of this year is somewhere going to be in the 20 billion run rate or so. And they have made commitments of hundreds of billions of dollars. And that's an area where I think you need to really sit down and think about more. But other than this little pocket, I'm actually not that concerned about the rest of the hyperscale cloud providers, because not only have they have the capital, but they have the businesses to support it.
Is anybody being judicious?
This is
on
kind of
when it
aggravating the shit
comes
out of
to
me, honestly.
spending
It's
on
3:30,
AI?
guys. We
I
got
kind
30
of think
minutes.
I can answer my own
Okay,
question
so
with a
stop
no,
trading for the
but
day. All right, don't
can you
touch
think
that
of a
one
company
again,
that's sort
okay?
of maybe doing it a
You're
little
only
bit
going to
more
fuck it up into the end of the
conservatively
day.
than
I
the rest?
just like, I know I'm being a little
I think,
aggressive here,
Microsoft is
but
a
I
very, very
promise you, if
beautiful
you trade
organization.
MOC and you're at
Just
5
about
grand,
12
you'll
months
blow
ago,
that
they came
account and
out
you're
and
only
said
1,000
that
away.
their fiscal
So what
26
I recommend
capex
right now is
growth
get your
rate is
dick
going to
beater
be
off,
less
get
than
your
the year
dick
before.
beater off the mouse,
They came out in the
go
last
rub one
earnings call
out
and
or
said, you know
something,
what, that's not the case.
and
I have
then
to spend more
do
because
some
the
studying
backlog
over
that
the
I'm
weekend,
getting
come
is
back
too
Monday
big.
with
At this
micros,
point,
trade
Microsoft,
micros.
their
No,
commitments
no,
on the
no,
backlog
don't
is
do it. Don't do
292
it.
billion as of last quarter,
That one, you'll
with
blow your
almost
account.
half
Don't
of
go
that
screwing
being tied
around.
into
If you
sales
got
over
5
the next
grand,
24
yeah, get
months.
out.
So
Yeah.
when they are getting the orders, they really need to
Yeah, I
go
know.
out
I hate
and
evals too,
and
SM. I
take
really do.
care of
You're going to
those
fuck it up.
workloads. And the only way they do that is
Yeah.
put up their
Don't
server
touch it.
racks and come up with new data centers.
No, just stop.
Yeah, well, interestingly,
Are you out of the
some
trade? Are you
concern
flat
about
at 5 grand
AI
profit?
bubble that we saw over the last few weeks really
Don't let
centers
that
around
trade
the
run
amount of
anymore.
debt that some companies are acquiring to finance their AI investments, right? And you mentioned Oracle, which interestingly kind of became the face of some of these AI-related credit concerns. They're going to be reporting next
Don't
week.
20 minutes from now come back and say, man, you were right. I should have just left it alone. Don't do that. People do that all the time.
See, it's very difficult to say if the concern over debt is overblown, because what if we get into a crisis tomorrow?
You're watching me blow one right here. You're going to watch, you can just watch me blow it and save yourself the hassle. Yeah, you're done. You're done for the day. There is no more trading. There is, I'm just going to let this, yeah, don't be a Bugatti. Don't be a Bugatti. Yeah, I know, but I'm here to, like, the channel is to, like, explain to people what's about to happen so they learn quicker than I did. That's my goal, is to try and have people hang out and learn quicker than I did. You know, and be a good part of the community. Yeah, I know, but he's still doing it. He's still thinking about doing it. He's got his mouse over it. He's doing his calculations. He's like, well, if I just do it real quick, you know how it goes, man. You know the deal.
Having a really good year, though. We have to
and then he'll lose 500, right? You lose 500, and then you'll be like, fuck it, I'll go twice as many contracts. You lose 1,500, and then maybe get a little, and you'll trade again, and then you'll say, fuck it, you'll push all in and blow it up.
Right now, because the market is basically telling us that their core business is going to get disrupted with AI. We are not in that particular bucket, but there is a lot that needs to be talked about. And if you look at their stock price over the last 2 years, it's been actually very bad for them. And this is despite 3 quarters of really good results from them at this point. So they need to come out, give a good guidance for next year, and explain to people how
take profit, 7 profits for me. Oh man.
Products and not eating away business from them.
By the way, Adobe just
you can't do that. You can't do that. They're watching for that.
Yeah.
So
we were joking about that yesterday. All right, please don't trade again. What's your profit? Are you at the top of your highest level of profit?
I think that's the case.
All right.
Yeah, that's the, but air keels, man, that's the prop firm game, you know it? They don't know who's out there doing that stuff on purpose and who's making mistakes. That's like the oldest prop firm scam ever, is running both directions.
I'm never ready for
Hey, Callista Grammar. Callista.
Come every year.
I'm sorry. Yeah, I know, man. I'm sorry. But that's like rule number one in prop firm trading. Hey, what's your balance right now, Callista? Hey, screenshot your balance, man.
Broader market higher as well. But guess what? We have got Bitcoin back below $90,000, off about 3% at the moment. And, you know, there's other news today besides the Netflix Warner Brothers Discovery deal. SpaceX
I couldn't
news.
close since it was losing on that trade. Yeah, that's the one thing you don't do. All right. Well, we got some work to do. That's all right. Where are you at now? What's your profit?
And separately, the company is thinking
What's your profit? Now I'm gonna get out of this thing now.
At the end of next
All right, so
year.
we're coming on to 335. We're trying to get back to the View app again on mine.
Wow. I mean,
Are you still at the 5K?
Clearly big plans. By the way, Tesla is not really reacting to much of
Discord?
this today. We were
Okay,
checking
cool.
Tesla's stock out earlier.
The general
and,
chat?
It's like it's barely budging. So, you know, go figure. All right, everybody, we've got lots more to
Wins
come
and
as we
losses.
count down to the close here on this Friday afternoon. You are listening to Bloomberg Business Week Daily.
I don't see it. Oh, DM? Did you do it to me? I don't see that either. Are you sure it was me? There's people that are copying me, man. There's people out there trying to pretend to be me. I don't have it. I don't see it. Who are you in Discord? There's people out there scamming, trying to scam people. It's just a standard View app. Yeah, that's not me. I don't DM anyone. I don't DM anyone. Yep, somebody's watching the stream. They've been doing that shit. I don't DM anyone. That's not me, dude. This is some bullshit. Hey, SM, how do I stop that from happening? What is there anything I can do? Can you report that guy? I don't DM anyone. Are you Prolacus? The best way to do it, man, is to just use the Discord. Everybody puts stuff in there. Sent it through general chat. Okay. There it is. Yeah, perfect. All right, how much you got on there? 50? Okay. That is awesome, dude. 5,086. So if you go over to the right, look at what your highest balance was. You got to go over to the right and see what your liquidation balance is. That what you go below will lose the account. You got to check your liquidation balance. Callus. That's cool. Good job, man. I'm not even watching the chart. Hey, can you report that guy? I don't know if you can or not. I don't know how it works. I'm new. I'm fairly new to. That really kind of pisses me off. Okay. That's what I'm. Do you see what I'm saying? Yeah. So you need to go really small trade sizes from here on out and just inch your way into the 6,000 and not take any risk. I was low-key taking high risks to all the trades I did. Yeah, well, do low-key, low risk for here on out. Ah, shit, this isn't gonna work out. I'm just glad the chair went good. Yeah. All right, 20 minutes till the close. Yeah, I know, man. That's what I'm here. We're here to try we're here to make it easier for people. You know what I'm saying, man? Because it's painful to learn that shit on your own and not know any better. Because you'll keep doing it over and over and over until you're like, fuck, and you go back and realize what you were doing. And then you make the next mistake over and over and over, and you're like, fuck. And then you made all the mistakes.
S&Ps are higher by 0.2%, and Nasdaq
And
is
also
higher by 0.2%. The U.S. 10-year yield is at 4.14. Gold is little.
Yeah, I did too. I lost. Me too, man. I got a lot of money in this, dude. I'm pot committed. That's why when this program is done, you're gonna see. You know, when everything's tested out, and I'll actually let somebody else use it. Things are gonna be a little different here. You know, we're gonna turn on the switch and we're gonna make some fucking money. I'm almost there. This whole long thing was an experiment and building something.
Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah.
Yeah, sure, why not?
Well, I'm gonna let a bunch of you guys use it for a month or two until we find make sure there's no bugs, and then, I mean, man, I can't let everyone use it for free. I got so much in developing it. You know what I'm saying? Yeah, well, that's... no, you can't. Don't do it. Yeah, don't do that. All right, I'm out.
And it is indeed time
those
for
are
the drive
burnt.
to the close.
All right.
I'm Alexis Christophers, along with
I'm
Christina
done for the day,
Kino on
guys.
Bloomberg Business Week Daily. We are in for Carol and Tim, who are already off.
I'm not gonna burn it. Another one.
Well.
I'm so jealous.
We'll be there soon enough. All right, Alexis Brown Roberts is Chief Operating Officer and Portfolio Manager at Alexis.
Yeah, but
Investment
I'm not
Partners,
really...
and she joins us remotely. Alexis, first off,
I'm not doing the same thing you're doing.
I approve of the name of your company.
Thank you. You can thank my dad for that.
Because you can go back 2K also. All right, I got to quit doing that stuff in front of new people.
I was telling Christine she has Alexi on the show today.
Yeah, double Alexis. I mean, what could be better?
Yeah, don't.
Well,
Yeah, that was a bad example. I'm sorry. I should have just took my easy grand up front and then not done that. I should have just closed it down manually after it blew out the stops.
You believe 7,000 is a reasonable target in the months ahead. So
no, I know, man. It's like, I don't want people to get bad habits like that and think that it works. If you do shit like that over 100 times, you'll never be successful. You know what I'm saying? I've already done all the back testing and paid for all the evals for you. That's why I'm, yeah. Yeah, your daily drawdown is, yeah, you're basically done with the account. That's why you don't do shit like that. What I was doing was, like, I just was letting one roll because I had them. You know? Yeah, you got to understand the daily. Go to Lilu and watch the video on daily drawdown, the intraday daily drawdown, and how that works. Because if you're up $5 grand and you go back $3 grand, you just lost the account. Even if you're still profitable for the day, you got to understand what that is. You kind of got lucky today, to be honest.
Very much mired in all these concerns. Is there an AI bubble? And we saw tech stocks pull back quite a bit during that time. But then, interestingly, a lot of these sectors that have maybe been lagging for most of the year started kind of catching up a little bit to tech. I'm talking about financials primarily, but also industrials. What's your thought now in terms of the breadth of the markets? Do you feel that it's healthier here? Is that something that gives the S&P 500 a more solid base for a year-end rally?
Yeah, we certainly were looking for a little bit of a broadening out in leadership heading off of those April lows, we took advantage of that time to not only buy in, including buying into tech in April when we pulled back, as well as once we recovered heading before November to take a step back, particularly within our tech position and broaden out. So we are a fan of momentum, for example, broadening out even into some foreign exposure with
Followed all those
the
trades with
more
you.
momentum ETFs, even a little bit of emerging markets ETFs.
Oh, you did?
And I think that
Shit, dude,
for a
I'm
lot
sorry.
of investors at this point in time, with there not being a lot of surprises expected on the horizon for the next month or so, this may
Were
be
you
a
on
really
an
good time to take a look at your allocation.
Oh, okay, don't
If
do
you
that to
are
me, dude.
super
Don't
heavily
do it
weighted
because
in
I was
tech,
trying, I
it
was
can be
telling you
time
I
to
was on
broaden out
evals the
and
whole time.
diversify. If you're not super happy with how diversified your
Okay.
portfolio is,
All right, I got to
right
quit
now.
doing that shit
At the end
because
of
I
it, it'll
think
be
people
really
don't know
interesting
sometimes what
next
I'm
year,
doing.
hopefully, or eventually, to see
All
what
right,
maybe the
I'm
Fed
done with that. I'm not
transition
going to do that anymore. I'm
looks
just going to
supporting
cut it.
AI in markets being AI spend
Yeah, I think it's
versus
port
actually
short. I
seeing the
do.
productivity gains
I gave it a
that
chance for the
economists
last 2 hours to go long and it never did.
I want to talk gold with you, Alexis.
But this is where the
because I
bulls will
know
rip your
that
face
you,
off because you're like, well, it's got to
particularly
go
like
short
gold.
now.
It's had quite the year.
Hey, Craven, you didn't really,
It's not
you
doing
didn't
much,
really
but it
lose
is
3
hanging
grand
out around,
hanging in that long, did you?
$4,200 an ounce.
The initial long,
42,000. Boy, that
you
would
should
be a
have
story,
cut
wouldn't it?
as soon as you were
$4,200 an
profitable.
ounce. What do you think about gold in the new year, and what might prompt you to sell, if anything, in
Yeah.
2026?
Yeah, gold has been a great part of
Yeah,
our
all right. I'm not
portfolio
gonna,
so far.
yeah, I got to
What
quit
we
doing
really
that
used it
live.
as is both as an inflation hedge as well as a policy
Yeah, I'm
hedge.
done with that
There's
shit.
still
I'm
a
about done
lot
with these
moving parts
evals
with central
anyway.
banks
So
and
I'm kind of
geopolitical risks
waiting. I'm
around
kind
the
of in
world.
limbo
And
till
so I
all
do
my
think it
stuff's
still
done.
earns a role in portfolios, especially with bonds just
No, you
probably
don't.
not being somewhere that we're really looking to be other than very short term because yields just aren't that great. So we really see those as a better opportunistic diversification.
Yeah, I just don't want
hedging
people like
against pure
if it's
equity
not,
risk.
if it's just
That
if
being
it's an
said,
eval over
dividend
leveraged
seen as
trade, I want
has
people to know it's an
played
eval
out
over
so well,
lower
has
over
grown
leveraged
just
trade.
naturally with that performance. And so we have gone ahead and trimmed it on some of the really big
Soon we
moves
can
up.
start a
But
Discord
I still
too.
think
We
that
got
there's a
Discord.
good role
You're
to
not in the
play
Discord,
for gold in
Airkeels?
portfolios. It's
Oh
still one of
shit,
our
look at
leveraged
this. Full port
positions.
shorts
And
getting
we're
it.
looking to hold on to that, although we are not perma gold
3 minutes
holders.
till
It's
MOC,
not
guys.
a great long-term forever hold, but
3 minutes
it
till
goes
MOC.
through windows of time
I
where
could have cut
performance
that
really
trade at
well
a
and currently
$3,000
does
winner
support
at
that.
one
So
point too.
fight that.
Yeah, well, Alexis,
Live.
interestingly,
Oh
you
yeah,
mentioned
yeah.
earlier
That's.
that the last time you
I
were
kind of don't
reaching
want to
these
get
levels,
into that
6,700,
until I don't have real
was
work
in
anymore. You
March.
know what I'm saying?
And, just looking back over the year and some of your kind of positions.
You mean like during the
here,
trading day where you guys can hang
during the
out
April
and
sell-off,
everything's
you
over
were
the air?
aggressively, buying
Yeah, I kind of
assets
want to
and
do
then
that,
trimming some of those positions
but I don't
in
want to get into it
September.
until
How would you characterize your position?
I can put all my focus on this.
At this stage, heading into 2026.
Yeah,
maybe leaning
I think I
more
got it
overrated
almost figured out
at
how to
this
do
stage?
it. So I definitely want to do it. I
We're
just
pretty much neutral at this
I
point.
got too many
For
things
our
going on
target
now as it is.
portfolio, as I mentioned, we do run a tactical fund. That benchmark 70-30, and we are pretty much exactly at that 70% equity exposure at this moment. We were a little bit underweight heading into November, and then with the sell-off that we experienced in November, we took that opportunity to buy into equities again and to get back to that neutral positioning. So we are neutral heading into 2026.
Did you really port that? Did you go full port or did you just put a few on?
Against it, but also recognizing that we have come a very long way since April. Valuations are very strong, and so heading into next year, with it being a midterm election year, second year of an election cycle, we're going to have a new Fed person in May, and they tend to get tested when they first
Stop
get in.
hit.
We may have some volatility. Looking out, we're definitely
716.
eyeing that 7,000 number, and then from there potentially a 7,400.
I think you'll get.
Not sure if that's where we're going.
Okay, yeah.
Ending the year, but potentially somewhere mid-year. We will see. I'm sure there will be plenty of volatility.
Yep.
And just like this year, plenty of
Okay,
drama.
cool.
But we're
Yeah,
remaining
1 minute till
flexible.
MOC, guys. Who know,
Uniquely
this may rip
allocated,
back to the
this gives us
VWAP on
some
MOC.
firepower
Be
to buy
careful
in,
if you're
or
screwing
some
around.
flexibility to take some things off the table and continue diversifying.
And you know, Alexis, before we let you go, I've got a little trivia for folks who probably don't know this about you. You graduated from Lehigh University, and you were on the Division I women's golf team while you were there. That's pretty impressive. Do you still get out on the links?
I do not as much as I wish I
But you
did.
see, the
I
problem with
definitely
holding like that and not
being
taking
at
your
this full
profit
time, I
down is
don't
I
have
could
as
have been
much
in
time to do
profit
that,
for
but it is
$3,000 and then
a
I could have
beautiful
took the
sport.
short.
And
Instead, I
it's
just
something that you
popped
get to
the
do your
account,
whole
you know,
life. So
popped the
I'm
evals.
very fortunate and very grateful that I got to have that opportunity.
That's awesome. Alexis Brown-Roberts,
I'll
Chief
be here on the
Operating
links.
Officer, Portfolio Manager
Well,
at
yeah.
Alexis Investment Partners.
Yeah.
Thanks so much for being with us today. Enjoy your weekend.
You know what I'm
And
saying? That
folks,
you see what I mean, SM? Is if I would have just cut the trade, I could have been in on the short.
Business Week Daily.
Short of that 7,000.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
Alexis Christoforous back with Christina Aquino on Bloomberg Business Week Daily. Everybody, just moments away from the closing bell as we wrap up a really busy week on Wall Street. Lots of deal making as well. We've got this huge deal possibly happening now between Netflix and Warner Brothers Discovery. Lots of hurdles it needs to still jump, though, right, Christine?
Yeah, absolutely. I mean, it really seems like, you know, in a lot of ways, it's a culmination of a deal that we've all been watching and waiting for. But at the same time, it really is just the beginning of the story, because as we spoke with our guests earlier, you know, other bidders can
look at the Shrek.
Last minute and maybe offer hostile takeover. A lot
Elite Trader Funding has 90% off deal on static and one-step evals. ESP with trailing, that thing's still going down. See that candle? Elite Trader. Are you with Elite Trader? I've never heard of them. Have you used them? Your air keels?
Divorcing in droves, and it is fueling wealth.
There's the Shrekker.
Yeah.
Why couldn't I get that earlier when I had my evals on?
So there's a cottage industry now growing up around these certified divorce financial analysts. And I guess that's because as you get older, you've built a life with somebody. Now you have like stuff.
You
right?
rented
you have a lot
them
of tax
before?
forms. You have retirement accounts and house
cock
deeds
is
and
up.
what have you. So there's more stuff to
Green
think
cock.
about and to divide.
Yeah, absolutely. I mean, it takes a lot probably to consciously
That
uncouple,
takes your
as,
eval.
Gordon
Can't,
Paul
yeah.
attempted to do many
Yeah.
years ago.
That's the one that blows your eval. when you're heavy on contracts, that is.
Hand-holding some of these people getting divorced later in life and basically getting them through each of the steps, including giving them homework and then getting them to list all of their expenses, like every dollar and cent, so that they can account for it in the divorce. I mean, that's a
You
big
have?
undertaking.
Okay.
It is, and that's why there has been
They
a
pay out
40%
okay, or did you get to the
increase in
payout?
certified divorce financial analysts over the past decade. Still, though, the number is relatively low when you think about it. Nationwide, there are about 3,500 certified analysts who do this in the country, according to our Bloomberg reporting. But it's like you said, still a big opportunity
Okay,
there
good.
for them.
Yeah, I mean, imagine putting that as your job title on LinkedIn, divorce financial analyst.
I bet you the phone calls are going to start rolling in. People are going to want to start direct messaging
Brox was
you,
to the
especially for
payout with
folks looking for a
Lilu,
job
and I
who
think
might
he was
have
trying to claim
some
too
kind of
much
background. Pivot to helping out the
or
older
whatever. I was
divorcees,
hoping
I
he'd
say.
come back because I didn't know how he
Coming up
got
in the
it
next
figured
hour,
out.
We're going to, of course, continue to break down this Netflix deal. Also, news out of
Once you're
SpaceX
funded by a
late in the
prop
day
firm,
that
do you?
is
Yeah,
possibly
you
going to
do.
go public.
So you still
The
have the
entire
trailing
company will go
draw.
public, possibly
You
in
still have the
IPO next
trailing
year.
drawdown
I mean,
until
very
you get
interesting
past
that
your
we
buffer
do
balance.
that, just because,
So
you know,
on the
I
100K, I think
we've
it's
heard
$6
about,
grand.
Elon Musk's
So once you
trials
get
over
to
at
$6
Tesla,
grand
and
on the
that's seen a lot of
PA,
upheaval, but,
on the paid
he's
account,
staying on there, and then
or,
now the question is he also going to be taking on the
then
load
the
of
daily
managing
drawdown goes away,
a
and you got
public
the full
company
$6 grand.
if he
And
does
if
go
you get
forward?
$8 grand, it's whatever
SpaceX
you
right
have
now.
is what you
Two
can
companies,
use.
two
But you
public
got to
companies
get
married,
past
a
the
lot of
buffer. They want you to get
shareholders
past the buffer
Yes, and
before
Tesla's
they
not doing
take
a
it
lot of
down.
anything today. I thought maybe it would be
because they just want you to. They just want to know that you can do it without just holding the trade for 5 hours
looking forward to in the next
and
hour.
getting lucky. You
Talk
know.
about the wine industry. You know, alcohol consumption is actually
Yeah.
really down in this country right now.
Yeah, it's very interesting, actually. I mean, having lived in London, I can tell you the drinking culture.
But you really need to
very much
understand that
intact, but,
daily drawdown
maybe
and
a
see
few
where you're
years ago,
at. You
I
need
was
to manage
surprised
it.
by how much more
It's very, 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 very
the
important.
Americans are when it comes to their drink, especially after work drinks or holiday drinks. You know, yeah,
Especially younger
You know that
people as well.
the daily
So we're gonna be
drawdown is
talking
really
with
what
the
should keep you
CEO
from adding
of,
to a
Duck One.
loser.
And I believe, if I'm correct, our producer Ari told us they are bringing some wine for you and I to taste.
This is why I came to work today.
You know, because you don't want to fall into a trap with the time game where I got to make a certain amount in this amount of time or whatever. You know, you don't want to do that.
As we move closer, stocks are off their best levels of the day, but still hanging on to some gains. The Dow is up 52, Nasdaq's up 53. Russell 2000 hasn't really been participating today, but still up about 13% year to date. The S&P 500 is up now just about 6 points. We've also got gold higher as well. Stay with us. The closing bell coming up here in just a short while on Bloomberg Business Week Daily with Alexis Christoforous and Christina Kino.
Markets, headlines, and breaking news 24
Okay,
hours
so
a day.
2 minutes to the close.
Bloomberg.com,
I
Bloomberg
guess the
Television,
VWAP is going to be the barrier. We were never
This
going long
is a
today.
Bloomberg Business Flash.
It's 3:58 on Wall Street. We do check markets all day long here at Bloomberg.
The thing is I was set up where if I would have got the Shrek, I would have got most of that eval.
Up a turbulent week. Stocks higher heading into the close now. The Dow, the S&P,
Just didn't pan
NASDAQ,
out.
all in the green. But to be sure, we do have stocks pairing gains after a dated reading this morning of the Fed's preferred inflation gauge. Treasuries on track for their worst week since June. S&P 500 index right now higher by 10, up by about 0.1%. 68.67 where we stand. We've got the
This
Dow
is like the line in the
Industrials up
sand here,
79,
isn't it?
up by about 0.2%. The Nasdaq Composite Index up 60. 63 up 3
You will go here and you will
Next,
go
7
no
index
further.
Up 0.3%, but on an up day for much of the market. The Russell 2000 index of small cap shares is declining by 0.4%. Your 10-year right now 4.13%.
All right, 1 minute to the close.
0.56%. Kate Moore is Chief Investment Officer for Wealth at Citigroup Global Markets, and on Bloomberg Surveillance this morning, she told us she is looking ahead to next week's Fed meeting.
We don't think the Fed should be cutting rates at every meeting from now until next June. I know some people are hoping for that and some pricing that in, and we think small companies desperately need that in order to really sustain a rally and to have better earnings and fundamentals. So we prefer to take our risk in the large caps space. We've done quite well there.
Kate Moore, Chief Investment Officer for Wealth at Citigroup Global Markets, interviewed this morning on Bloomberg Surveillance. Netflix buying Warner Brothers Discovery in a historic combination, joining the world's dominant paid streaming service with one of Hollywood's
Okay, there's the bell,
oldest
guys.
and most
There's the
revered
bell.
studios. There you have it. Sound of the closing bell at the New York Stock Exchange with the folks from Wells Fargo Wealth and Investment Management ringing that closing bell. Now, on the heels of that major transaction today, perhaps one of the biggest deals of the year, Netflix down 2.9%, Warner Brothers Discovery ending the day with a 6.3% gain. Some of the other key players are all
Hey, Uranium.
affected by this.
You're welcome, my friend.
Paramount Skydance down 9%.
You're welcome, my friend. I'm glad you're here.
Comcast up by 0.4%.
Blew some evals.
Briefly after earnings,
Gained some
Victoria's
character
Secret
over the week.
18%. HPE, Hewlett Packard Enterprise after earnings up 1.9%. And
Yeah.
Ulta Beauty, it reported last night, up by 12.6%.
That's right.
So there you
That's
have
why
it.
we're doing the
On weekend,
evals,
the
because
Dow,
we
the
can,
S&P,
you know, you
Nasdaq,
can come
wrapping
back.
up of the week
You
today.
can come back.
The S&P at 6870.
If we weren't doing evals, none of us would be here, I don't think.
On the week, S&P up 0.2. For
All right, Calesta.
24 hours a day, subscribe to Bloomberg
You have a good
News now,
weekend.
wherever
Yeah, guys, I'm going to
you
sign
podcast.
off for the week.
Charlie Pelleton, that is the Bloomberg
Everybody
Business
take care. I
Flash.
appreciate you hanging out. We're going to go back to the grind next week. Yeah, I'm not gonna over leverage on those evals anymore. I don't want people seeing that. So I won't do that anymore. I'll just take the normal trade and then take it off the way you should. I won't do that anymore. Some people may not know the difference if they haven't been here long enough. So, all right. So that'll be my commitment for next week. And
hello, everybody. Alexis Christoforous here with
we'll start it up again.
Business Week Daily.
Yeah, be careful, man. Just undersize and just be methodical. 1,000 is not a lot to get. You got 30 days to get it. You don't have to get it in a day. You got all week to make $1,000. You know, you make 150, 200 a day. Call it a day and work a different one. You know what I mean? But anyway, we'll be fired back up 6 o'clock at night Sunday when the markets go live. And Godspeed everyone, and have a good weekend. Weatherman out.
Up 104 points, closing at 47,954. As you mentioned, the S&P 500 did come within a whisper of that all-time high, finishing at 6870, so just shy. The NASDAQ Composite up about 73 at 23,578. Let's talk more about these markets with Eric Weiner, Bloomberg Senior Editor, Equities America, joining us here in our Interactive Brokers studio. First of all, happy Friday to you.
Happy Friday to you as well.
What do you make of the market action this week ahead of course, next week with the Fed catalyst?
So this week was kind of muted, all things considered. And as you point out, the Fed, that often happens right before a decision. What was interesting is looking at it from a sector level. The sectors that would be considered growth did actually really well. You had, energy did well because winter is coming, but you had tech do well, you had telecom doing well, you had discretionary doing well, and the sectors that didn't do well were the defensive sectors, utilities where people go for dividends. You also had healthcare falling. So people were buying into risk. They were playing into the AI trade. Salesforce did really well, so earnings still matter.
Right.
But you're waiting on this sort of all systems go from the Fed. So if you look at the setup, we're kind of ready for, as Christine said, the Santa Claus rally to come. But there's a big caveat out there.
Yeah, well, I mean, it seems like, we've had pricing for a December Fed rate cut for a while now. It's pretty much a done deal as far as markets are concerned. What do you think we could get from the Fed that could derail this? Because, it seems like we have healthy breath. We have a good kind of base of stock movers that could take the index there if we wanted. But is there something from the Fed that maybe markets haven't priced yet?
Oh, absolutely. I mean, when you look at the action in the market relative to the Fed, the expectations for a rate cut came way down. At a certain point a few weeks ago, when we were selling off, we were at like 30%, 40% on expectations. So now we're at like 90. So that's where things start rising. And a lot of that is priced in. So probably a bit of a sell the news event coming off of the Fed, when they announce it. What people will be listening to is and we'll be looking for is the cohesiveness of the group. So, last time when you heard a lot of Fed officials saying, we should kind of dial things back, that's when people get nervous. Last time you had Powell coming out and talking about how everybody was expecting the Fed to cut this time, and Powell kind of threw some cold water on it. That scares everybody. So it's those kinds of things where people are sort of reading into what the officials are saying. They're going to start looking at where they are on the dot plots, where people are on expectations. And, if there is broad agreement that there are going to be more rate cuts, then the stock market will take off. If there's disagreement on where things are going to go, we're back in that kind of holding pattern.
Today we got some more backward-looking data with the PCE, the Fed's preferred inflation gauge, rising 0.2% in September. I guess that was in line with estimates. Does this do anything at all for the Fed at this point, especially given the fact that it's a September number?
Yeah, that was what I was going to say. It's because we're still playing catch up. It's hard to know. It's also hard to know what they see. However, inflation is still rising, and that's really the point. So as things keep climbing and prices keep climbing, that is one side of the equation. The other thing, though, is that we are seeing kind of job softening. You're seeing some signs of economic weakness, and that is going to be the pressure for them to cut, because you kind of need to stimulate things, and you need to, it's not even just that 125 basis point cut does a massive amount. It's just the symbol, the signal that it sends to the market, which is that, we're here, we're going to be reactive, we're going to be responding to all this. And that's where traders get enthusiastic.
Now, Eric, looking forward to 2026, usually when we see a December rally, that's usually followed by a pullback in January. And so now we're there, right? Even though it's a small rally, but it's still a rally nonetheless for December. Do you get the sense that maybe investors are starting to get ready for that January pullback at this point?
Oh, I don't, actually quite the opposite. I mean, it's been strange, but we've been talking to a lot of traders who are all bulled up. We've been talking to a lot of professional investors, hedge fund managers, and portfolio managers who really want to own stocks. The question is valuations. The question is where have, the AI stocks gotten ahead of themselves? But there's a broad belief, and we're going to be writing a story about this weekend, across the globe. It's not just here, it's in Europe, it's in Asia, that there's this enthusiasm for equities. I'm kind of surprised, but that is what we're hearing.
So, yeah, I mean, I'm glad you mentioned Europe, because this really has been an international, but also a global rally. I mean, we've even seen emerging markets do quite well. Do you see that? I guess the question is there any reason why it wouldn't continue next year?
Well, probably if the bull case plays out, you're probably not going to see European stocks and overseas stocks outperforming the U.S., which we saw for a lot of this year, which is weird, particularly when things are moving up. But you could see a global lift. I mean, the idea that foreign stocks are priced cheaply is true. So if there is going to be growth overseas, if they are playing into the technology game here. If tariffs are not weighing on costs overseas the way that people feared, then there could be room, or there appears to be room for people to step in and find some value.
Yeah, and well, maybe we can finally get the year of value that a lot of investors in Europe have been hoping for the past decade.
You know, Europe did well this year. You know, and that's always kind of a shock when they do as well or better than the U.S. And there is some enthusiasm for what's going on there. It's not even necessarily a value play as much as it's like there's real growth in certain sectors there that people want to be in on.
Yeah. Well, I mean, you know, look, we're heading into 2026, right? Probably investors are kind of thinking, what happened to the Sell America trade, right?
Yeah.
Because that was something that we were talking about, in April. What do you think? Where do investors stand now in terms of concerns over that? Are those mostly gone at this point?
Well, temporarily. I don't necessarily know. We're still playing catch up with data, and we don't know. There has been a sentiment change in the way that people are viewing the economy. I mean, obviously we got some good news on the economy today, but if you look at the University of Michigan number, it still is troublingly low. So you have a lot of people in the US who are very concerned about things. If we get a broad pullback in spending, so much of our economy and so much of the market is based upon people buying stuff. And if people just stop buying stuff or even slow down, say we're going to cut 25% off of our spending, the average family goes, you know, we're not going to do this trip, or we're not going to buy steak this time, we're going to buy chicken, or whatever it is. Those little decisions, each one of them, when you count it over 1,000 times, 100,000 times, whatever, it really adds up. And that's where we don't know. We do not know where the American consumer is. And that, to me, is kind of the big fear out there, which is if people pull back, and, you know, right now we're being lifted very heavily by wealthy people spending. If we pull back, it could get dicey.
Yeah, and we're hearing it time and time again from a bunch of different companies in different industries. Well, this week, Kroger, Dollar General, all talking about people becoming choosier. Kroger's going to bring back the paper coupon. That's that's where they're at this point. But each of them, I think the trend is from Walmart on down is that the higher income shopper is now coming in and making more trips to their store and buying more.
And more to McDonald's does well. And then McDonald's starts adding cheaper meals. It's when you start seeing that and you start seeing like people going, McDonald's is too expensive. Mm-hmm. That's when you begin to think, well, what is that going to mean for dining in general? What is that going to mean for what people are spending? And beef prices are very high. So there are a lot of balls in the air right now when it comes to that. And we just don't know because we haven't seen the numbers.
You know, I'm hoping that you will stick right where you are. For us, Eric, because sure. I want to just broaden this conversation to talk about what we've been talking about all day, Christine, which is this Netflix Warner Brothers deal, $72 billion. If you add the debt, it's more than $82 billion. And I want to break down sort of the debt side of this with Bloomberg Intelligence Senior Credit Analyst Stephen Flynn joining us from the lovely state of New Jersey. Stephen, thanks so much for being with us on a Friday afternoon. You had a write-up on the Terminal regarding this deal. Actually, you wrote it yesterday, but it applies today. Warner Brothers deal may ding, not dent, Netflix's robust debt profile. Oh, do tell us how so.
That's correct. Yeah. So first, I'd start by saying that Netflix does have a very strong credit profile, so plenty of capacity to do a large deal like this. The company has very modest leverage. Net leverage is less than half a turn. The company has a very large equity market capitalization to provide support, $425 billion market cap, which is huge. The company's EBITDA is growing. The company produces significant free cash flow and has single A credit ratings from both Moody's and S&P. So Netflix is a very strong credit. Now, this deal, you know, you're right, they're paying almost $83 billion total enterprise value for Warner Brothers Studios and streaming operations. $72 billion of that is value for the equity, and they're incurring about or bringing along about almost $11 billion in net debt. And that $72 billion valuation for the equity includes $60 billion of cash. So the company will have to do a lot of financing, and it will increase net leverage. But the company can, I think, very quickly reduce leverage given its growing EBITDA and its strong free cash flow.
Yeah, very interesting, Stephen. I do want to ask you about that process post-acquisition. What do you think are the steps that Netflix will have to take if they want to reduce that leverage after they complete this deal and be able to do it quickly so it doesn't dent their credit profile?
Yeah, so the very positive thing is that the company said on the call that, they say they have a very strong credit profile, obviously, but that they will focus on debt reduction post-deal, and they expect within 2 years to be back at a credit profile that's consistent with the rating. So as bond investors, that's very positive. And the company, like I said, has a very strong credit profile. So how do you reduce leverage going forward? Well, two ways. Number one, they have growing EBITDA, right? So as EBITDA grows, that decreases your leverage ratio. They produce a significant amount of free cash flow. Take that free cash flow, use it to repay debt, and that also decreases your leverage ratio. And so they can, again, pro forma for this deal, leverage is going to jump up. Leverage is probably going to be about 3.8 times, I'd say, for 2026 pro forma. If you give them credit for their synergies, they're looking for $2 to $3 billion of annual cost savings. So let's give them $2.5 billion. That would reduce the pro forma leverage ratio to about 3.4 times. We look forward one more year in 2027 with increasing EBITDA, free cash flow. You're talking about leverage pro forma for synergies probably in the 2.6 times area. So the company would be quickly deleveraging. Now, listen, leverage is a lot higher than where they are right now. Leverage for them is very low. But if we think about their peers, so if we think about other single A rated companies in the media universe, you're looking at companies like Disney and Comcast. Comcast has a 2.3 times net leverage target, and that's about where the ratio is. Disney has a leverage ratio of about 2 times. So Netflix is starting at a point that's much more conservative than their large cap media peers. So they have plenty of flexibility to add debt, increase their leverage, and then the ability to reduce that leverage, improve their credit profile going forward.
I'm wondering, how concerned are you about execution risk? This isn't something, I mean, obviously they've changed their strategy several times. This isn't something that they've normally done, where they've said they're not going to buy a studio. They don't do massive acquisitions like this. So are you concerned at all about, you're talking about 2 years out, about where the company's going to be in 2 years and their ability to take this on and do this well so that they can pay down that debt?
Well, you're right. This is somewhat of a surprise. It's funny. So clients have often, around the past couple weeks, asking, which way do you think this would go, given the 3 bidders? And I said I thought Netflix had the lowest probability, right? Because they clearly had the capacity to do it, but did they really have the need and the willingness to do it? And I think that's where people thought it wasn't going to happen. But that's clearly wrong. The company does have the willingness to do it, and they're doing it. And so as far as their ability to execute, they haven't done a deal of this size, but the company is a very well-run company. Again, they have a very strong profile, that growing revenue, growing EBITDA, gaining subscribers. So it's pretty hard to doubt their ability to keep that going and to bring in Warner Brothers. Now, it is, today on the conference call, they didn't really give too much details about how they're going to approach the 2 different streaming services that they're going to have, with the HBO Max and the Netflix service, and how they're going to package that all together. So I think that's something that we need to see more details on.
Stephen Flynn, Senior Credit Analyst at Bloomberg Intelligence. Eric Weiner, Senior Editor, Equities America at Bloomberg. Thanks so much, guys, for giving us your perspective today. And you're listening to Bloomberg Business Week Daily on Bloomberg.
Regulators. We regulate any stealing of his property. We're damn good, too. But you can't be any geek off the street. You gotta be handy with the steel, if you know what I mean. Earn your keep.
Regulators! Mount up!
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up Friday, winning week as well. On the week, as we check those numbers, S&P 500 index was up on the week by 0.3%. This Friday, the Dow, the S&P, NASDAQ all advanced in the green, with the S&P up by just about 0.2%, higher by 13. Wrapping up the week, heading into the weekend, 68.70. Earlier in the session have been flirting with records. 68.90, the all-time high on that index. The Dow today up 104, up 0.2%. NASDAQ Composite Index up 73, wrapping up the week 23,578, up today by just about 0.3%. On an update from much of the market, the Russell 2000 index of small cap shares retreated, down 0.4%. 10-year at 4.13%, with a 2-year 3.56%. Gold was down 0.3%, down $11 the ounce, 41.95 on the precious metal. And West Texas Intermediate crude oil up 0.9%, 60.19 a barrel. Bitcoin down 2.9%, 89,501. The day's top story: Netflix buying Warner Brothers Discovery in a historic combination, joining the world's dominant paid streaming service with one of Hollywood's oldest and most revered studios. It is a $72 billion deal. Netflix today down 2.9%. Warner Brothers Discovery up 6.3%. Other parties, Paramount Skydance down 9.8%. Comcast up by 0.4%. So again, recapping: S&P 500 index up by 0.2%. Bitcoin today down 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie. Now, to help ease us into the weekend, how about a chat about the wine business, complete with a wine tasting, might I add. Robert Hansen is the CEO of the Duckhorn Portfolio. He is here live in our Interactive Brokers studio, coming all the way in from Napa Valley. And we know this to be a luxury wine powerhouse. We're also joined, though, by our wine enthusiast, our in-house wine enthusiast, Bloomberg News equities reporter Bailey Lipschultz. Thanks, guys, both of you, for being here. Just for context, so Duckhorn Portfolio is the 20th largest wine marketer in the U.S. by volume, 2.8 million cases this year. So not a small place. And you know some of their brands: Vineyards, Golden Eye, Paradox, Migration. Oh, you're pouring wine for us now. What are we about to have here? What are we having here?
Bailey's normally an equities reporter, but he's our sommelier.
Filling in, yeah. So this is the Decoy Featherweight Cab Sauv 2023. Low cal. We were talking about it in the green room. So low cal, low alc. Kind of catering to the younger generation.
Sure. First, thanks for having me. Excited to be here on your Netflix and chill day, I guess. We're gonna taste first as we talk. We're gonna taste the Decoy Featherweight Cabernet Sauvignon. It's the recent launch, most recent innovation in our Decoy Featherweight offering, which is the largest and fastest growing lower alcohol, lower calorie offering within the wine category. The Cabernet is really unique. It's about 9% alcohol, about 80 calories per serving. That's about a third less alcohol than a typical Cabernet, and about 50% the calories. It's tough to achieve a great tasting Cabernet Sauvignon that's low alc and low cal. So give it a taste and tell us what you think.
All right,
it's got a beautiful
it smells delicious. Dead air on radio. Well, it's okay. We're drinking wine.
We're just drinking wine over here.
Let's talk some more.
We're still here. We're just drinking.
That's really smooth.
Yeah.
And you know what? I don't need to necessarily have it with food. It's just like good straight up on its own.
Yeah, it's addressing, there's a lot that's been reported about the dislocation of the wine market. We're excited about what we've achieved this year. We're excited about 2026. 2026 is the 50th anniversary of the founding of the company. Dan and Margaret Duckhorn founded the company 50 years ago on Merlot, which we're going to taste as well. At the different end of the market, the one we just tasted, about $25 a bottle. the Merlot we'll taste is one of our high-end luxury estate Merlots. But we're excited about what's happening. This wine we just tasted is leaning into one of the trends that's impacting especially younger consumers' consumption in the category. Younger consumers are looking for value. Pricing matters a lot. They're looking for, they're very conscious about consuming things that are better for them. So having a better mint introduction and innovation in the category is important. We're about to celebrate the first-year anniversary of taking the company private with with Butterfly Equity, our sponsor. They only invest in food and beverage. They understand craftsmanship. You know, if you're going to put it across your lips, it's got to taste yummy. And we've got a strategy of competing in the best neighborhood, the best street in the neighborhood, and the best house on the street.
So that was about a year ago that they came in. So, and this company has been public. It's been taken private a couple of times, a few times. What changes have happened? I mean, you actually started with the company earlier this year
in February.
So, but what changes have been made now that this private equity company has come in and just this past year?
Yeah. Well, look, for the reasons I just explained, we think Butterfly Equity is a great sponsor, a great partner for us. What I would say is one of the superpowers of the company I respected when I first got to know it is the agility, the ability to innovate at the pace of the consumer marketplace. And the market is demanding, and consumers expect you to meet them on their playing field, on their terms. That's how Butterfly thinks. What's changed? I would say the agility is the pace of the agility of the company has picked up. We've made some significant progress in a very short period of time. If I, reflect upon the analogy I just provided, neighborhood, street, house, we compete in the 15 and above price segment. The market's been dislocated a bit. We can talk about that, but that's been driven by below 15 and especially below 10. So we compete in the right neighborhood. One of the best examples of what's changed, we did a portfolio construction exercise over the past 9 months where we looked at our whole portfolio, 11 brands. We've concentrated on 7, and 4 are really high growth core brands because we're winning with fewer things and focusing on the winners that matter, big, clear lanes of competition, exceptional wines that compete against the best in the category. And so we've actually increased our addressable market by almost $2 billion, from $2 billion to $4 billion in that exercise. Wow. And then the proof's in the pudding. So best house on the street. The team, I'm really proud of them, have grown our market share from 10.4% to 11.7% during our hold period. So it's been a busy year. We've got a lot of air to travel. You'll hear duck analogies. We don't talk ground, we talk air. Sure. You'll hear duck analogies when we talk a lot, but no we have a lot of air to cover, but we're excited about what we've accomplished so far.
I just want to ask before I get ready to pour the Merlot, when you think about kind of the recovery, we have so much.
Bailey likes this part. He likes pouring.
This is the best. But when you think about kind of the state of the economy, it does seem like the upper 5-10% of the U.S. consumer is better off than really the bottom 90%. Thinking about higher price wine, better wine, as you mentioned, best house on the best block. How do you think about attacking that consumer and whether you're seeing growth from them?
Yeah, great question, Bailey. We're very conscious of it. Our intention is to remain a premium fine and luxury still wine competitor. However, and I'll give you 2 examples specifically on price. We've talked about the Betterment example, and then I want to talk to you about consumer experiences. With the focus, especially for younger consumers, on purchasing power, there's a little nervousness around the socio-political and kind of economic environment. We're conscious of that. So 2 ways we've reacted. One, we introduced an amazing new brand called Green Wing, which is a $15 to $20 a bottle winery brand with amazing Cabernet from Washington and a Pinot Noir and Pinot Grigio from Willamette Valley in Oregon. That $15 to $20 bottle of wine can translate into a $12 by the glass program if you're at a restaurant. A lot of younger consumers say they get more value out of spirits or other categories. This is providing them an entry point into the wine category, kind of not telling them what to drink, but inviting them into our portfolio and into the wine category based on value. And on the higher end of the market, we had we made a price adjustment on our Duckhorn Vineyards Napa Valley Cabernet. It was priced at $72. We took the price down to $60 because it's a larger addressable market. And frankly, even for a fine wine consumer that can buy wine at that level, recognizing we could produce the same or better quality, maintain a really we've got a structurally advantaged operating model with great margins. We could maintain our margins and put out a more sharp price point for them. We're just meeting people on their terms in this economic environment and growing as a result.
If you heard the pouring behind us and the cork popping is because we are having some Duckhorn portfolio wine, right?
If you're watching on YouTube, this is what we're about to taste is the 22 Merlot. And remind me, why is this a particularly nice Merlot?
This is an exceptional Merlot. Now I'm going to tell you I've got a personal bias. I'm a Merlot fan. Not everyone can remember, but I remember Sideways.
I was going to make the joke.
A film from 20 years ago that said you shouldn't drink Merlot. Completely wrong. Merlot, in my opinion, is the best varietal.
Loved that movie.
Love the movie. Didn't love what it did for Merlot. Merlot is the easiest drinking wine. Okay. Super great to pair with lots of different food choices. It's an easy drinking varietal. This wine is my favorite in our entire portfolio for two reasons. One, Dan and Margaret Duckhorn, who respected nature, the craft of winemaking and hospitality, introduced this wine as their first introduction 50 years ago. And we're celebrating our 50th anniversary next year and feel really good about the momentum of the company. It's an estate wine. It's a blend of 92% Merlot, 7% Cab, and 1% Cabernet Franc. It is a luxury wine, so it trades for between $120 and $150 a bottle. But it's a beautiful wine, and I encourage all of your audience to drink more Merlot.
Ryan is nodding profusely. Yes, it is.
It is a great wine, right? Cheers.
Yeah. Well, all right. For our audience who are just joining us right now, we are here in the studio talking wine and drinking wine with our guests here, Robert Hansen, CEO of the Duckhorn portfolio, as well as Bloomberg News Equities reporter Bailey Lipschultz. So, Robert, I want to touch on what you said earlier, right, about the process of kind of going public, then private, and then back again. And so, you mentioned agility was one thing that really kind of was sustained in the company throughout those changes. And, talk to us about how that's serving you now that the market is changing so rapidly. We have, on the one hand, Gen Z drinkers who just consume less alcohol overall. And it seems like that's something that is maybe permeating throughout the broader American public, right? I think a Gallup was saying that just 54% of Americans in general say they drink alcohol. That's a record low. How is the company thinking about these kind of structural changes among consumers?
Yeah, well, I mean, great question. And as I mentioned earlier, it's true, as reported, that the market's been dislocated. That being said, we compete in the segment of the market that has tailwinds, 15 and above, and we're segmented from $15 a bottle up to $300 a bottle. So in still wine, we are the best house on the street, and we're growing because we're competing from 15 to 300. We've got a segmentation of our portfolio that meets most consumers' needs. More specifically, though, a lot's been written about the betterment trend, about drinking less, but better quality. That is the focus of this portfolio. So you asked the question, what's different? We've got our eye on the horizon. We're very much focused on meeting the consumer on their playing field, on their terms. Mm-hmm. They want to buy great value. They want to buy great quality. They want lower alcohol content in some cases. They want to drink less but better quality. Our whole portfolio is about that. We encourage our consumers to drink less but better quality, drink responsibly. We're meeting the consumer on their playing field. There's kind of three trends that we've addressed: value, betterment, and then the consumer experience of consuming wine. Here's one point I'll make, though. Wine's been around for 6 millennia. It's a community-based product, and we're at the center of it.
All right, Bloomberg's Robert Hansen of Duckhorn Portfolio.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A winning week for the U.S. equity market. And up Friday, the Dow, the S&P, NASDAQ all advancing. Stocks holding on to gains as the Fed countdown begins. S&P 500 index did advance today by 0.2% on the week, up 0.3. The S&P up 13, finishing the week, heading into the weekend at 6870. Dow Industrials up 104 on the Dow, a gain of 0.2%. NASDAQ Composite Index up 73 for NASDAQ. That was an advance of 0.3%. Down day for the Russell 2000 Index of small cap shares. It was down by just about 0.4%. 10-year 4.13%. The 2-year 3.56%. Spot gold today fell 0.3%, 41.96 the ounce. And West Texas Intermediate crude up 0.9, 60.18 a barrel. Bitcoin down 3.1%, 89,280 on Bitcoin. Briefly, Southwest Airlines lowering its operating profit target for the full year. LUV on the ticker. Stock was up today by 5.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much, Charlie. And of course, the buzzy story all day, all week long. Netflix buying Warner Brothers studio and streaming business. It's a $72 billion cash and stock deal. If you include debt, it's worth nearly $83 billion. But what is the architecture of this deal, right, Christine? What's it going to look like? What does the financing look like? Well, we tapped our in-house expert, Paul Sweeney, to help break this down for us. Co-host of Bloomberg Surveillance, Bloomberg Intelligence, nestled at his home along the Jersey Shore. Sweeney, I think we all know in your former life, you help put deals like these together, right? As an investment banker, Netflix has lined up nearly $60 billion in financing through an unsecured bridge loan. So tell us, how is this going to work? And I have to imagine a lot of bankers are going to be making a lot of money.
Yeah, I think so. So to close the deal, the cash portion of the deal, they're going to have a bridge loan of $59 billion. And we spoke to Steve Flynn, who covers the credit markets for Bloomberg Intelligence earlier today. And he said this will not be a problem at all. There's a lot of buyers out there for Netflix paper. So that'll help get the deal done. And then what they'll do at some point after the deal closes, they'll try to take out that bridge loan with more longer-term permanent capital, probably through a combination of debt in the public debt markets, as well as some long-term bank financing.
So, Paul, very interesting, because we were talking earlier about how this might just be the beginning of this deal, right? Because we got Paramount potentially taking a counteroffer directly to investors. Other bidders might come in, maybe taking hostile routes. So, talk us through kind of behind the scenes, right? From your experience as a banker involved in this deal, what's it looking like in the drawing room? Are bankers relaxing at this point if they're involved, or are they still kind of guarding against some of these potential counter offers that might come through over the next 18 months? It's a long road, right?
Yeah, this is a long road. It's going to be a very tough regulatory hurdle to clear to get this transaction approved. But Netflix says it is confident that it can get it approved. I think if I'm Paramount and I'm Comcast, those are two other bidders, I will consider coming back with a bigger, better deal. But at some point, it may not be worth it here. But again, if you're Paramount, if you're Comcast, you are left with, as a substandard in size streaming services, you really can't go it alone. A lot of people are speculating that maybe Comcast will get into discussions with Paramount and maybe put those two companies together at some point, because again, this transaction, once again, is just illustrative of the need for global content scale. Disney has it, and with this deal, Netflix will have it long term. If you're Paramount, you don't have it. If you're Comcast, arguably, you don't have it. So again, I think we're going to see more consolidation, believe it or not, in the media business in 2026.
Oh, for sure. I mean, if you can't beat them, join them. It's been a theme for a long time now, and we'll probably see it well into next year. Who do you think might want CNN, TNT, TBS? I mean, I don't know. I thought we were talking earlier with one of our guests, maybe Paramount would jump at the chance to get that. They already have CBS, so I don't know what they would do with CNN.
Yeah, the plan now is for Warner Brothers Discovery to spin out its cable networks into a separately traded company. They're going to have a separate management team, separate capital structure. And if investors want to invest in that business, that will be the opportunity too. Comcast is actually doing the same type of transaction. They're going to spin out their cable network businesses into a separately traded public company. Maybe at some point, those two cable network companies get together here. So there'll be lots lots of opportunities for investors to invest in different parts of the business. But clearly, if you're Netflix, I think you're recognizing that maybe not now, but in the long term, you're going to need even more content for your broad platform. And I think that's what this deal does, because it combines the #1 streamer with one of the one of the big 3 studios that's left in the world.
All right, Paul, if you could stick with us just for a moment, we want to break and join our oh, actually, we're going to let you go back to your weekend, Paul Sweeney, over there at the Jersey Shore. Thank you so much for being with us. All right, with the FIFA World Cup draw just wrapping up at the Kennedy Center in Washington, D.C., we want to join our Bloomberg TV colleagues for a special conversation with Alex Lasry. He's CEO of the New York, New Jersey Host Committee for the FIFA World Cup, the local organizing body responsible for delivering 8 World Cup matches in the New York, New Jersey region. He's joining our colleagues from the New York Stock Exchange, so let's listen in to their conversation.
For this final, so this is going to be the biggest event that we've ever hosted, outpacing a Super Bowl, Taylor Swift concert, you name it. This is going to be the biggest event we've ever had, and we're going to show the world that if you want to have a sporting event or anything on the biggest stage, you got to do it right here in New York, New Jersey.
Well, to your point, I mean, this is the world's game. We're talking about the U.S. market, and it feels like everyone growing up in the U.S. plays soccer in some form. You think about soccer's popularity, though, in the United States. I mean, what do you think the stakes are here when it comes to raising the profile of the sport domestically?
I think our hope for this World Cup and the legacy for this World Cup is doing for football what the Dream Team did for basketball around the world, right? It inspired a generation of basketball players, and now you've had like the last 6 MVPs not being from the United States. And I think our hope for this World Cup is that it inspires a next generation of athlete, right? You're going to have a bunch of 6, 7, 8-year-olds who are going to be feeling the energy, seeing the best players from around the world competing on the biggest stage. And hopefully it inspires them to go play football and to go join the U.S. men's national team to make us the strongest team in the world. When you look at the '99 Women's World Cup, those images and that energy led to the women's national team being the most impressive and biggest powerhouse in women's soccer. So I think we're hoping for the same thing for this World Cup.
And absolutely. You talk about the formation of MLS back in '96, coming out of the '94 World Cup, and just all the attention that Americans who traditionally ignored soccer certainly gave it. It gets to the question, though, Alex, as well, as to sort of what is the international cooperation going forward? And I don't mean at the high-end World Cup level, but do you think we're going to see maybe a little bit more symbiosis between, say, the leagues here in the United States with those the big powerhouse leagues in Europe and the UK, et cetera?
I think you're already seeing a lot of symbiosis, right? You're having Premier League teams playing and European teams from all over from all over Europe playing in the United States. We just hosted the Premier League series at MetLife. We just had the Club World Cup right here in the finals and the semifinals right here in MetLife Stadium. So I think you're already starting to see kind of an expansion of football from around the world. Really partnering with us in the United States. I think, kind of the next step and next stage is for the growth of the MLS to continue, the growth of the NWSL to continue, and also maybe, you start to see some of these other leagues doing what U.S. leagues have been doing, right? When you look at the NBA and the NFL playing regular season matches overseas, I think the hope is that, we can start to do that with football, and that'll really expand the game and continue to grow the sport.
I know you're basically just in charge of what's going on here in the New York, New Jersey area, but we should point out, obviously, these games are going to be spread out in other cities as well as other countries, including Mexico and Canada. What are the discussions that you're having with your counterparts in those cities and countries with regards to what they're doing and maybe sharing some interest and advice as to what maybe you can do as well?
We're all trying to share best practices because the fan experience in one city is going to directly affect the fan experience in another. And so what we want to do, especially here in the United States, but all across North America, is we really want to put on an incredible show. And we want people from around the world who are coming here for possibly the first time, or CEOs of other companies coming here who are looking to maybe create jobs and invest. We want them to see the United States especially as the place to do that. And so the fan experience in Atlanta or Miami or Dallas is going to directly affect the fan experience that you have in New York, New Jersey. And so we're trying to make sure that we're all in communication, all talking about what we can do to make sure that everyone coming to the United States has an incredible experience, because I think that the studies that I've seen are saying that the World Cup could have an over $30 billion economic impact for the entire United States, expecting over 6 million visitors. So this is a very big deal, not just for our region, but for the entire country.
And, you know, you think about an event like this, I have to imagine a lot of it, you know, falls on the state governments, the local governments, but talk to us about the relationship with the federal government, how much, you know, buy-in and participation you need from that level of government in terms of putting on something of this scale.
You can't put on an event like this without coordination and buy-in from your state, local, and federal government. And when I look at the planning and all of the conversations that I've been involved in and all the preparations that we've made, the connectivity between federal, state, and local has been truly incredible, right? I think we're actually seeing a putting aside of politics to make sure that these games are successful. And if you look at, you know, kind of the next 10 years here in the United States, this is really the decade of sports, and the World Cup is kind of the kickoff of that, right? We've got the World Cup in 26, the LA Olympics in 28, we've got the Women's World Cup in 2031, and then the Salt Lake City Winter Olympics in 2034 or 36. So, you know, this is the decade of sports. We are the first one. And so we really have to make sure that we put on a great show to, you know, I think really set the tone for what these mega sporting events over the next 10 years are going to look like.
Absolutely. Alex, really appreciate your time on this Friday afternoon. That is Alex Lasry. He is the CEO of the FIFA World Cup 26 New York, New Jersey host committee. And I was actually...
And you've been listening to an interview with Alex Lasry. He's CEO of the New York, New Jersey host committee for the FIFA World Cup, speaking to our colleagues there at Bloomberg Television. And boy, oh boy, what a day it's been. We've got a record-setting deal or a historic deal in the media industry, some news coming out of SpaceX, and some Supreme Court decisions. So I don't know, not your regular run-of-the-mill Friday, Christine.
Absolutely not. And we have wine in the studio as well, just to add to the irregularity of this
From our
Friday.
former guest, CEO of Duckhorn Portfolio, was nice enough to bring us some wine. So we're sort of, you know, chilling into the weekend, so to speak.
Exactly. Yeah. Well, I mean, you know, chilling is very much the name of the game, because